Good morning, traders. Welcome back. Monday morning. It's time to get to some trading action. This is where we do it right here. Benzinga. Let's get to it. Live trading. We got my man Zunaid in the house. Ryan should be joining us just shortly. The SPY is pulling back a little bit. Is this an opportunity? Let's find out. It's December. Sound the alarm. Will we get a Santa Claus rally? Everyone's looking. Just have to wait and find out. Let's get it started. Live trading.
Winner, winner, chicken dinner. Those words have been dancing around my head all night. Oh, it's Vegas lore, that phrase.
All right, let's get towards the trading action. Of course, we got my man Zunaid in the back. I'll bring him on in just a second. But like always, team, start us up with a good little thumbs up. Let's get it started. Let's get a lot more people. One of the things that we're trying to do is grow this community. There was a point that we had over 1,000 of you guys. We want to build that back up. So we need you guys. If you guys appreciate us doing live trading, want us to continue it, hit the like button. That shows us that you guys want us on every single day, even on Friday. I've been battling to try to get us on Friday, but I need you guys to really show those likes and appreciation to get us there. All right, let's bring on Zunaid. What's going on? How we doing?
Good, man. Good morning to you. Good morning to everybody in the chat. Hopefully y'all had a nice little weekend break.
Of course, of course. Never long enough, but like always, we got to get back towards the trading action. Got to make that money to spend on the weekends.
Amen to that.
We'll get towards the trading action. It looks like always that we get a little bit of some kind of overnight action and then a little bit of a pullback. It's really hard to trade these kind of pullbacks, I feel, when you get these kind of rips like you got on Friday. And all of a sudden, you're right back down there today. So it's difficult for sure. Let's get towards the action. Zunaid, what you got for us today?
Yeah, just kind of keeping an eye on the SPY, or excuse me, the futures on the E-mini on the micro side of things. You can see it bounced from the 150 area around 8:15 a.m. in the morning. Now you got a little bit of action to the upside, and now it's kind of coming to the downside here. So we'll see how it reacts around this 40-50 test. I feel like another level of resistance can be this 40-55. So just something to keep an eye on the ES. If we go ahead and take a look at that trend line and everyone and their grandma has been talking about on FinTwit and everywhere else you can see, you've got that coming down here. So it's kind of, so far rejecting that trend line, right? Hasn't quite broken it whatsoever. That 4,100 was pure rejection. And now we're 50 points below. So let's see if we continue to the downside or what. That's the move to kind of keep an eye on. But let's go ahead and check out the SPY. Obviously, it's going to be somewhat of a similar story. Let's go to remove our drawings, come back to the daily, and kind of the same thing, right? So if we go ahead and draw that trend line here, and there's that beautiful rejection. We got a chance to play this one together on live trading, but for now, we'll see how it behaves around this area. If you're looking to go short, you can maybe go all the way out to, say, I don't know, March in the SPY puts if you'd like. And then if it breaks this 410 on like the hourly or so, you can go ahead and get out. But if you believe that there's more downside to come and that we will go ahead and reject this trend line to the downside, then that's something that you can go ahead and play. Let's go ahead and check out other stocks here. I'm going to go ahead and put us back on the 15-minute healer. But in terms of the levels of the SPY itself, though, that we can kind of keep an eye on, 408 was rejection on Friday. So you can kind of see if 408 is going to be in a rejection area. But for me, it's more so that 409, 410 is where I'd like to load up heavy on the put side. And if it breaks it to 411 or so, I would go ahead and say I was wrong. My apologies, and get out. To the downside in terms of support, no surprise to no one, or no surprise to anyone. You have 400 that held as support in the pre-market on Friday. And now let's see if it wants to come back and test it today. So the range for me, at least, is kind of big. There's not much that I'd be interested in. 400 break is where I'd really want to go ahead and load up on shorts, whether that's today, that's tomorrow, next week, or if we never get it, I don't know. But that's something to keep an eye on. And then the break of 408, 410 is kind of like the range to the upside for me. So much has been made of the BABA news, or excuse me, not exactly BABA news, but in terms of the COVID easing, COVID opening, reopening, COVID easing, whatever. over in China. So we'll see if this BABA continues to move towards the upside or not. 92 is an area of support for sure for this one here. So if you're looking to play BABA, you can kind of try to have a play on going long around 92 or so and see if you can get a bit of a bounce there. Stop loss would be about 50 cents to the downside. Of course, now we're going to check out the other Chinese names as well. You've got NEO. That's moving up higher in the pre-market. You can see you have support right here. So if you're looking to play NEO, you had this spot be resistance, right? The 1330. You can see resistance here. You can see resistance again there. And obviously now it's gapped up. So I would not be surprised if NEO wanted to come back and possibly test the 1350s and maybe even the 1330s and see if that one holds. So that's an area to keep an eye on for NEO. And if it breaks the 1450s, then I think you can have 15s to be the magnet. Let's go ahead and check out another stock, and that's going to be XPEV, ticker XPEV. This one is near what you would say is support possibly. You can see here, let's go and expand this a little bit. And now you've got that right there. So you have resistance that was around 1288, and that area has now been support for XPeng. And that's moving to the upside a little bit here as well. So if it clears the pre-market highs, right, which has been resistance around here, if it clears the pre-market highs of 1320, you can see if you want to go long, especially if I see any options coming in, I'd be interested in going long the name here. Let's go ahead and check out Amazon now. Amazon, okay. So look, I've got a friend's wedding that I'm going to be leaving town for here in a few days. And I got to buy some stuff like, right, dress shirts and, shoes and different things like that. I don't feel like going to Men's Warehouse and dealing with all that. I'm lazy. So I order a bunch of stuff from Amazon. If I delivered it to my place, it wouldn't come till Friday. But if I deliver it to my parents' place, who live about maybe 25 minutes away, it arrives on Wednesday. So I'm like, it just doesn't make sense to me. I'm a little annoyed, but whatever. So my parents are going to get like 10 packages from me. And they're going to be like, why are you doing all of this? I thought you told us about a recession, blah, blah, blah. And rant. Taking a look at Amazon, though, you can see these lines that I've drawn. You've got support level at the 93, which was your pre-market lows. And we'll see if it wants to come back and test the 93. It's Amazon, to me, in terms of charts, isn't just the cleanest. It kind of has wicked through a couple of support and resistance areas that I personally have. But to me, the cleanest one in terms of support, and if it breaks, is 93. That's the most recent support area that I can see here. And of course, in terms of resistance, you can see it's got to be the 95 right here, where you had support, broke, tried to go above, couldn't, acted as resistance and down. So that's a $2 range that I have on Amazon, ticker AMZN, 95, 93. Someone wants me to take a look at CRM. What is that? Salesforce, I believe. Yes, it is. There is Salesforce 142, clear area of support. So if you're looking to go short, you can see if you want to go short on a crack of 152. And if you're interested in going long on this one, possibly breaking the highs of this 145, actually. Yeah, that could work. Breaking the highs of this 145, then you have about the 147 or so that could end up being resistance. We talked about BABA already, but just a quick recap. If you're just joining us, 92 bucks is where I expect to be support. And if it goes ahead and cracks above the 95, I believe that 100 could be a magnet. But if I see options coming in, I absolutely will be interested in this one. Let's go ahead and check out TSLA on the Tesla side. This one had gapped down, or excuse me, it is down still, but it was down further around this 185. So if you're looking to go long on Tesla in terms of grabbing a support level, the 185 could be an interest area and interest for me. So I'm going to go ahead and remove that. There you go. 184.52, 185 area, that 50-cent range. I would give it about $1 remove to the either way in terms of stop losses and things like that. But that's what I've got on Tesla. Let's go ahead and take a look at Apple, ticker AAPL. Let's see how it behaved around the 150. It never got to the 150. It stopped at the 149s. That was rejection. So if you're looking to go long Apple, if you can go ahead and break above this area here, which is the 149s, I think that 150 could end up being a magnet to test it one more time. But if not, the crack of 156, you should see some volatility to the downside. Matter of fact, you can see how 147 was resistance. What's up, Brian?
What's going on?
Good. Just hanging out. Turn the charts over to you here in a minute. But you've got, so you can see how the 147, right? was resistance right around here. You can see how it continuously kept bouncing. Then when it finally broke through, it acted as support here at the 3:30 mark on Friday session. So that's another example of support turning into resistance. To a Tesla, it's the Shanghai news of the production situation that they got dealing with. A little bit of karma, possibly. But Tesla to the downside. Other EVs more so to the upside on that one. Let's see if we have any other names that I did want to go over. Let's check out Coinbase. If that's near 50, it kind of is. But if it gets up to 50, you can possibly see, if you want to play the rejection on that one, you can see the last time it came to 50, it dead rejected. And then you got yourself a 10-point move. I didn't even realize that. Excuse me, a 9-point move to the downside. I didn't get a chance to play that one. Let me see. DBGI, that sounds like something that Ryan would give us insight on. Yeah, it looks Digital Brands. We played this a few times. 440 crack, possibly 450 could end up being resistance. So that's what I've got on that one. Let me see if there's anything else I wanted to go over.
Give me a second, Nick. I'm having a technology issue. I'm not ready.
No worries. You let me know whenever you are. We'll go ahead and take a look at AMD here. Matter of fact, is Mitch here? Yeah, he is. Mitch, if you want to go over anything, let me know. If not, I can just continue going over some charts. On AMD, you've got this here. Let me go ahead and clean this up a little bit. Let's remove things. 76 on AMD. Area of resistance. If it cracks above 76, you can possibly look to go long, but you're going to see resistance area around the 76.50. So it's not the cleanest in terms of, it doesn't have a lot of meat in short term resistance and support, but that's something to keep an eye on AMD. Is going to be the what was I saying? Top side resistance. NFLX, I absolutely can take a look at that. Let's go ahead and take a look at Netflix. Remove our lovely drawings. We come back here. I believe this is trying to do a gap play, isn't it? I could be wrong, but give me a second. Let me remove this so we can have a little bit of a cleaner look. And you know what? Sometimes it's nice to just have someone else do the work for you. Yeah, it's into the gap, and it's looking to fill it around this area here, which is approximately 333.51. So if the market participates and doesn't go too crazy, yeah, you can get a nice move continuing on Netflix. But let's go ahead and take a look at the daily side of things, or excuse me, on the 15-minute, where you can go ahead and see rejection so far on this ticker right around here. Who just pinged me? Okay, that's not for me. Right around here, this 322.06. So if we can crack above 322.06, you can possibly see some more upside. And again, if calls come in supporting my thesis, I would be interested in going long. So 322.06, the gap would be filled around 333.51 or so. Someone wanted me to take a look at Oxy. I absolutely can. Let me go ahead and turn off the gaps now. I'm not too familiar with Oxy. I believe there were some oil news. I know Mitch follows that a lot better and more closely than I do. So I'm not quite sure what to tell you on Oxy. I also can't get a good read on the chart besides the basic of pre-market high to the upside. So I apologize. I'm not quite sure what I would do with Oxy besides the resistance around the 69.50s or so. But it's not a ticker that I usually play. I have played it in the past and made money on it, but it's just not too familiar with it. But let's check out Google here, because that $100 mark could be a fun little play. So it's around 100. You can see you had 101s that acted as resistance around the 180s. So we'll see how he wants to behave around this 100, if he wants to reject it or not. But we got some good tickers to pay attention to and see how the market behaves. And of course, if you're trading the futures, keep an eye on the 40.50 and the 40.60 area that acted as resistance in the overnight session. So we can see how things go there. But for now, it is all going to be Ryan, just real quick. Or you talked about NVIDIA, but the crack of 169.01s possibly can see some upside. It's all you.
All right. So first of all, the issue with Oxy, oil prices are higher as the price cap for Russian oil kicked in. That's the news that's driving some of these stocks higher. So I don't know if there's anything specific to Oxy. I haven't taken a look, but that news is affecting the broader market.
Yeah, and the China opening is what's giving the lift. And so
that's kind of where we're going with some of these other smaller stocks that we're going to talk about here. It's exactly right, Mitch. So there's even more talk now about China relaxing its ridiculous zero COVID policy. More and more unrest leading to this. Probably what that means is that some of these stocks stocks are up, right? In fact, we even got another news piece this morning about Foxconn, one of the chip providers for Apple, expects to be back at full production later this month or by January at the latest, right? So again, we're getting that news piece about channel checks and unable to produce chips for iPhones, driving the price of Apple down, only to have that be a viable dip, as it appears that that plant will be back in production or at full production here fairly soon. However, with some of the COVID easing policy, we're seeing a lot of pops in some of these Chinese names, and that is going to give us opportunity here in some of the smaller names. Now, again, I'm late to the computer here. I've actually done no work other than some of the stuff that I've heard as I was dealing with some other stuff. So you and I are going to go through the charting together this morning. ZH going to be your first ticker here. Ran up to a high of 165. Currently holding this this area right here. Really, what we would like for this one to remain in play is for this to hold above this 152. I guess 150 would be a stop. Better yet, if we can hold above VWAP and then maybe take out this high. One of the things that we saw last week on a lot of these potential day trading plays was either on the intraday chart, whichever one it was that you use, or on the daily chart, or even better on a combination of both. We saw this very same pattern play out. We saw a stock move to a high, come back off of that high, and then kind of curl back through that high and then move higher. We've seen this on multiple time frames last week alone. So we're going to keep looking for that. That has worked. We're going to keep doing what works until it doesn't work. So ZH here, China name, really would like to see this move through 165. We'll see if we end up getting that. Cold, this is the ETF for natural gas. Remember, that's moving around here. Cold and boil are going to be those two that match. So depending on how they move, you should be able to play either of those tickers to the long side. Billy here, this is another one of those China names. Again, you can see here, shares of Chinese companies are trading higher amid the easing of COVID restrictions in some cities. So Billy here, another move towards the high. This one, I don't trust as much. One of the things that we've seen here before is that this actually acts better when it sells from a gap. So if we take a look at the last day here, Friday, now granted, we didn't have a huge outsized gap like we do here this morning, but look what happened. We were actually trading higher. As soon as we sold off, then they bought it and brought it higher. And that's what I'd like to see here. So far in the pre-market, we've gapped up quite a bit. We are pulling back to the VWAP here. This is kind of lining up with one of the first intraday, if you will, levels here from the chart. Let's go ahead and pop it up on the 1 minute. And we'll go ahead and move it right here to this 2266. Let me add another one right down here at right about 2250. So this right here is going to be your support area, 2250 to 2266. As long as we hold above that, we could have some more room to the upside. Let's wait for this to materialize, though. Let's not go after this right at the open. We want to see if this gap that these Chinese names are getting are actually going to hold, or if they're just going to get sold into right at the open. We don't want to be part of that play if it gets sold into here. XPEV going to be the same thing, right? This is the Chinese EV company. We have the same type of formation, right? So whether it's the 5 minute or the 1 minute, we're gapping up here. We really want to hold. Now on XPEV, what we really want to do is we want to hold the intraday high here from Friday, right? We got that at 1290. We're currently at 1292. Let me actually zoom in on this candle. High is 1288. So let me go ahead and adjust that just so we can be exact. So 1288. We want to be able to hold this, and we want to see if we can actually bust above 13 and then 1330 here to the upside. Again, we'll see. Some of these might actually come in at the open. SHPH. This is another one that we've traded off of the scanner. So this is Shuttle Pharmaceuticals. You can see this actually had a really good day on volume on Friday, and we're actually holding above the highs on Friday. So another good technical sign. Go ahead and mark off the top of this candle here. We got 268 as that support level. A breakdown through 268 really means that I need to see the next support level confirmed. Not the price coming into it and maybe bouncing from it. No, I want to see that next support level confirmed. When we start breaking some of these supports after outsized moves, there's a lot of air under the stock. If we're going to take that for a long, we really want to make sure that that support is going to hold, as opposed to just trying to play a bounce or trying to play it off of hope. So 268, one of the things I'm going to be watching here. And then if we can really break 315 here to the upside, maybe we'll take out this shock candle here that took us to 331. We'll see. SHPH, been on the relative volume scanner before. I'm going to be watching the relative volume scanner here today to see if we do get that relative volume. That's going to help provide an entry trigger. If we do get it, risk on. If we don't get it, we'll look for something that has a better setup. DBGI, this is one that the chat was talking about earlier. Is that correct, Zunaid? I might have missed that as I joined late here. Yep. DBGI, this one feels like we've traded this quite a bit. It feels like this has been making a lot of noise recently. Some of the key levels here, easy for me to say, that we're going to mark off. So I'm going to go ahead and do that. We're currently at 419, almost 420. Nice. Would love to see this actually move above 440 here on an actual volume move, but we'll see if we end up getting it. If we take a look back at the 5-minute, we're clearly in a downtrend. Now, have we really kind of found the bottom here? Are we rounding back up to try and take some of this off? Today, we will see about that. Let me zoom in on this and try to get some of these levels. The range in here that I definitely want to clear out, if in fact we are going to move, is going to be what? 450 to 482. This area in here, we clear this out. Maybe we can start attacking these levels that we had. We were all the way up as high as almost $10. This was as of November 28th. So if we really want to kind of curl back up and do some, and, you know, trade back up into this area, first thing that we're going to need to do is take out 450 to 482. That could be not a quick thing, right? We could kind of go back and forth in that area before we clear out that range. Let's wait and see. I know I'm running out of time here, so there are a couple more names here on the movers list. LU, Lufax Holdings, this is gapping up here. We actually still have some lines from the last time we took a look at LU. This is the same deal as some of the other Chinese stocks. COVID restrictions easing. IQ, we have a very, very similar move here. So IQ, a little bit different. This is the same catalyst, but basically what we need to do here is hold 355. Spot to the upside that we need to break is 375. So this 20-cent range that we're in, this really needs to fall. NEO, I know a lot of you are familiar with NEO. We talk about this one all the time. NEO is a favorite here. EV car, seeing the lift from some of those Chinese names. Same with LI. And then, of course, RLX. RLX back on our gap list here today. Remember, we have done an absolute ton of chart. Oops, let me go back to the chart here. We've actually done a lot of charting here on RLX because this has turned out to be a great swing trade. When does the party end really is the question here. So what I'd be looking at here for RLX, I think we're a little extended, so I'm not necessarily looking for a new swing here, but range that we're currently in, 275 to 288. Okay, market opens in a couple of seconds. Sorry I was late, folks.
No worries, dude. No worries at all. Glad you could join us.
All right, let's see what goes on this week, right? Let's see. Basic materials have been going up as of late. You guys can focus on some of those steel plays, coal plays, right? Aluminum. They've been really strong as of late. Stock market overall has been going sideways. We'll see what happens. But the sideways action, I think, in the long run is still in the bullish trend, right? So I do think that we can get hourly pullbacks towards 402 and then eventually bounce. We'll see what happens. It feels like every dip gets bought. So we'll see if this dip is another dip that gets bought.
It's not what I meant to do.
All right. We'll see what happens here. Right out the gates, you can see basic materials up. So steel, aluminum, coal. We talked about certain players, AMR, CEIX has been just ripping. You can look for some other ones to start making some nice moves. HCC is one I'll give today. That one really started getting its motor going. Take a look at this daily chart. Now it's trying to get through the daily highs and hold that high, 39.22 or maybe 39s overall. Right now, you're just off that 39 mark. We'll see if we get that next push. That's HCC. Looking around, if you guys got tickets, throw them up. Let's get this rolling.
IQ here, one of the Chinese names that we looked at right out of the beginning. First move here is up. So IQ out of the gate here. We did clear out that 375 area, currently at 384, pushing a little bit higher. We got as high as 395 here. So again, I'm not a fan of taking these right out of the gate. This one seems to have worked. Let's see where it settles. We'll watch some of these other names. ZH166 here. Out of the gate. Let's check on ZH as this loads here. ZH's first move is up, so it looks like we're getting a lot of continuation on these moves right out of the gate here. XPEV down actually a little bit. XPEV to the bottom range of its VWAP, standard deviation.
All right, looks like I got filled on Google, looking to go short around the $100 area. Let me go ahead and flip over to that. And I am also looking to go short on the future side, but here is my short, 100 share short of Google around 99.97. Stop loss for me, I'm going to move this up a little bit, is going to be $100.55. I'm going to look to take profits around $99.47.
RLX first move here up to 294 on the RLX. That's where it's stopping. Looks like it's got a seller here at 294. Wouldn't be shocked if this gets taken out. They're hitting it. We'll see if that actually ends up coming down here.
Netflix looking to go red to green. Again, that 322.06 level is where I'm looking to go long. As a matter of fact, I'm going to set a lovely alert there.
RLX took that spot, by the way, went as high as 298 on RLX. So we still have some continued strength out of the open here on some of these Chinese names.
Energy, XOM, getting a nice little lift here out the gates, pulled back now. It's an interesting outlook if you want to go off the VWAP here for oil names. It's just difficult for the oil trades. They've been bouncing and bouncing. It's already gotten a nice little lift since this morning. So it could do a little bit of an hourly pullback and then give you the lift. We'll see what happens there. XLM's been stuck between 110 and 111.50s. We'll see if it eventually gets out of this range and makes a move.
Last line of defense on the Google short.
SPY's just bouncing around. It's in a 1 minute kind of bearish pattern, resistance around 404.25s or 404.30s, downside action below 403.80s. I would pull it. Chop, chop. Trying to be patient here at the gates. The only one I really like is maybe some oil plays to the upside, but trying to be patient on those also.
RLX, nice pop to 306 there. Virgo, if you hit that, great job on that. Great job on that. RLX, LFG.
SPY starting to push a little bit here. I'm going to try to see what gets into the green. Energy and communication services in the green from the open, but everything else in the red. Looking for see what's going to be able to bounce back. Utilities look like they're bouncing back. Everything else is kind of in the red from the open here. Dragging is industrials and real estate. So if you're looking for maybe a DE short, well, this could have been the day probably that it looks to set up the most as you're seeing it kind of pull back here.
All right, short the futures here at 40.49.25. Stop loss for me is going to be a crack of 40.53.
Veru, Jay Wild, great shout here. Our good old friend Veru popping here on volume, taking us right back to that 6 handle. Really what we need on Veru for this to have more upside is a 666 break. So first thing we're doing here is flirting with 6. We'll see if we end up getting that. It's extended here. Not thrilled until we break 666.
Google short stopped out. I'm out for now.
All right, taking the long here on American Airlines. So I've been looking at the airlines for that Santa Claus type of rally trade. I kind of like it going into it. American Airlines looking for the 14 push out today. Just got in there at the 13.90. Going to look for a breakout above 14 on the day. This can risk down all the way towards 1380s. Let's see if it gets back up there. I'm going to look for a push today in the airlines. We'll see if we get it.
Netflix with a nice move to the upside.
SPY starting to push here. Got out of that range that we talked about this morning. Now it's to the upside here, so it doesn't look too bad to start seeing some bounces. We'll see if they can come into play.
Let's see if you got Netflix now crossing the 322.22. So I'm going to go to a double box.
MGM trying to make a move up. That's a nice little level above it. 38.50s on that one.
RLX big pullback. DBGI took out that high there, that 440 high on DBGI.
Win catching a little bit of a bounce, of course. China stock. Apple getting a nice little push towards the 150. That's where I think it's going to find some resistance. It's just a whole dollar to look for that. Above that, that's a 151. So it looks like Apple really strong here out the gates. Broke out of a 1 hour chart pattern. Just a longer time frame pattern for multiple days since December 1st. Now that resistance was 149.10. So I'd look for 149s to hold on any pullback on Apple to stay bullish on the day. We'll see what happens.
Where is that coming from?
SPY still trying to push there, so it doesn't look too bad there. All right, looks like some of the growth is getting a little bit of a bounce there. Coin, Roblox getting a little bit of a push up today. Twilio getting a push.
Apple at highs, Netflix at highs.
Unity pulling back towards the VWAP. I don't know if you guys want to take a look at that one. That one's been strong for a while, but looks like it's starting to top out a little bit. We'll see what happens. What's going to sneak into the green here? Technology sneaking into the green. Let's go to some heavy cap. Of course, Apple helping that out. But let's take a look. What else is making a move up from the open? Google making a move up from the open. That actually looks pretty strong on the day, up about 1.56% from the open. It's up actually more from the open than Apple is. So just to kind of point that in a reference term, there you guys see Google with a big move up to 101.35. Daily has a nice little pattern that it's holding the 100 pullback. So that's the level that I would look for pullbacks for Google to hold 100. TSM starting to crack. That doesn't look good there, but that one has to crack 81 to really get strong, to get weak there. NVIDIA trying to make a bounce there. It's up to VWAP right now. Still red overall, but doesn't look too bad on this pullback. We'll see if it can continue its run.
You've got Google 103 calls expiring this week coming in, and you've also got Netflix that went ahead and struggled as anticipated around that 322.01.
And you know, that TSM move is contrary to what some of those other competitors are doing, like NVIDIA, Micron, all moving to the upside as TSM moves to the downside there. Veru took out that 6 area that it was consolidating around. So this is a nice move here on Veru. This is actually what we really want to see. We want to see some of these levels get taken out. Then we want to consolidate above that level and make a move towards the next one. So this first level here that we consolidated right around 6, we've taken it out now. Next one would probably be right around, what, 630-ish? So if we can get there, that would put 666 in play on Veru.
All right, Apple with the crack of 150. Now wait for the retest if you believe in the Apple long. But Apple has broken 150.
Delta getting a push, and United. I'm going to take a look at United. I know United got an upgrade by Morgan Stanley. That's getting the lift there. So that's why I'm also into the airlines. Morgan Stanley upgraded United Airlines to overweight from equal weight. Oil has just been going sideways right now. XOM, interesting chart, just sideways right now. So we'll see if it actually picks an area, but you guys can see that it has a nice range on the wicks, but we'll see if it actually picks a direction. XOM here on the left-hand side. American Airlines finally getting that push and looking for the push above 14 on the day. Then we can look for it to continue pushing. Strong stock right now. Let's see if we can get it to keep going. Got AAL at 1390s, looking for the 14 push. Look on the daily chart, right at support off of the kind of the 1380s. We can get it back up through 14. It could potentially get to 1420, maybe even 1450s as it getting from the bottom of the range to the top of the range. We'll see if we can get that move.
MLCO, which is the Melco Resorts. This is that Chinese casino name. This moving to the highs here. We did have a Macau gaming print over the weekend. Looks like China lifting lockdowns, which will increase chaos. Of course, the state media is saying. Win also up. Interestingly enough, Win is also having a lot of Macau exposure, but that was up as high as 90 here in the pre-market. We're bleeding back some of these gains. Be interesting to see where Win settles. I think that this is a really good stock. I actually think Win is worth more than $100, but in the environment that we're in, it's really kind of getting sold into. The Chinese Macau area, probably the only culture that I've come across that likes gambling more than Americans. So this pretty good news here. As long as some of those COVID easing restrictions continue, these might be swing plays to the long side as well. Win and MLCO.
Remember, those have been running for a couple of weeks, at least in my outlook. I actually like Win at the short, but I just want to put that out there so that everybody knows that both sides of the coin.
Yeah. Mitch, you're absolutely right. That's what makes the market here. So if you take a look here at the 15-minute chart, which Mitch, I think is going to be one of your favorites, you can actually see this entire move, right? We had a huge move up. This was, I believe, on the first talk of those COVID easing restrictions, which didn't go well. We came back in. We based right here around 57, just under 60. And then as we started to get some more news, we've actually started to trade up here. So, Mitch, to your point, this baseline seems to be around 60. We are here at 86, so about 26 points up. But again, if this holds and we continue to see increased revenue and foot traffic, I don't think we look back to this level. A lot of ifs in there, but something to keep in mind. Mitch, I don't disagree with your reversion.
Yeah, one reason why I'm pointing that out is just look at the Chinese stocks today. They're really giving up some of that gain that they had in the pre-market.
Yep.
So that's one thing that I'd state is look at Baba, look at the leaders. They're pulling back strong here. And I think I think this is what happens a lot of the times with these Chinese stocks. They gap on us on the daily. They look great on the daily charts, but look at the gaps. How do you deal with those types of gaps and those pullbacks into the intraday? That's why I'm not a part of this rally. And yeah, it looks like an awesome rally when you're looking at charts. But overall, if you've seen the price action on these Chinese stocks, there's a reason why I'm probably not in it. And a lot of the times it's action like this where it looks really great on the daily, but the intraday action is actually, to say it lightly, crap. It's like washouts to supports. And I don't know about you guys, but I don't like buying washouts.
Nope,
it's just not my type of strategy there.
Neither do I, Mitch, and that's exactly why we've been saying from the beginning here, really need these things to confirm, right? We don't want to buy the first pullback. We want to wait for them to confirm. We want to be a little bit more conservative as opposed to buying them out of the gate. Now, out of the gate, a couple of them worked here today. So that did end up working. But again, to your point, a lot of these have pulled back, and we definitely don't want to be trapped in that.
Yep.
DBGI pulling back from its recent high as we speak.
ExxonMobil trying to crack to the downside towards that 110. If that does happen, be careful. Oil could start giving up. Got to take a look at the SPY overall, but energy and utilities the only thing, and they're just barely in the green. They're barely in the green, team. That just shows me right now market breadth actually dragging on, and a lot of that looking to the outlook that the SPY is pulling back. We'll see if it takes out the lows, 403.88. If that happens, be careful. We could see some downside continuation. At least the market breadth out there is not looking too good. Apple is leading, though, as a leader, staying strong against the market.
And Mitch, all of those Chinese names that we talked about pretty much down, right? ZH, yeah. XPEV, RLX, all of them came back in after that first move there. One of the moves that does seem to still be holding here is cannabis, right? Tilray at the highs. I see Becca mentioning MSOS. That is going to be one of your cannabis ETFs. That's also having a really nice day here out of the day. Day here out of the gate. Excuse me. Just the Monday jitters, baby. Anyway, cannabis looking pretty good here this morning. MSOS, that's an interesting one. I like that one more for a swing as well. I don't know how many of you are interested in trading cannabis here in the future. I'm a big fan of doing so via the ETF. So MSOS, THCX, I believe, is another one.
There's one that I really like that I'm kind of pissed that I never grabbed it, which is Trulieve, but it's in the OTC, and that's why I like MSOS, because it includes it, even though it is an OTC, right? And so that's TCNNF. That's one of my favorites. definitely, but it's an OTC stock, right? And that's the reason why I don't have it right now. But if I want to get exposure to it, I usually look at that MSOS because it includes a lot of these OTCs, that MSOS. And that's why it's a good outlook if you're looking at those. And in my outlook, this is one of those cannabis winners long term. Reason why they've kept their evaluation to make sense. And that's a huge part. Now look at these monthly pullbacks. I really liked it into the 8s. I have a friend that has some into the 10s, and I'm kind of jealous. I'm like, damn, I want those.
And the other thing, Mitch, that I really like about these ETFs is, right, you're not just exposing yourself to one company, right? So if one of those companies doesn't do well or acts poorly, your entire investment's probably not shot because there are other companies that are going to be acting well, hopefully. That's the hope, at least, behind buying an ETF. And you can still have exposure to that market. For swings, I like these ETFs a little bit more. You're not going to get that huge outsized movement, but you should be able to protect your capital a little bit better with those. Awesome to see these flying around the chat now. MSOS, nice call there.
And why is MSOS up, right? That's an important thing also to catch the actual stocks in there that are making big moves, right? Well, there's a lot of the OTCs. I'm not going to get into those because we know how that trades, right? It's a little bit harder to trade. But look at a grow generations. We've been talking about this move lately. It's been a big move on the daily, continuing on the day. That's what's in there. What's another one that's in there? IIPR. This is a lending company. This is a property company, Innovative Props. Look at that, starting to continue the push. That's helping it right there. Another one here, which is not a big known one, it's Hydro Farm. And this one does move with Grow sometimes. When Grow gets the lift, this one likes to get the lift. HYFM. So maybe look for this one to continue going. This is the cheaper name one that is also in here.
On the futures, you got the crack of 40.50. I almost went ahead and had my targets on my short, but unfortunately it didn't quite make it. I missed it by 2 points.
Which future though? I think that when you keep stating that, we need, like, is it ES are you looking at? What are you looking at? Because just the futures is probably not going to give enough for anybody that's just listening. Zunaid.
Appreciate the insight on that. Yeah, it's going to be the E-mini futures.
E-mini futures, joining us perfect.
If you're just joining us for the first time.
So Zunaid, just to kind of tie that up too, you're basically trading the S&P futures. That's your futures target when you're saying that, right? You're not
correct
trading the Dow or the NASDAQ. You're trading the S&P futures. And I'll be honest, that what most futures traders, at least the ones that I know, that's what they're trading. S&P futures and then commodities to some extent, depending on their expertise.
Yeah. And then, of course, hopefully we can get a crackdown below the area of this. Let's see what we got here. 40.44, because we got to take profits at 40.41.50s. It would really suck if this reversed and went ahead and stopped us out, but we're going to stick to our thesis. And if we're wrong, then we're 0 for 3.
SPY looking weak, yet Apple staying strong. We know how that relationship sometimes comes back into play, and then one takes lead. We'll see what happens.
Jay Rice right here. Prefer the sellers like GRWG, IIPR over the producers. I'm the exact same way, Jay, because I think one of the things is that producers are going to be largely dependent on crop and then how they actually, deliver those crop or crops. And if you get any type of wipeout or any type of news about shrink or anything negative there, that could have a tremendous effect on one of the producers. However, if you have some of the sellers or some of the people that are selling like the equipment, that's not necessarily going to have as much exposure to that. I like that too. It's actually one of my theses behind GRWG. I know Mitch has his own thesis against.
I'm kind of so against that outlook.
I understand
the opposite of that outlook.
That's okay. The two of us don't need to agree.
Yeah, no, 100%. Well, the big thing there is the sellers. Yeah, they make sense. But let's say if for some reason banking were to go through. If banking were to go through, it would ruin what IIPR has an advantage in the industry, which is what? Lending to these cannabis companies, because now they could go to banks and get those loans. They wouldn't need to go back to IIPR. And so IIPR would be a short for me if the banking were to come through. Now on grow generations, it's a little bit different. I kind of understand that it would get the lift if for some reason cannabis were to be deschedulized. I think that will definitely get the lift, but I've talked about it. There's no reason in my eyes why Home Depot doesn't make the move to go into everything that Grow Generation has to offer. in the long run. That's just what I would think in the long run there. So Grow Generations does have an advantage because it does have some certain products that you can't get in certain other places. But my thing with Grow Generations that I don't like is I don't like their huge stores that they have. They have these huge facilities that are housing majority of their supply, and then they have to ship it, right? And to my eyes, I think that's not a competitive advantage. They're not Amazon. They're not going to be able to deliver like Amazon. So in my eyes, if we would get deschedulizing, guess what happens? Amazon immediately, some sellers would show up there, and they already have most of the products that Grow Generation has on Amazon. Yeah. So if I could get it delivered in Prime or delivered from Grow Generations and pay shipping, which one am I going to do?
That's a good point. I think that a couple of things just to kind of play devil's advocate there. First of all, in terms of the shipping example that you just gave, and Zunaid, do you have a trade that you need to talk about?
Yeah, thanks, sir. My sound effects there. I'm going to go ahead and cover a couple of contracts on the future side of things here. We'll go ahead and see. We'll leave one remaining, and we'll have a stop loss right above 50.51. But for now, we go ahead and cover 2 to lock in some gains. Thank you, Ryan.
Yeah, no problem. I definitely want to focus on the trading here first. I don't have one. I'm still in
I'm on the
mode.
swing. That's why I'm not stressing too much. AAL working for me above that 14.
And real quick, so just to kind of go back to that, so in your example there of the Prime, well, so first of all, if you order from a different company that's not based on Amazon, there might be more support that you get or more add-ons or something like of that nature. So that's one thing. We'll wait and see, because you're right. I mean, for me, someone that doesn't necessarily need support from someone else, I'm the same way, Mitch. I want the faster you can ship it to me, the more likely I am to order from you. Just full stop. Now, the other thing that I'll talk about regarding your comparison, well, Home Depot could just start selling all of this stuff. Look at some of the gardening products now that's not cannabis related. There are still gardening stores that have niches and have more specialized products that do very, very well. Just because the box stores have some of these supplies doesn't mean it's going to take the whole thing away. And I think that you would see that same effect happen in cannabis. Now, are box stores still going to eat into some of that? Yeah, absolutely, which is why you're going to need the federal legalization and more people producing for this thesis to even materialize in the first place. So again, double-edged sword there, but we'll see how it plays out.
Apple staying strong into the 150 handle, almost to 151. Yet the SPY coming down to the support. We'll see if this turns around. American Airlines staying strong to 404, looking for at least close towards that 420s to take some profit. I'm going to let this keep running. Got a little bit. I definitely will take some profit and then leave the rest for it to run, because I think that overall this could be a daily move versus just an intraday move. We'll see what happens on American Airlines. SPY breaking through the lows right now. We'll see what happens. The market's tough.
Veru at highs here. Now, remember what we've talked about here. We've talked about several of these levels coming down, right? First level here, right around 6. This one came down. Now we're trading up to this consolidation level that we had right around 630. It's holding here. It's not knifing back. Really, really good sign. Is 666 on deck today? I have no position here. I will say, though, that if we continue to have strong volume and we continue to hold these moves up, we break 666 today, I think we test the high end of that range. I think that's probably a long opportunity. Let's see, though. This has been strong all day. No position yet. Great shout by the chat. You guys have been all over Veru from the very, very beginning. Looks like we're getting another setup here. If you took it this morning off maybe with this pre-market high break, definitely lock in some of your gains, but we'll see if we end up moving higher here. Veru for me. Let's take a look at the daily chart here real quick, just to kind of set the stage. We did really kind of come in here. This 4 seems to be the recent bottom. Now, we did hold this on this recent sell-off. It does look like we're curling. Again, this big gap in here, this is looking juicy. This is what people are waiting for. That gap doesn't start till about 775. First thing to take down is going to be 666. This is why we are watching Veru. Nice move back up to 10 here, I think is probably on deck. Question is when.
All right, airlines doing well today. If I look at the leading stocks from the SPY overall, you can see that some of them are going to be casinos. Some of them are actually the cruise lines, CCL and NCLH, having big days there. And then UAL, RCL, DAL. There's an oil name having a decent day, Hess Corp, if you want to take a look at that one. ATVI, Oxy up, but you don't see too much of the bigger names here. The only one that's bigger, it's kind of more Apple. So Apple having definitely a good day there. We'll see if that can continue. It looks like some value names, some oil names showing up, and then some traveling stocks or leisure stocks like casino or cruises.
Trailing our stop on the E-mini futures here. Went ahead and moved it to about the 40, 45, 50. So we will not go green. We will not go red on this trade. And instead of going 0 for 3, we're going to be 1 for 2 in terms of depending on how you look at it. But that's what I've got. I'm kind of going to continue trailing my stop is what I'm going to do because I'd love to go ahead in the market to just flush to the 4,000s on that side of things. No clue if that'll happen. I don't know if that's realistic to drop 40 points tonight. Or today rather, but we'll go ahead and keep an eye on it. The market's already down about almost 1% here. And of course, the weaker stocks are your Teslas and your Salesforce. Stronger ones would be your Apple, your Google.
Thinking about a Best Buy short. It's run so far, so long, that I feel like it could have a pullback. It's at near resistance.
Are the chat still trading comms? Becca, Crow, any of you guys trading comms? Big break there through 12 cents on comms. Not one I'm trading under $1 here, but worth calling out here as we had a nice little confirmation here on this move up through 12. Looks like 12.50 is the high print here on comms. So nice little move here. On comms, right through that 12 spot that we identified.
Cannabis cheap names too. Sundial. I saw even Kern make $1 move above. So you guys can be looking at those cheaper names too. Sundial is moving. You already know.
Whole cannabis sector is moving against. We're trading down here now in the broader market.
Yeah, it's definitely a tough day when it's like this, right? You get an Apple up, but the overall market down. That doesn't happen too often. That just shows me there that there's some other stocks that are just dragging us down. And Apple is the only thing that's maybe holding us up from a complete, like, hard down action move. Tesla's probably the drip. Yeah, there's the drip. Good call out. Who dat? There's the drip. The drip is coming from Tesla. Tesla was already getting hit in the pre-market, getting hit at the open here, continuing down to 185. I think this goes back down towards that daily low of 167.43, but that's what I'm going to be looking at in Tesla. It's been flushed on the day down towards 185, looking like it's just completely rejecting here. So if you want to know what's maybe dragging us down, why are we down so much? Well, I think a lot of that has to do with Tesla. It's down 4.5% and another 1.8 from the open.
Becca, we are watching COSM, not comms. My bad. I do get those two mixed up. Comms is the one that seems to be in play today.
Anyone watching Charge Point? This is Carmen. Charge Point, we were watching that last week. It rejected that 12 move. See if you eventually get that day where it actually closes above 12 and then actually gets towards 12.50. But that one's been a hard trader, let's just say to the least. A lot of volatility. No continued trend. If anything, it's a continued trend still to the downside overall on the monthlies. But that's just the outlook on the monthlies. I thought we could get the bounce there at the 15s. We did not.
The one thing to note about ChargePoint here real quick. Remember the last time that we traded this off the scanner? If you recall, I was shaken. I got shaken from this trade because I wanted to pop above 12. It came back towards my stop.
Holy
I stopped
shit.
out at flat.
You've got the futures that went ahead and just took a nice little dump and just took out my limits for profit. So lock those in.
Looks like that data print. What was that? The ISM print looks like that is hot.
Yep.
ISM services 56.5 versus the 53.5 expected. Whew.
Boom.
Look at, and here we go. So this is what, as soon as Zunaid reacted, what did I do? I flipped over to Pro. I flipped over to my news feed that filters for this information. Bang, right here. PMI 56.5 versus 53.5 expected. That sent us down. Where do we find the bottom now? Let's reset and find our levels.
I love it. I love it. I love it. I love it. All right, cool. So I don't really have any trades on. That was a nice 3-contract trade. We went ahead and kind of kept the trailing stop loss, and our limits went ahead and hit. So we made money there. Let's go ahead and kind of quickly recap Let's see what we got here. Where's our orders working field? So we went ahead and went short at 48.50s, and then our first sells were around the 40.45s, and then again the 40.45s, and then the 40.31s. So that was almost a 17-point move to the downside that we went ahead and captured on a single contract. That was really cool. Obviously, you know, I'm going to go ahead and say we got lucky on the numbers working in our favor. And here's Google. So if you like Google, oh, and look at that. Google, $100 is what I was going to tell you guys to put your limits at to buy them. But it already went ahead and spiked to that 100 on that data news and jumped up 50 cents. And Apple just downside movement as it went ahead and crushed the 150s.
Yeah, it's pulling back. It hit the VWAP and then just flushed through there. It's washing out some traders, I feel like, on that big wick style. Be careful there.
Yeah, absolutely.
Square down big today. That one's getting pummeled there. So if you have Square, be careful. This is why I've said PayPal and Square, I ain't touching till this market turns around because, man, these stocks just keep coming down.
All right, so looking at SPY here, to me, next bit, we're currently at a level where we could bounce from. This 402, here, let me get my chart up. All right, so this is basically what I'm looking at, right? This light blue line is representing the downtrend that we've been in pretty much all year. You can see with this downtrend, we make lows, we come back up and set a lower high, and then we revisit and or break those lows. This is where we're at right now. We really kind of ran up to this. I'm not sure we get above this, especially given what we see here today. So as far as we look like we're at the next bounce spot, 402 we actually broke through. Next I'd like to see is 392, right? So I guess you want a bounce at the round number at 400. Sure, I could see that happening, but the next real support level here going to be 392 if we can end up getting down there. And I would suspect that this breaks as well. And you probably have this gap down to 381. A little bit of a gap down to 381. I think there's some more downside here in the SPY, folks. We'll see if we bounce today, but I think that we probably roll this over.
Yeah, I was looking for retrace into this area, so I'm actually looking for bounces off of this. We'll see if we get it back.
Well, this is a good bounce spot. That makes a lot of sense, Mitch. 402 is a bounce spot here.
Yeah, it makes sense. It's also 50% retracement of the recent move. Looking to see if I'm going to add an American Airlines or should I just take a day trade in like UAL, DAL. They look nice. I'm just going to leave them alone right now. Looking at the cruise lines pullback, that looks interesting. Nice little pullback on those.
Okay, so couple of things here to handle real quick. First of all, Dan, great to see you this morning. Happy Monday. Hope you're doing well. Dan's been one of our better momentum traders here, especially on the small caps. Remember Tops last week and how a bunch of us were saying that it was dangerous and that you should be careful? Dan, absolutely correct here. Tops pricing a $13.5 million offering on Sunday.
Wow.
On Sunday. It's about as dirty as it gets there, Dan. Great call out there. We've been talking about this one. Awesome that you brought this back up. And if you take a here comes Buddy. If you take a look at the chart here, you can see exactly what that offering
did. Dude, it's
here.
down 61%.
I mean, dude, it is as dirty as it gets. This is why we say be careful. There were opportunities to trade this if you're a gunslinger, but man, be careful. And this is why we were saying that. Great call out, Dan. And by the way, Kyle is saying here, I'm not big on the dark pools. All right. So I have not verified this, Kyle. I'm repeating this, hoping that you're exactly correct. Huge dark pool prints and 395.50s on the SPY. So again, I don't have that confirmed or whatever. Like 6 billion worth of prints here. If you follow dark pools, if you follow all that stuff, something to consider here, Kyle. There you go.
Let's see on the SPY, huh?
I'm looking at S bulk a little bit.
Chronos, Greek shipping companies. Nope, just be careful there.
Starboat carriers, though, I think is not a bad one to think in mind. I know that you guys talking about tops and negatives, but this has actually been one that's kept the trend when it does trend. So looking at it right now, it's actually having a decent day. It's right near the VWAP. Looking to think 28 should hold here, and then it gets a push through 1940s is what I'm looking at. But of course, tops, not the area that you want to be in, but there's some other shippers that are making moves here. So I know that tops is doing bad, but look at Zim. Zim's another big leader, and I'm looking at the higher cap ones, right? That's what I would pay attention to is capitalization when you're looking into this area, and you can then look to see if you're getting that lift, right? So Starbuck was one that I was looking at, but it's not much volume there. That's the only problem there is I'd like to see a spike in daily volume. Daily volume is actually low on the day. So with that being in mind, I'm just going to leave it alone. I need to see some more kind of traders wanting to trade it. So that means that the daily volume is actually increasing, not decreasing here. I'm going to leave it alone, even though it has a nice looking chart. Was thinking about adding the American Airlines on that pullback, but I'm just going to leave my original shares that I put into that trade. It looks great here. I'm going to leave it alone, let it work. This can actually turn into a nice swing trade on the day. So we'll see about American Airlines.
Real quick here, Kyle, just to kind of fill in some more here. In my opinion, it's just a noteworthy area. Could be buyers or sellers, but either a launching point or a dumping point, in my opinion. And Kyle, I agree with that. And that's one of the reasons why we were defining some of those levels there. I think that those levels are absolutely going to come into play. Real quickly, W asking thoughts on DBGI. I know a lot of people are trading this here today. DBGI really clean break above this 440 here, right? 440 seems to be that spot. Now, the one thing I will say is that when we broke this, we really kind of pulled it back. So playing the range break here, or playing the high a day break here, difficult, more difficult than it should be. Really, ever since we crossed through this here, what, third time here has been the charm. Looks like next leg up. It looks like this has got a 5 magnet. If we go over to the 15-minute chart, we can actually see the significance of the level that we were in, right? This was that 440 break that we talked about. It was the pre-market high, but it also lined up with the November 30th level. Now here we are trading the top end of that range in the pre-market from that November 29, November 30. So this is one of the big days where this started to move back down. This moved back down from 6. So really a move above 5 here gets this interesting here. 5 to 6 seems to be the next area where we can move here on DBGI. I have no position in this. I've been watching this, but didn't take this one here. So just something to keep in mind. Happy to go over this. Definitely watching this one here today.
What do we got here?
Tesla
Apple went ahead and continued to slip below the 150 area. Now about 1.25 to the downside. Still strong though compared to the market. So still has relative strength. Let's see if it tries to go green to red.
Liking this ConocoPhillips. Looking for oil to go red to green today. At least oil stock names. Need a little bit of a pullback to 2350 if possible here.
Where's Tesla at? Tesla did it break the okay. Tesla okay.
Need to take some swing trades, man. I'm gonna get back into my swing trading shoes.
I really want that, Mitch. I'll be honest. I'm at the point
just gonna take some shots.
I'm dialing back the day trading so hard because I'm literally waiting for a great opportunity here to swing trade. I'm with you 100%, my man. I cannot wait. Deep comms here moving towards the highs here. Comms looking like it wants to take 13. I know it's not COSM, guys. It's comms.
I'm going to take a short on Tesla. Went short. What is it? 184.05 stop loss for me. It's going to be 186.17s.
Man, there's no snow in the forecast. What a bummer.
Boo.
I'm ready for snow, Zunaid. What can I say?
Nah.
I don't know how you handle that Chicago wind, though. That's the only thing I can't handle.
Oh, easy. Jacket or stay inside.
Yeah, because that thing will make
you've had
your
AC
cheek
issues.
go numb.
So the secret to wind is you just got to cover up some of the sensitive areas, right? If you got cheeks that are sensitive, make sure those are covered or have some type of, something on them. Ears, hands, cover them up. It's not that bad. When the wind blows in your eyes and freezes the stuff around your eye, that's when it gets really bad. Come to Canada, Ryan. We got lots. Yeah, but you got a crazy man in charge of your country, Crow. Sorry.
Is it still Trudeau?
What's that? Yeah.
It's still Trudeau. How long are their terms? I don't know.
I have no idea.
How
man.
long?
He might
I can't worry about my own, let alone in other countries, man.
Actually, so all jokes aside, and all the feelings about politicians aside, my trips to Canada have been spectacular. Let me tell you that the trip to Whistler that I took to do snowboarding when I was younger, I think I was 22 at the time, 21, 22. That was one of the best vacations of all time. Whistler is some of the best skiing and snow and snowboarding that you could possibly come across. I stayed in Vancouver, which is one of the most gorgeous towns I've ever been in. It was amazing. Whistler was amazing. So, I mean, Canada's the shit.
Yeah, Canada's really cool. I've gotten a chance to go a couple of times. Both times I enjoyed it.
Oh, Canada.
The people are great.
My home, sweet home.
Oh.
Then they got the better. What do you think? They got the better anthem? What do you think?
I don't know theirs, so I don't. What?
I know like the first couple of words. I can't make an educated decision on that.
Man, come on, guys.
Do you? Well, since you know, do you feel like they Spy? Yeah.
I like Apple here. I'm gonna take Apple, guys, off the 72s. I just took it long there. I'm gonna see if it comes back. We have a couple of bottoming area there at the 148.72 mark. So that's going to be the risk here. Market's coming back a little bit, taking my shot there on Apple to the upside here. 149.07 is the entry there. Risk right off of the kind of that bottoming action there, especially that wick we could use too. So to the left.
Tesla looking like it's going to break its lows here.
We are hoping so.
Yep, Tesla actually already threw its pre-market lows too.
Yeah, and then it poked above and rejected the 185s.
I'll show you guys that Apple trade. We got in there using that as support. Previous action here. Looking for that to bounce back, get into the green. We'll see what happens. American Airlines not looking bad. So that's a swing trade on there. Apple will still be kind of more that day trade style. And then I'm actually thinking about a swing trade, but in ConocoPhillips. ConocoPhillips. So we'll see if that comes back. That's an oil trade.
You believe in American Airlines. Someone else believes in United Airlines as they are
Can't blame them.
As they're buying up the $46 calls expiring January 20th, approximately $2 million worth. And I'll repeat that for the folks at home. $46 calls coming in on the ask expiring January 20th, approximately $2 million worth.
Yeah,
I see the volume increasing here as well.
I see those as well. I see one of the blocks of 6,203 contracts that represents 1.4 of that 2 million. So massive sweeps there confirmed. And here's the other block of it, Zunaid. The other block was still that same one. So it looks like there were two blocks. 2,386 and 6,203, and you're absolutely right, totaling 2 million in premium there. UAL, wow, monster spot there.
Boom. Yep. And Morgan Stanley upgrading United Airlines to overweight from eco-weight. In their note, they stated that after 3 years of uncertainty, when the market was either too cold or too hot, 23 could be the year where conditions are just right, potentially delivering earnings of well above market expectation, the bank said in the note on Monday.
Okay, I'm gonna go ahead and get out of my Tesla short here. Gonna go ahead and close the position. I went ahead and took a 1-point loss.
Good spots, Zunaid. Those were massive calls.
Thank you.
They actually looks like someone came in and swept up some American Airlines behind that. I wonder if there's a sympathy trade.
I think we know who that was.
It wasn't me, bro. It wasn't me.
You didn't buy the 1,000 contracts, Mitch? I thought that was you for sure.
I thought it was him for sure. There's no way.
You know, I sold the Tesla, in the back there.
You know, Tesla, interestingly enough, trying to bounce from this spot here. I know we broke the pre-market lows temporarily, but we are trying to bounce here. That area about what, 184? See if I can get that for you here. 184.50-ish seems to be that area. Looks like we're holding it or trying to.
There's Apple. There's American Airlines taking the lift off through the 14s. There we go. Now we're getting through that 14 again. Going to continue holding this one. American Airlines. You guys heard me mention it on pre-market prep about American Airlines. It wasn't like I just started thinking about this one. I've been thinking about this one since last week, really. And I think that this one can have a Santa Claus rally as people buy up those expensive airline tickets that you're having for the holidays, giving them the lift. I think they're going to give out some numbers soon. And once we get closer to the kind of, Christmas time, I think they give out numbers. And this is just an assumption, right? So, of course, I could be making an ass out of myself, but definitely going to be looking for them to release numbers. Hopefully that they say that the kind of the month has gone really great and a lot of buying of this traveling tickets.
Yeah. And real quick, the Crow just got to retweet, reshout, whatever you guys want to call it here. DBGI, absolute mod. This was definitely the winner here of the group that we've talked about here today. That 440 break absolutely gave it to you. Little bit of a fake out initially. So if you had some tight stops, might have been stopped out of that one, but this ended up giving you multiple opportunities. Third time was the charm. Went ahead and printed 5. Looks like we're knifing here, which would be great for another setup. Would love to see this hold maybe 470 and then curl back up on decent volume only to take out 5. So DBGI, if you caught this, congratulations. Great trade here. We might have another setup later today.
SPY trying to come back. We'll see if it comes back. It needs to get into the 403 handle. That's really going to help it there. SPY is battling right now off the bottom, and that bottom area is a big support. So that's why we've seen that bottom around the 402.14 level. We'll see if that holds here. Does it come back through 403, or do we get the takedown towards the 402? We'll see what happens.
Yeah, and MD's right on here. You guys are talking about the airlines. The airlines are busy, but they're still working through this pilot and employee shortage. I actually, on the happy hour, we have 2 United Airlines retirees, 2 United Airlines retirees that are verifying the information that MD is saying here. They are still working through that. That is not in the past yet. We'll see when they do end up filling some of those spots. But really good
thing with that is that when you see that headline hit the tape, is it going to cause a positive reaction or a negative reaction?
Which headline?
What do you guys think? That they solved the pilot labor kind of deal that they're working with right now?
I would have to say that that's going to be positive if it's on the backs of increased foot traffic, right? Because you're going to be able to service those customers if you have your employment gaps filled. If that's not there, I think that's a negative because you're going to have to pay these people. You're not seeing the increased business. So I think it matters, Mitch, what the backdrop is there. But to answer your question, I think we go higher if we get there.
Yeah, and with these call options coming in, I would not be surprised if that is imminent.
I didn't want to say that, but thank you for connecting dot A and dot B for us.
Yeah,
because you're exactly right.
What are you seeing out there?
I'm short Apple via put, so that's what I'm waiting for this one.
That's what it is. We flipped. Don't worry, I got stopped out at that 148.50. There you go. Look at this guy trying to take my money over here, guys.
Hey man, look.
What should I do with Zunaid here, man? Come on.
There were 2 trades I was looking at. It was one was the $100 rip or $100 drop on Apple on the Google. Excuse me, it didn't get it bounced, and so Apple was just the easier one as they went ahead and rejected the 150. And then of course you have Tesla here that's looking to move to the downside as well. But anyway, on Apple though, I'm in via puts. By the time I, could have mentioned it, they were already up 20%. They were already up 15%.
Because I cut them.
It just, it didn't make sense for me to call it out in front run, so I didn't. But since you asked me, what am I looking at? It's my Apple puts over here. Now, the thing is going to be my next trade that I'm focused on is going to be Tesla. If it can go ahead and break this 184.52 to the downside on the 5-minute candle close, I'd be interested in going short this one. But for now, it's just kind of hanging out around the range of $1 of 184 and 185.
Beach Bum Trading. Good morning. Did you just play the Taco Bell?
Yeah, because you just got lunch off of me, baby.
Sorry, dude.
Oh, for heaven's sakes.
I did.
I was like, did I leave a TV on? Did I get one of those Taco Bell commercials? Oh, Mitch, that was well placed there. Beach Bum Trading, good morning. Thank you for all your support. Hope that you're doing well. Hope that your weekend was excellent. Jay Rice, great. Let's have a discussion about this. I'd love to hear what your thoughts are, Jay. Cost, been nasty since the monthly online sales showed decline. You know what I think about Costco? Bring that price into Papa. We'll load up that cash cannon and go ahead and load up to the long side. Jay, what I'm asking here as far as Costco goes, what level do you like from Costco? I take a look at the daily chart here. I think there are a couple levels that jump out. First of all, on this recent move down, I would expect some type of battle or bounce around this 475. If we get to 475, that might be a potential good first ad spot for a long-term add here. Next low we have here is 450. I would consider adding there. And the next low that we have beneath that was 415. We did have a little bit of a knife down towards 400. I guess my question here is, Jay, is do you see us dropping below 400? I would be using some of the weakness here on Costco to actually add shares for a longer term swing or even an investment. Would love to get opinions from the group on what you think on Costco. Obviously, you guys know my bias here. Love the store. Love it to the long side. Jay Rice saying 450 to 475. Bingo. So that's awesome. So I'm actually going to go ahead and mark this on the chart because I don't think this is going to be the last time that we talk about Costco. You've got 450 to 475. Let me go ahead and mark that off here. 450 to 475. That's going to be right in this area right here. Jay, spot on, man. I'd be adding in here as well.
Let's see what we got on the Apple. Yeah, I'm all out here. I'm just going to share my ads and fills. So you can see we went ahead and got in at 2, and then we went ahead and got out at 241 and 290. What I went ahead and did, and again, to not be mechanical about it, is when I went ahead and took the position at 2, looking at the chart at your home, with a crack of 150 to the upside to about 150.50 was going to be my stop loss. When I went ahead and sold majority of my contracts at 241, I went ahead and moved my stop loss to then break even. And then, of course, I finally went ahead and took gains at that 290 as we did go ahead and break to the downside more on Apple. Now, I wanted to be greedy and see if Apple would come all the way down and go red, test at least a previous close, but it was so close. I'm not going to try to get every single meat on the bone. I got majority of it. I'm happy with it. So I went ahead and exited the Apple trade. Now, the only one that I'm kind of locked in and focused on possibly is, again, the Tesla. If it can break this 184.52 on the 5-minute candle close to the downside. If you are looking to go long, though, you can go long with the stop loss low a day. It's about $1.25 of a stop loss.
All right, Angelina's asking about Bank of America. I'll get towards that one, Angelina, for you. I'm looking at Jets right now. Jets ETF, right? We're seeing all the airlines go up.
Yep.
Little part of me is thinking about scalping Jets. And so this would be the scalp off the swing trade. Swing trade can still do what it wants on the right-hand side. That's American Airlines. That's going really well for me. Now, Jets would be a pullback here to 75, and I'll show you guys the levels that I'm looking at. If you look at the hourly, look to the left. Look how you had this price action that it tried to get through, couldn't get through. Even on the next day, you spiked through it, and then you quickly cut right back down. Now, if we look at that 1-hour trend line right here that we just broke out through, we're holding the pullback on that egg. So I would look for a nice push above 1880s here. It needs to hold the 75 on the pullback. I wouldn't even want to see it get to the VWAP. VWAP's around 74s. So maybe the bid gets on the VWAP, but the offer off 75 here gets through 80s. And then looks good for a clear push to 19. It's not a big, risk and reward, but it's like kind of a 2-to-1, kind of a small play here. Jets doesn't look too bad. This is just something that I'm thinking about. I'll let you guys know if I take the trade.
Sweet.
All right, let's do Bank of America. I can do that right quick. Just want to keep looking at Jets here, but I'll take a quick look here for you. Bank of America is all about the daily chart. It was trying so much to hold this daily chart, and it kept coming back. We were talking about it here. Ryan and I had mentioned it multiple days that it was getting these washout and recoveries. Well, this looks like the final washout and not recovering right now. So keep your eyes on Bank of America as it's coming down here. It did not even give the chance to come back towards that support at daily 36.50s, now down to 35.50s. This could be letting go after a big run on the daily chart. So Goldman Sachs is another one that I would watch. It's super strong in this industry, but look how this has turned around today, really coming down fast and now starting to break the daily support. As you're seeing it break the daily support, if this one closes, let's say towards 372, it could close this gap on the daily chart towards 370s and 364s. Next thing you know, it's down big. Be careful on those financials. I'm seeing them start to crack.
This isn't stocks related, but you guys know we still have a sriracha shortage.
No,
Really?
I did not know.
I don't
dude.
eat sriracha, so I didn't know. But
I went to 3 different Publixes and Kroger's and Walmarts and couldn't find sriracha, so I went ahead and overpaid at Amazon.
What about like using like Instacart? Have you tried using that?
Yeah, and that's they
doesn't
couldn't find it.
Instacart just go to the same stores that Zunaid would be able to go to himself?
Yeah, but they have access to their inventory a lot of the time, so they'll be able to determine if it has it or not. Some of them have a better access than others, right? If they've been working with them longer, they've been trying to help them out. But another thing is like using like a Walmart Plus service, something like that can also help you figure out if they even have the inventory, so you don't even waste your time in the store, which I know how that can be. That's definitely frustrating when you're just walking around the store. You're just like, come on, man.
Yeah. So along with the clothes that I bought, I got 2 pack of sriracha as well and overpaid the hell out of it. But got to do what you got to do. And there's a bounce on Tesla. That 184.52 went ahead and held as support.
That bounce lining up with a bounce in Apple as well. And by the way, Jay Wild mentioning SHPH. This is one of those pharmaceuticals that we're looking at here today. First move. This is why we've been waiting. This is why when I've been setting up a lot of these stocks, I've been telling you about waiting and why I'm not trading actively right out of the open. Look what happened here in SHPH. Immediate move down to 253. Then we got that spike up to 3. We regressed from that 3 level, and now we've actually broken through it and we're back testing it. So will be interesting to see here. 314, 315 going to be the high here. I think that is probably in play. No position at this time on SHPH. Great shout here though. I beat the Baldy this weekend. You beat me badly this weekend. I see. Nice win. Oh, are you talking about fantasy football?
Yeah, he beat me too. Ryan got his win.
Did I beat? But Mitch, you have a playoff. Okay, so we're talking about different leagues. Let's be clear. Second of all, I believe that you have a playoff berth locked up.
Yeah,
I don't think I'm making the playoffs, so I didn't actually spoil anything.
Nah, it was just more along. I kind of like, I like that you won. It gives you, your team wasn't too bad, man. You ran into some bad luck.
I did run into some bad.
I think you should just trade it quickly. And so I think that's what's one thing that sometimes happens. Even though we have a strong team, we don't want to give up the strong team to think that we can get a better team. But I know how that is. I had the same battle in another league where I had some wide receivers that I struggled with, and I should have just sold them early.
I look at this, Mitch, and it's a tale. I hate to say this because it's going to sound cliche, and everyone that's played fantasy football has heard this a billion times. It came down to the running backs this year. I got Najee Harris as my top back. He has sucked all year. And I'll tell you something. As far as the person and the player, I root for this kid because I don't know if you've ever heard Najee Harris's story. If you haven't, go look that up. That is one tough guy who's been through a lot of adversity and turned out to have a really amazing life. So rooting for him every step of the way. But boy, oh boy, did he let my fantasy team down. Him and Antonio Gibson.
Taking this Jets trade, or at least trying here.
Anyway,
canceling that, not getting the fill there.
Anyway,
let me see. There's just no volume in Jets. There's not very often that I'm like trying to get an order and then it just sits there for a little bit. So just too low volume in Jets. That's why I don't like using this ETF. Everyone brings this one up all the time, but man, that volume is not there. I'll just leave my swing trade on. No fill there. Just going to stay watching AAL for right now. The swings, man. The swings are back on. I'm going to be doing a little bit more swing action going into the next year because I'm getting back towards my bread and butter next year.
And Mitch, I think that we bottom fairly early next year. I think we bottom. I'll even put dates on it. I think we bottom Q1 2023, and I think swings out of the bottom are going to be where the trade is at. So I'm with you, bro. I'm with you 100%. Let's do it. Let's get these things locked and loaded. By the way, Kirk up 20% today, by the way, Kirk.
One of the things I'm going to be doing in the next couple of weeks here for live trading is I'm even going to take a pause. I'm thinking probably next couple of days I take a pause from my live trading account, and I'm going to start doing some testing for next year. What do I mean by testing? Well, a lot of that is taking the perspective of how do I want to approach the next year. So a lot of times right before the year starts, I start thinking in that next year already mentality of how I want to approach some trading. So I want to start doing some testing in different strategies, whether it be contrarian strategies towards the upside for swings, because a lot of that's going to be getting weak stocks, looking for the trend to continue and riding the trend as far as possible. So that might be using a little bit of trailing stops actions or something like that. So figuring out what works best for you on those trailing stops to ride the wave. Well, that's what I really want to do when we definitely get back towards the bull market is trend trade all the way up and ride those kind of big stocks. So that one thing that you can do is really expand those wins, right? That's what I'm trying to do. Cut the losses to where what we're trying to do here is not necessarily cut the losses overall, but what we're going to do is we're going to ride the winners. When this bull market comes back, I really want to be riding those winners on those swing trades and getting let's say 10, 15, 20% returns versus let's say risking even the 2% or 3%, because that's really where I've gotten that bread and butter market. But it needs to be a good current environment. And right now hasn't been it. We'll see if we turn around. I like SoFi at 450. Yeah, I mean, there's a point where those SPACs, there are going to be some that come back. I know that a lot of people like to hit them, but there will be some that I feel come back and gave you an amazing opportunity to get it really cheap, right? Well, you have to find what that is for you. Jets bouncing off that 75 area, but it's going to stop watching that. Just going to take a look at what else is going on out there. It's still dragging, even though the market's coming back. What I kind of thought would happen, a wipeout towards support, and then we start making our way back. But I think it's also going to take a little bit later in the day, and that's the hard part about it, is that we're getting this later in the day trading where it's making sense, almost even power hour making sense to trade towards the upside. As of late, I can take a look and try to see when the runs really have been. But look at Friday's run at 3 p.m. That was a freaking monster run that you could have been riding. If I look back, 3 p.m. on Thursday also ran. I'm looking back at Wednesday, 3 p.m. ran. This is the trend that I'm starting to see on the daily, which I think is an important trend to notice, is that we've been having a lot of late day runs, early day crashes.
You got Tesla that's bouncing from the lows of about 183.80 range. Patiently waiting for that trade.
SPY bottoming out, trying to come back through the 403. There's Jets towards 1881. Not in it, team. Just going to let that keep going. I think it just shows me that the airlines are really strong if the ETF is also going to make the move towards 19 today. So we're going to hold that size on American Airlines as we're going towards 1415. Remember, original entry 1390s. So looking really good. I could just take this and run for the day, but I just feel like it's had a nice trend. I'm looking for a swing style. So once we get to 1420s, I can take some profit on the intraday and then just let the rest of the trade work as a swing trade, trying to catch a bigger move.
Oh, man.
Tesla, man, that is not looking good on there. Healthcare starting to come back. If you're looking for some stocks that are starting to come back, drug manufacturers are not looking too bad on the day. AbbVie is right above the VWAP. SNY just starting to push off. J&J already up there. Bristol Myers up into the green. The ones that are in the red are starting to make their way back to Lilly, Merck, Pfizer. So look to see if they get back above their VWAP.
Mitch, everything okay on Thursday for live trading?
No trading is going to be on Wednesday and Thursday. So no live trading on Wednesday and Thursday. We'll be having the event, the future of crypto. And of course, on Thursday, we'll have the fintech. So there will be no shows on Wednesday, Thursday, and of course, Friday, we'll have all access. So it's going to be a little bit short of live trading this week, team. Definitely smash the like. We got some events that will be going on, and I will be studying for my CMT exam. So I'm going to be working on that, focusing on that. But what I'm going to do later today is I'm going to have some fun with you guys and do a little bit of education. If you want, we can go through some patterns from my study guide, or I could just put on an educational stream also from maybe our boot camp, if that's what you guys would prefer. I'll let you guys choose it. And that's what it's all about, right? Do you guys want Mitch teaching you some technicals, or do you guys want maybe some video from the boot camp? Can do that one also. And we're going to keep going here, right here on Benzinga. It's 10:37. Got a little bit left here in live trading. We got about 23 minutes. Let's keep rolling.
Why do we promote tulips?
I like
Vicky,
tulips.
I'm going to need some more context on there. I'm not sure what you mean.
I like tulips.
Oh, I think she's talking about the crypto event. She's comparing crypto to the tulip crash, blah, blah, blah. I think that's what's going on. Because you were talking about the crypto event that's happening.
Yeah.
There you go.
But I like tulips.
So do I.
There's Jets, 1883. Got towards its high. I think it's 84. See if it keeps going. One that I'm interested in is Carnival Cruise, but that's just because it's that type of stock. So I'm staying in the same kind of area. But it's not looking like we're getting much movement here. SPY's going up, but there's not much movement. How are the bigger stocks doing? Apple bottoming right below, right where it stopped me out. We'll see whatever happens on Apple. It looks like it's bottoming around the 148.30s. I got stopped out at the 148.50s. But we'll see what happens there. Apple's starting to go sideways there. Let's go to Microsoft. Microsoft is starting to come back. So it looks like the bigger stocks are making a little bit of a way back. If Tesla could just rip back up towards the VWAP, well, yeah, that could definitely help.
Tesla holding that area for support, Mitch. So it's possible that rips if it gets going.
It's just tough. It's a tough trade today on Tesla. The negative news is really dragging it. I would still be looking at it in a bearish sense. I tried to swing it to the bullish side for the semi-truck. You guys saw how that one worked out. But that's how it goes, Steve. We got to keep going, keep battling here. ConocoPhillips, whatever happened to that move? I was taking a look here to see if it was going to hold the 2350s, come back up. It eventually did come back up, but not up enough. It went to 123.85. Now dropping fast. Looks like oil names starting to give up a little bit here. Yeah, ExxonMobil coming down fast also. So oil not being able to hold up. When oil comes down and a lot of things dragging, it's kind of hard to make the markets come up here. Industrials red today, consumer cyclical, basic materials deep into the red. Coal on a big pullback day, aluminum on a big pullback day, silver on a big pullback day. Got to be careful there. It's a lot of pullback on the day like today. Caleb's like, I love him too, man. That's probably like my favorite flower. Well, we won't go there.
Your favorite flower is Mary Jane. Let's not beat around the bush, as they say.
Buds. We had a strong tape Friday. What happened? Said Seekin. I don't know, man. I don't know. Saw the algorithm action. When do the banks want to take back over? Oh, man. I'll be looking for that power hour run, man. That's what I'm going to be looking for. Seems like the power hour has been going lately. All right, team, what's going on out there? Team, what are you guys trading today? What was your best trade of the day? I'll ask you guys in the chat so that we can go over maybe some of the best movers that you guys caught. Not, we can go over some that I'm looking at.
If you believe the market's going to continue to the upside, obviously the strongest one you want to be in is Apple and your Google, but you can also possibly take a look at Netflix, as that one's come back above VWAP, reclaimed it, now going red to green, and possibly can make a move above this 222 area.
Yeah, Google looking strong here, back towards the 101.33s. That one looks like the better hold. Coin.
It's not worth it.
Oh, man.
It's only about 40 grand.
Yeah, it's not worth it to me on the sense that, like, you
Something
know.
weird, though. Hold on a second. Let me just be a degenerate real quick. All right. Oddly enough, the Coinbase contracts are the $58 calls coming in on the ask, expiring this week, approximately $50,000 worth. So someone bought, or someone transacted on the ask, which I believe is a buy, $50,000 worth of contracts and paid 13 cents, 14 cents, and 16 cents. So that's a little weird. That's a solid YOLO for somebody.
Solid.
But anyway, I'm in Coinbase here. My stop loss is going to be this low day crack, excuse me. So I'm going to go ahead and risk $50, and I'm actually going to, it's a bit of a wild trade. So I'm just going to leave my top profit target all the way up here. By the way, look at that $50 reject. We talked about that in the pre-market conversation before the bell at 9:30. But yeah, something's up with Coinbase. I don't know what it is, but I'm in it to win it. I'm trying to risk $50 to win about $200 or so. But your first profit target, if you are looking to scale out, should actually be around this previous close of 47.67, because especially you have VWAP there. So would not be surprised if it goes ahead and faces some issues there, which is about 30 cents away.
Speaking of, so Zunaid, I know you do esports. Have you ever announced or participated in any type of League of Legends esport activity?
It is the dream to host, not commentate because I don't play the game, but to host, it's the dream. I have not, but I have seen the League of Legends finals that happen at Chase Center.
Okay, because one of my buddies who's really, really into League has a really good spin it to win it line that he uses when he plays League against other people, and he absolutely shits on everyone and he destroys them. He starts teasing them with spin it to win it. So I just, you reminded me of that, and I was like, hey, I wonder if Zunaid has actually ever announced or participated in League. Japan up 1 over Croatia, by the way.
Ooh, heck yes. Let's go Japan. Got money on them. By the way, another 562 contracts transacted on the ask on those coins. And look, you're in the money here now. All right, this is pretty much a 1-to-1 trade. If y'all want to close it out, if you did take the idea, this is where you want to do it. Something's up. You know what I'm going to do? Actually, I'm going to close this trade and I'm going to buy 2 of those lottos. That's what I'm going to do. So let's go to coin. Let's go to $58. Something weird's going on. I made $50 on the trade. I went ahead and bought 2 YOLOs and spent $40 there. So I don't know what's happening, but I've got $50 worth, $40 worth. But now the real question is, am I going to spend money on? Let's see if I want to do that. I could do that. All right, here's what else I'm going to do. I'm going to buy just one $48 call on coin. I got filled at $1.98. Stop loss for me is going to be about the break of 46.50s here. But anyway, I am hoping to go to Denmark for esports, though. I'm trying to figure that out. If I can do that, that would be sweet. But we shall see. Yeah, they haven't gotten back to me. So, I'm going to cry later about it.
No worries.
I'm going to cry later on.
I actually have a GIF that shows Zunaid later on, if anyone's interested in seeing. That's actually a meme, not a GIF, but it describes your feeling.
I'm down to see it anytime. By the way, you missed my rant earlier, Ryan. I'm going to a buddy's wedding later on this week, and I had to buy like shoes and shirts and whatever. And so if I got it ordered at my place, it would arrive on Friday. But if I got it delivered to my parents' place, which they live about 25 minutes away, it arrives on Wednesday. So it's like, it was the most annoying thing to get everything delivered there. And now I see Amazon just shipped 6 of the 9 packages. And I'm like, you couldn't just deliver them to my place and just get it to me on time? Is the most annoying thing I've seen.
Take that.
First world problems. First world problems.
They don't go down your street, bro.
Apparently not. Anyway, here's Tesla moving up about $1 or so away. Well, now $2 away from VWAP. 101 on Google. Oh, let's see what Netflix is doing. Is that popped up? Yep. So that idea of Netflix is working. But the ultimate idea is above 322.
All right. Here is what Zunaid. Here is my meme to describe Zunaid.
Yeah, that's pretty much going to be me if I don't get this Denmark gig. This is going to be me, 100%.
Okay, I will send that to you so that you can tell others about that as well.
I will do that. I will do that. They'll be like, they'll be like, hey man, what's going on with you? I'll be like, this is it.
This is what's going on with
Luke or Jason are going to reach out and be like, hey, you haven't answered your emails or your Slack. What's going on? And this is going to be my response. That's it.
That's Zunaid. Oh, way to take that to the next level, Zunaid. Love it.
100%.
Hey, Ken Murray. Good morning. The man from down under, Ken Murray, trading live from Australia. S-Bucks, Starbucks on the daily chart looks overbought. RSI and MACD looks like it's topping. So you're looking to trade that down towards that 90 strike.
I'm looking at buying out of the money swing puts for January. To me is a little too close. That data is going to start eating up quickly. That's my one concern right off the bat there. And let's see what he did say Starbucks, right? Or just make that up for some reason. No, he did say Starbucks. Yep. Can't even spell Starbucks.
I'll throw in the news there for you. Deutsche Bank downgrading Starbucks to a hold, but raising price target to 106.
Price target rearrangement there. That's all.
Yeah, I don't know, Ken. I am not sure. Maybe you can nibble on it, and then if it goes ahead and breaks 100, you can go ahead and add some more.
Don't ask Zoltan in the chat.
I'm not sure.
Zoltan's a big Starbucks bull. I was messing with him in New York. Every time I saw a Starbucks, I was like, yep, that's going out of business.
Similar to your Boeing call.
Hey, gotta do it.
Terrible.
Hey,
Just
one day, Zunaid, you're gonna give me a call. You give me a call and you're gonna tell me, man, you're right.
Well, it's nice to have infinite amount of time on your
That
hands,
is true, right? I mean, hey.
Breaking news.
I didn't give time.
Breaking news, Panthers expected to release Baker Mayfield.
I am surprised. What? No,
That
can't be true.
That's because the truth is,
I'm being sarcastic.
They're doing full rebuild. Once they traded away Christian McCaffrey, I mean, you can forget about the Panthers for 3 years. Trust me, I live here. I know it.
Oh, you mean I thought you meant the States. I was like, what? Man. No, it's because I was looking at the World Cup score. That's why I was in a different mindset. But yeah, Japan won. Oh, let's go. Come on, Japan.
Yeah, I got my pick for the tournament. You guys ready?
Who's your pick for the tournament, sir?
And this is going to be a surpriser because it's going to have to surprise already in the next kind of bracket there to kind of make this happen. But it's going to be England wins the World Cup.
Weren't you initially picking Argentina or something?
No, did not pick Argentina. I was more sticking to Brazil. But now watching the games, you got to make a new prediction at this point, right? You got to be able to see the games and tell who has the strongest form. In my eyes, England has it, and they're going to beat France and upset them. Once they upset France, the momentum is going to be with them, and I think that will carry them through the end of the World Cup.
All right.
Because they'll beat the champs. If they beat France, they're gonna feel really like they got a big chance. Does it mean that the France game's easy? No. And I actually lean more that France has a better team, but they're just not going to be able to pull through. We'll see.
Yeah.
Believe it or not, England has been one of those teams that has really strong fan base. They've been waiting for a long time with the talent that they have. They have talent, and no one can tell me that they don't have talent. Like Rashford. They got so many people on. Like their lineup is good front to back. That's what matters. I think that's what matters is because they're Premier League. That's my little sleeper there, England.
Yeah, I'll take the other side of that. I'm with Tiny Pie Media here. I think France and Mbappe are going to destroy England.
That's cool. I mean, I picked France to win the last World Cup, so
yeah,
I'm not going to pick them to win this one.
And they won. So
I'm not going to pick. I'm not going to pick this one.
No,
you know what I mean? You got to go with the team that's doing the best. I think the team that's doing the best. Look at the goals that England has scored. How many goals have they scored compared to everybody else? Does everybody even know that number? Ooh.
I'm looking it up. I don't know it off the top of my head. So you got me there.
Yeah, in the first game they scored, I think it was 6.
Yeah, they have the highest goal differential.
Yeah, that's a big thing there.
Over Spain.
It's a big thing.
And I mean, they played in a group with the U.S., Iran, and Wales.
I mean, Wales isn't the worst.
They're the worst in the group. They lost to Iran because of the red card.
I mean, I'm not going to say that they're worst in the group.
I mean, they're ranked last in the group.
Who are you going to say is the worst in the group?
I would say Iran. Just because they got the win doesn't mean that they're not.
Yeah. No. I'm
going based I'll just put it like that.
I'm going based off points, but I know.
Yeah. I'm just saying like overall team. It's like saying that Belgium's team sucks.
They had a really rough year.
They're the number 1 ranked in FIFA.
Had a really rough World Cup.
But can't you apply that same logic of yours of like you got to see who's playing better now and make a decision? So if Iran was playing better and if Belgium currently played bad, you can't reverse your principle and back the other way.
I mean, you just overall means like in the long run, if they played 100 games.
Oh, I agree. Belgium is definitely better in that sense.
You know,
but I'm saying
exactly.
The reason you picked England though was because how they were playing today.
Yes, so I'm talking about the World Cup. I'm not saying that I don't like Wales, of course, in the World Cup. I mean, that's kind of an obvious one, right? I mean, they're out.
Yeah.
You got to go with the hot hand for the World Cup.
Well, we'll know next week. England, France, of course, 1 p.m. Central Time on Saturday.
Oh, I'm excited for that game.
We will know.
The only thing is, guess what? I can't even watch it, team. I'm
Why
disappointed.
Can't you watch it?
Because I'm gonna be doing my CMT crap.
Like your exam?
Yeah, my exam. Kind of frustrating, but it is what it is. I'll watch it afterwards. And maybe because I don't watch it, England wins, right? Who knows? That's how it usually is. If I watch my teams.
The Mitch victory lap on Monday, it would be epic. If you didn't watch it, and after all this smack talking, England ends up winning the victory lap. I'm looking forward to that now, frankly. If that happens, I'm looking forward to the Mitch victory lap on Monday.
Because the best part is if France wins, they're the favorite.
Yeah, it's like you should have, right? That's what was expected. Yeah, I'm with you.
Well, it depends on what happens with Brazil, but yes.
They're going to be favored at least towards England. It's not going to be by much, maybe a slight favorite, but they'll be favored.
Let's see what is.
I'll tell you one thing. It'll be a surprising, and I mean, hey, you guys wanted my bold pick. There's my bold pick.
Yeah, no, I do like it, and Mitch, let me just be very, very clear here before we sign off for the day. Yes, I do want to hear picks, and I do want you to go out on a limb. And I may not agree with you on all of them, and that's fine. That's why it's so much fun. That's why I like
the World Cup.
That's why. And we'll take the temperature here for the people that are remaining, the old faithfuls that are sticking around. How much would you like to have a fantasy or sports podcast with me and Mitch? Would anyone here like that? Because I'll be honest, every time I think about that, I get more and more excited about it. We could try to get on guests and stuff like that. It would be so much fun. That'd be a lot of fun. Let me know if any of you would be interested in that. Because Mitch, I think we've got some good differing opinions, but I think we both really love sports, and I think that would go over well.
Yeah, that's what's important sometimes. It's just showing the opposite side too, right? I mean, no one always wants to be on the favorite, and no one always wants to be on the underdog, right? I mean, that's just how it goes. AAL did pull a little bit back there, but I wouldn't say it's falling. But I mean, the best thing to do now, and what I do on a trade like this, is I could either look at the 15 or the hourly. If I'm looking at anything other than those two time frames on American Airlines, I'm trying to do myself a disservice. What do I mean by that? Since this is a swing trade to me, I shouldn't be going into such short time frame action, because that's how you get scared out of a trade a lot of the times. A lot of times if you're in a swing trade and you get scared out of a swing trade, a lot of that it was because probably you were on like the 1 minute action and you see like little pullbacks like you saw here from the 415 to the 411 and you get scared. You're like, oh man, it's coming down. I got to get out. And then the stock never even comes down on you. Not saying that this is you guys out there, but saying that it's happened to me plenty of times. And then what I realize is that if I'm swing trading this, why in the hell am I looking at it on a 1 minute time frame?
Yeah.
That doesn't make sense. Now, if I was day trading it, trying to get the momentum push, maybe a scout type of trade, or that was the mentality, then it would be okay that I'm on the 1 minute. That's why I always tell traders to sometimes think about their trade and also what time frame they want to be watching it in. And it's a very important thing to understand what time frame you're truly trading it. Because if you don't, then what happens is other shorter time frames can freak you out. And bigger time frames are going to keep you in the trade longer. That's why I'm looking at the 15-minute here or the 1 hour. Because look at the 15-minute in American Airlines compared to the 1 minute. 1 minute is scary. 15 minutes shows me trend to the upside.
Yeah, very well said there. You definitely don't want to be taking a look at the minute chart when you're swing trading 45 days out, this, that, the other.
Yeah, there's no point.
About it.
Yeah, it's not going to give you an advantage, right?
Yeah. All right. I'm going to get out of here and then I'm going to get back
Same.
on Squawk and all that other good stuff. So I'll catch you guys tomorrow for the last trading day that we're going to have together.
Later, my friend. Have a good one.
See ya.
All right. We got Zunaid out of here and Ryan getting out of here too. We'll keep it going here. Don't worry, team. Now I'm going to give you guys the vote. Do you guys want to go through some patterns today, or do you guys want me to bring some boot camp educational material? Put a 1 if you guys want me going through my study guide and showing you guys what I'm learning on the CMT. And put a 2 if you guys want to get some more boot camp education streams. I can go ahead and put that on. So put a 2 for boot camp, put a 1 for a look inside my study guide. I'll actually just pull it up here and we can kind of roll through different areas. You guys we'll take a little bit of a vote, kind of walk through it. It's up to you guys. I'll do what you guys want to do. All right. We're seeing some 1s and 2s. Oh yeah, Kyle, that helps. All right. Seeing more 1s, but I'll give it a couple more seconds to see if some 2s come in here. I'm gonna actually start counting these because if not, I'm gonna get to the point where I ain't gonna know. There's about like 5 1s. We got about 3 or 4 2s. So let's go, team. Let's go. Determine what we're getting. There's some more 1s in there. I see 7 1s. Looks like the 1s are gonna win unless the 2s come in here really quickly to sweep it up. But let's keep going, team. We'll see what else is going on out there. Let me go ahead and pull that up. So and to give you guys the insight, I mean, this is me taking the time instead of putting a little replay for you guys, actually going through what I've been studying on the weekends and putting hard work time into. So trust me, this is not too bad to go through here. So I got you guys. I'll go through it. Of course, this is going to be like kind of text. So if there's any point in time where we're going through something and you guys want to maybe call out maybe a pattern that you guys saw this on an actual stock, call it out in the chat. I'll take a second and actually put the chart up to see if we saw that pattern. I think that that's what we should do today. Maybe just do some pattern talk. I can do theory talk also, but I'll show you guys what I've been working on here, and then we'll go through some of it. Let's roll through it. Of course, I'm not giving this one out until I kind of build up my book club, where I'm going to be kind of walking you guys through probably some of this study guide eventually. But stay tuned for that, team. I know I've given out the first one, the first study guide, but this one is a little bit more expansive, and I don't want to confuse people and give them something that they get confused on. But here you guys have it. You guys will get some insight into my outlook here. Let me put this on the full screen here so we can just roll through it. Let me know if you guys need me to zoom in here. I can zoom in a little bit further. Let me just put it to fit there. That's going to be a little bit better here for you guys to see it. All right, let's roll through it here, team. We're going to go to it. We could do all different types. There's indicator talks first, like a couple of good trading rule tips, right? I think this is always important. We covered a great deal of trend trading. Definitely writing the trend is the most profitable use of technical analysis. That's why you always hear me talking about that for kind of swing trading. The trend is your friend. Don't buck the trend. That kind of talk out there. Trend system parts. How do you trade on trend and understanding that? What's the statistical outlook for that? How you can use maybe bands to come and be buying and selling, but going to completely roll through this. Going to get more towards the patterns here. So that's just kind of trend trading, just to give you guys an outlook of how expansive this association really makes it. And I think it's an important thing, like moving average, convergence, divergence. How do you use that really? How do you maybe use a momentum to kind of give you validation for that crossover move? Well, there's a lot of different strategies that you guys can use, of course, trying to take advantage of that. But let's get us to some patterns here. I want to go ahead and get us to the patterns out there. Let me just scroll down here, get us to the patterns here. There we are. Now we're talking some patterns here as we get into some bar chart patterns. Of course, bar charts are something that I feel like there's not too many people that use this. Bar charts are definitely a great way to kind of trade. I would say that you guys sometimes look into using bar charts. Bar charts, of course, are going to help you see the pattern more in an easy manner. What do I mean by easy manner? Is that it's going to look cleaner like this, right? You're going to have price action where it's a line and you're getting that line through there versus, let's say, using kind of candlestick patterns that kind of get confusing. So you can either use lines or open close candles like the bar candles. I really like those. Let's take a look at some of these patterns, right? So the first one we're taking a look at is a double top. Of course, you guys in the chat, throw up a stock that you guys feel did this pattern today, or maybe on the daily chart that you guys seen this pattern. Go ahead and talk about it. All right, so what's a double top and what does it consist of? It consists of only 3 reversal points, 2 peaks separated by a trough. What do we mean by peaks and trough? Moves up to the resistance, that's peaks. Troughs are these down moves, right? And so one thing that we can learn from is that whenever we're getting these kind of little bounces, sometimes you're going to get a break through the support, and then we're going to be looking for pullbacks. Pullbacks are when it breaks down, comes back to that support line, and then continues that break, right? Throwbacks are when it breaks on the top side of this and pulls back. But double top here consisting of only 3 reversal points. What does that mean? Well, that's an up, down, up, and then through that level on the support, that's going to give you that break here to start looking for the double top. The initial pattern must enter from below the trough price. So below the trough and then come back to the pullback, hold that support line, not really get above that and reject it. That's what you're looking for. The best performing double tops is an Eve and Eve double top pattern. These are tops with rounded and wide levels. So sometimes you'll get these wide kind of price actions where it rejects for a long time off the resistance and then does the turnaround. All right, we can keep going from the double top. There's rectangle entry towards the upside. And this is another thing that I start using, right? We talk about this constantly, is kind of the rule of 3 and how that plays in, right? You get the up move, down move, up move, down move, up move, down move, doesn't break the support, holds that what they call a shortfall, where it retraces about like half of the move and then gives you that breakout above resistance. Breakout sometimes are going to give you that throwback look where it breaks out above there and comes right back towards that resistance line and then continues the pattern. This is a rectangle with an entry up and a breakout to the upside. All right, then we can keep going. There's the triple top with a breakdown, right? And so the triple top is still resistance line being drawn, but on this time where the double top broke through, it actually comes back to resistance and then gives you that breakdown, but still giving you that pullback opportunity to get that knockdown on a triple top. triple bottom, right? Very, very similar. One thing that we're going to be looking for in a lot of these stocks, right? How do these bottoming actions happen? Well, same thing. 1, 2, 3 bottoming actions, breaking through the resistance line and then holding the pullback on a throwback. Not a bad outlook there for the triple bottom breakout to the upside. All right, we're going to keep going here. We'll take a look at some different kind of trend lines, right? And so one thing that I've been kind of deciphering and trying to help traders out is understanding whether something is a ascending or descending, right? And so one thing that I think that we need to kind of learn, team, is that when we're looking at patterns like this, right, and we're trying to determine what kind of pattern is it, well, if it has a horizontal support line and the trend line is really going to tell you more about the pattern, and this is a descending because of the way that the trend line is going, right? And so that's what I started kind of making it easier on, is just looking at the trend line to determine, right? So this one's still descending, but this is a triangle break up. And this is a descending triangle with a break down. And so this just shows you that sometimes, even though the pattern can look good, you could get that breakdown of the pattern and it continues on the downside, just like you could get the break up through the pattern and it holds that pullback. Now, of course, when you're looking at these, I will let you guys know that the breakout to the upside is actually more common on a descending triangle. It happens about 64% of the time, but the upward breakout is more reliable and 47 to 16% gain. And so if you're looking for that, you want to be looking for these to break out. If you're looking for these percentages and where do I get these percentages from, you want to be looking at a book that's Bowalski's Encyclopedia of Patterns. He did a lot of research to understand these. And of course, I would say that maybe his results weren't the best, because if you look back, of course, you need to be well defining these patterns to the point where you could actually have it in a non-discretionary manner. But he did get a lot of statistical data in these patterns, and it's one of the ones that is followed. And you can see here, ascending triangle, right? So I talked about the resistance line here. Now this is the horizontal support. In this case, it's now resistance. And now you have an uptrending line, which makes this the ascending triangle with a breakout down here. And so breakouts just means that it's going in the direction, right? What you're going to be looking for, is it a pullback or a throwback? Throwbacks are going to be on the top side. Pullbacks will be on the downside, actually. That's why sometimes that pullback term gets used incorrectly in finance, but that's just for technical analysis and how we see it, right? Throwback right here, right? And so this one's a symmetrical triangle, right? And this happens often where you get two trend lines coming and converging on a certain spot. A lot of this is going to be those symmetrical triangles. And you can see this, that the volume usually trends downwards during the pattern formation 86% of the time. So that's one way that you guys can be looking for that symmetrical triangle, is also look at the volume. See how the volume is declining into that breakout spot. And then a lot of the times the breakouts commonly occur 73 to 75% of the length of the triangle from the base to the cradle. And so if you measure that out, you could also put it sideways to look for when the timing should break out. This is one way to go ahead and get you that next lift. Mitch, is this coming from all this coming from the CMT book? Yes, all this is coming from the CMT books. You guys know it's such an expansive book. I have it all the way back there, but it's 760 pages. So what I did is I create my own study guides from these big books, and then go through this study guide. This study guide isn't small here by any means. If you guys see, it's 141 pages. So it's like 760 pages to get through that. That book is so boring to me. One pattern goes for 100 pages. Well, the truth is that I just copied and pasted here. Of course, I can like shrink this down, but I also have it zoomed in here, so it's a little bit bigger. But the key here is to learn, right? And so there's so much here that you guys can be learning from. Broadening formations with the breakout to the upside, right? I like patterns, so I always look at patterns all the time. I feel like my eyes constantly see patterns. Some people don't. Some people never see patterns. They're just not geometrically like looking for that in life. I look for patterns all the time. whether it be trends, whether it be patterns, whether it be things that I see in, maybe psychology. I'm always looking for trends. Patterns always kind of come in with these trends. So I look for that. Can you purchase that book from Amazon? Yeah, you can. But the only thing is, this book is expensive. The book is like, I think, close to $300 if you want to get the book. But you can maybe find it used. So that's what I would look into. If you can find one that's used, well, definitely you can get that push to the next level. Can we get these study guides, Gary? I'm going to be sharing it with certain people that join kind of the book club, because the truth is, the matter is that this is a lot from a big book, right? I don't want people passing this around too much. It's not really something that I should do, but one thing that I do for anybody that's really trying to get to that next level, reach out to me. I'm always willing to help you. All right, let's keep going. We can take a look. The SPY is getting some lift there, so I wanted to take a second here to just kind of show you guys the SPY pushing strong. AAL past 1420s here. Going to go ahead and take some profit on that AAL. Already hit it there, 1420s. I took out about half of the trade there and going to let the rest of the position work. Already back into the green, even though we lost on that Apple trade. So that's a good day for me. SPY starting to push up there. Not looking too bad. After that bottoming action off the 402.14 area was such a good outlook to kind of get that bottoming on the SPY. Now coming back there after that push down. 14.29 doesn't look too bad on American Airlines as we're coming back towards the 14.50 area. If we can close above 14.50 today, we're looking golden on this one. We'll see what happens. Let's get back towards the training and education action here. Book club, where do you sign up, Kyle? I will be actually bringing out the sign up sheet for that in the next week. So stay tuned, Kyle. You'll be able to sign up for the book club. All right. And for the name of the book, Gary, I'll help you out in a second. I'll give you the ISBS code or whatever in a second. Just got to pull the book. It's back there. I don't feel like reaching for it right now. Let me keep going. Let's get towards some other education here that we can learn from it. Rising wedge breakdown from a climax peak. What does that mean? I've seen this pattern happen often. This was actually one that caught my eye that I've been seeing often happen. And so that's kind of a big push up. And then you're starting to get these kind of like little patterns in between. A lot of times I see this pattern and I don't know when to draw the trend line. Well, you see it here. It's kind of like a wedge in pattern on this side of it. And you have to kind of leave that climax peak alone. A lot of times you'll even get that ride up and then it actually comes all the way back down. You guys can see this also on the downside where you get this hard peaking down action. Then you kind of get this little sloping action to the downside. And then you get a breakout and a big throwback towards the upside. This happens often too. You just got to be looking for this. You need to be looking for at least 5 reversal points to touch in between this to show you that it's really kind of battling between here and gives you that good breakout towards the upside, at least for this declining wedge with the breakout up. All right, we'll see what happens. The cup and handle, you guys know how we'll call it the bowl. This is the bowl. Then there's the handle here towards the upside. I look for this one a lot. So this one actually shows up. I like this. And a lot of times you'll get this kind of up action. You'll get a little bit of a pullback on the handle, and then really it starts going. All right, you can see here the famous head and shoulders. Head and shoulders top with a breakdown. This one's actually a very famous one. Everyone talks about the head and shoulders, but I'll kind of leave that there so you guys can see that also. And you're going to see a lot of the times, I think, in this market, especially on the bottoming for the overall market, you'll see a lot of these inverse head and shoulders, which is kind of a head and shoulders bottom with a break up to the upside. I feel like you're going to see a lot of these. And then, of course, the flag pattern and the pennant patterns, they're common. One thing that I would say about the flag is you have 2 trend lines to the downside. That's one way to understand that it's a flag versus a pennant, because in the pennant, you have an upward trend line and a downward trend line. But that's just how you guys can look at that. One thing to note in Boowski's research there, he said that flags preceded by a rise of 90% or more have almost a 0 failure rate and an average return of 69%. So if there's one area that I would be looking to trade flags, it's after a rise of 90% or more. after you've gotten a huge, big rip out on the stock, a lot of times they'll do this flagging action and give you that continuation move. All right, how do you reach out by email? You can always reach out to me, Mitch@benzinga.com or shows@benzinga.com. All right, let's keep going. We're going to see what else is going on here. I can get through all these, and one of the things that I like that it does is it starts giving you outlook here, right? How can you be using multi-patterns to try to trade a stock? Like here, it's X, right? Well, you guys see here, for the head and shoulders pattern, it kind of went into a head and shoulders bottoming pattern. It breaks out. They're using that peak to understand that, okay, now you're getting that breakout, right? 4.93 points. They're measuring that, and they're going to use that as the target for the upside on the flag here. And it actually does give you that breakout on the 4.93 points right towards that target. How you guys can be using that flag, and of course, the flagging pattern, measuring it there, and then getting that next step up. Not a bad move there in US Steel. Could make this chart a little bit bigger, but hey, that's how it is. And in the book, of course, Bałowski, you guys can check out this site. This is the site that I'll give you guys. If you guys want to learn a little bit more about patterns and you don't want to get the book, well, go to thepatternSite.com. Giving you guys some insight here, giving you guys the good stuff. And you guys can check out some of these patterns and how Bałowski broke them down. Then, of course, there's short-term patterns, right? Like gaps. I think gaps are definitely important to understand. I'm not going to get into all these gaps because you guys would get confused, but there's definitely a lot of times where we've been seeing this kind of action, right? The dead cat bounce, right? Well, dead cat bounce a lot of the times gets confused, right? So I'm going to give you guys the outlook here on dead cat bounces, right? What does the book say? Well, the book says a lot of times we're looking for dead cat bounces to show up after down gaps. So when you get a hard downside action move, gives you that down gap and then comes back up towards that level and then fades right back down. That's going to be more of your dead cat bounce and how often it works. But of course, this is one thing that you got to realize is that it's really all about understanding that it's a push back, a graceless term for a failed rally after a sharp decline. And this is why people struggle so much to understand, is it a dead cat bounce or is it a new rally? Because it only really defines a failed rally after a sharp decline. All right, we can keep going. Inside bars, you guys know a lot of people trade those. So keep in mind. Then you got like things like the hammer and the hangman, shooting stars. I think these are important, but these are kind of more understanding candles and within the candles, right? And so shorter time frame, even looking at these like dragonfly dojis and gravestone dojis are definitely important to understand. Dojis overall, a lot of people don't understand dojis and don't understand these patterns. Then, of course, you got multiple candle patterns that you guys can look at, bullish engulfing patterns, bearish engulfing patterns. There's so much to learn in technical analysis overall. This is why I try my best to try to bring in a lot of this conversation, but you guys got to really do your research to understand how they work. A lot of times we've been seeing these happen in this market, which is rising windows and falling windows. What do I mean by rising windows? Well, a stock that's been pushing up, right? It up gaps, let's say maybe on earnings. This was the earnings day. Then you get a little bit of a push up. It pulls back into that window, right into that gap zone, and catches support into that gap zone, and then gives you that lift back to resistance. We've been seeing a lot of these stocks happen, especially after earnings, getting that lift up, pull back into that gap, and then a break up. Same thing we've been seeing also for falling windows, right? Where you're seeing a stock come down, it gaps down, it gets into that gap zone, and then eventually comes right back down and continues the trend. One thing, of course, as real bodies get smaller, it implies that the prior trend is losing steam. The larger the real body, the greater the force of underpinning the move. The more technical signals, whether Eastern candles or Western, that confirm a same support or resistance level, the greater of the chance for a bounce from support or decline from resistance. Of course, there's so many kind of tips that this book gives you. One thing that it does really get into where it gets difficult is understanding cycles. Once you understand cycles, I think this is what economists do really well, is understanding, are we in a dominant cycle? Are we in a harmonic cycle? This is where it gets really confusing. So I'm going to just roll through this. If I talked about this stuff, you guys would be like, whoa, whoa, whoa. You guys are losing me here. But that's what it's all about. And then it gets into a lot of option talk, right? And then understanding how that works, understanding how, delta and gamma and vega and theta and Rio really works, right? It's an important outlook. Another thing that I think it does a really great description on is understanding the VIX. VIX is something that gets confused so often. A lot of people like to think about it and not understand truly what the VIX does, right? What does the VIX do? Well, truly, if you look at what the VIX does, it's an indicator for 30-day implied volatility determined through the use of the S&P 500 index option prices. So really, it's just a 30-day implied volatility outlook. And I think it's an important thing to understand this right here. It's the VIX and the expected 30-day movement of the S&P 500. This is truly why people looked at the VIX for a very long time. If the VIX is up towards 31 or 34, you can expect in the 30 days a 9 or a 10% move in the overall market, right? In the S&P 500. Now, when the VIX is down there towards, let's say, 20 or 17, we're only talking about a fixed 5 or 6% expected move in the next 30 days. This is why when you get those big jumps in the VIX, you're looking for that SPY overall to keep moving. Very good way to kind of take a look at this is understanding how it really works for the VIX, right? What does the VIX do? I think that's an important thing to do. And how you can take the outlook there is just by dividing the VIX by the square root of 12. That's going to give you the implied volatility for the expected one-day move for the stock. VIX is definitely something I feel that a lot of traders don't understand. So if you want to get a better understanding of VIX, I definitely say you look into what exactly it does and how is it calculated. It's going to help you there. Then we get into a lot of more complicated outlooks there. Insider trades, how you guys can be using that to maybe look at stuff. Short interest, right? This is one thing that my man AB uses often that I gotta give him a shout out every now and then. My man AB tries his best to bring you guys some things that maybe even I don't look at often. He looks at the American Association for Individual Investors, the IIAA sentiment, the AAII sentiment report. He looks at this all the time. I see him pulling it up all the time. And he's really looking at bullish and bearish advisors, how they're looking into the market. This is how it plays into it. And I think it's an important thing to catch. There's understanding sentiment. But one thing I would say about sentiment is that it doesn't really give you kind of more of a leading indicator. It's definitely a lagging indicator. And so one thing that I look at also when you're looking at sentiment reports is understanding that when you're looking at sentiment reports, we're really just looking for extreme moments. It's not looking for the in-between. When the bulls and the bears are battling each other, that's not going to give us an edge. But if everyone's bearish the market, eventually we've seen it. We get those really big pop and rallies, right? Those dead cat bounces. Why? Because everyone starts leaning on the bearish side or everyone starts leaning on the bullish side. So there's a comment and quote that Dennis Dick has told me, and it's really stuck with me. One of those quotes is what? Is that the market likes to hurt where it hurts the most. And so with this being mentioned, I think this plays exactly into sentiment reports. All right, we can keep moving here. I can go towards some different areas. Eventually, you start getting into understanding open interest with options. I think this is also something to understand. I personally still don't do this, and I think that I need to start looking more into this, is understanding how open interest affects stocks and looking into that to see if I see any unusual open interest to kind of understand what's going on there. But of course, it's always important to understand the direction of the trend, the change in the open interest, and the interpretation from that, because a lot of options traders are doing this. They're looking into open interest and trying to understand the trends. I use these on the extreme and then put my contrarian hat on. Yeah, that's what it's about. It's not about exactly always just doing it the way that they wrote it up or the way that they expect you to kind of look at it. For me, sentiment reports are more to understand than to actually use as an edge. All right, we'll see what else is going on. What's up out there? I got Bowalski started in chart patterns from 2005 edition, had it since. He put out a later edition in 2014, both still available in paperback 20 to 25 range on Amazon. There you go, Voodoo. It's not a bad one to get into. And definitely, it's going to be one of those books that we go through in the book club. So stay tuned for that, team. I know a lot of people are excited about that. I can't wait to start that. That's going to start next year. I'm just trying to get through this CMT studying action, get through the exam, and then giving you guys, of course, the book club coming starting next month on January, the first week. We will be starting to get into a book. I'll let you guys know what that book is next week. All right, let's keep going. We're going to give you some time also to buy that book, of course, and we'll be going through it chapter by chapter as we get through and meet up, because one of the things that I really want to do is get to the point where not only are we getting better, but we're getting better together and coming together to learn things and kind of really not only talk about the theories, not only talk about the information, but actually go and use it. Big lesson there. All right, one report that a lot of people don't look at, which is, of course, the Commodities Future Trading Commission, the CFTC. The CFTC makes large traders report their positions on a weekly basis. This is one thing that I would keep in mind on the long term to understand. This is one report that I don't think gets talked about often that I would start paying attention, which is the COT reports. Pay attention to that, maybe learn what it is. All right, the CET, what about CMT exams? So CMT exams is really what I'm studying on. I'm trying to get my level 2. That's where you're getting this information from. So that's an association for technicals. What it is Chartered Market Technician. Still seeing the lift in AAL, so looking good there. SPY pulled back to 402.40s. We'll see what's going on there, but it's been a battle. It's about 11:27 in just about 3 minutes. We'll get you guys to Benzinga Live. That's coming up next. I'm going to pull down this, and definitely it starts getting into statistical outlooks, so you guys can take a look at that, understanding that. And then really, I think what the book does a really great way is when it gets into building a system. If you really want to take that next level, we're going to have to worry about building systems. That's what really matters. I think that if there's anything that the book has really taught me to do is that looking into technical methods and market selection of how we should be building up systems. Statistically, how can we test them? What are the things that we want to be testing for? It's a big understanding that we need to get through. But I'm going to pull down the lessons for today. We went through a lot of kind of pattern outlook there. That's really what I wanted to take time on. But I wanted to roll through there to show you guys how expansive this education is. And that's what it really takes to get to the next level, right? If you really want to be a master at technical analysis, you're going to have to do the hard work, get the books that you need, and keep digging into the financials. All right, getting out of this, I'm going to go ahead and pull this down here, and then I can get back towards the chart action. And we can take a look at maybe some sector industry analysis, what's going on, intermarket, what's moving right now before we get to Benzinga Live. That's coming up in just 2 minutes. All right, the name of the book, just give me a second. I know that you guys wanted it, so give me 1 second here. All right, there you go. Boom. Damn. It's long, team. I'll give you the ISBN and I'll throw it up in the chat. So if you guys want to check it out, you guys can check it out also. And if you want to learn, maybe check out our educational schools. We definitely have great educational schools. And one of them is, of course, Mark Petrino, CMT. So you don't want to miss that. I'll give you the ISBN here. I'm just putting it up in the chat here. I don't know if the 2's needed, but there you guys have it. Threw it up in the chat there. If you guys want to check out, that's the ISBN. I'm going to be wrapping up, giving you guys the Benzinga Live in just a couple of seconds, but definitely smash the like button, guys. Going to keep going with my AAL swing trade on the day. It's working really great here. I can throw up my chart just really quickly before I get out of here. We'll look to see if it can continue working back towards the 1450s and then really start trending towards 15. That's where I think the daily trend is taking us. But of course, we'll see what happens there. I'm looking at a trend line here to come back and really break through the 1450s. Keeps going up towards 15. We'll see what happens on this name. American Airlines getting a nice little push today. UAL getting a nice little push today. DAL getting a nice little push today. Looks like it wasn't too bad going for these airlines today, as we are getting a little bit of love in Southwest even. We'll see what happens to these names. Going to go ahead and wrap it up and get you guys over to Benzinga Live. That's coming up next. Going to go and play, of course, the future of crypto. We got it in just 2 days, team. Just 2 days. December 7th. You don't want to miss it. Who's going to be there? Of course, hit the thumbs up. The future of crypto.
What is up, everybody? Happy Monday. Welcome back to another episode of Benzinga Live. Hope everyone had a great weekend. Yesterday was down here, downtown Detroit. Watched a good Lions victory. The Lions, now 5-7, have some playoff hopes, some wild card hopes, potentially for the first time in a long time. So the city is excited about that. Did some other sports investing over the weekend on some NFL bets, as well as the World Cup going on right now. What is going on in that World Cup game, by the way? And outside of sports, got a lot of market action as well today. Stocks, I've been watching Tesla down 4% today. I've been watching Meta this week too. If you guys remember, a week or two ago, I called out Meta at around a 130 price target. I'm playing Meta right now on the long side for a Christmas holiday kind of big month for Meta. If you guys remember last year, Meta's Quests headset, it was the number 1 app on the App Store following Christmas, and I think that trend is going to continue this year, where a lot of people are buying those as a Christmas gift. And I think that's to be expected, but I think it might. My thesis on it is that it's going to end up outperforming the expectations a little bit. I'm talking about Meta's headset as a Christmas holiday gift this year. AB coaches the line. No, that would be my man Dan Campbell, but he's doing a good job so far. I mean, shoot, again, last time the Lions were looking this good. All right, let's pull up my Benzinga Pro. We'll do a quick rundown of the overall indices, see what's moving, see what's going on in the market. As always, if you guys have any stocks, any trades you want to check out, let me know in the chat, and we can go ahead and do that. Let's go ahead and get this popped up. And then just a quick programming note before we head into the rest of the show. So we will be doing Benzinga Live today and tomorrow, so Monday and Tuesday. But that will be it this week in terms of Benzinga Live. As Wednesday, we start our crypto event. Wednesday and Thursday will be our crypto and fintech event, and we will be streaming that content live on the YouTube channel, so we will not be doing Benzinga Live. And then on Friday, we will be having one of our all-access events where we get you up and close and personal with some exciting public companies. Let's see. Topher wants to look at URA, the Global Uranium ETF. All right, so I'll tell you what, Topher. What we need to do is we need to get kind of like a commodities or precious metals expert on the show, because I have been watching some of these different commodities and whatnot, and copper is really interesting to me. There's like a saying, I guess, or it's an old thing in investing or Wall Street, Dr. Copper, right? Like if you want to look at how the economy is doing, look at how copper's doing, because when copper's doing well, it's a sign that there's a lot of business happening, a lot of industrialization. And when copper's not doing well, typically in general, when commodities aren't doing well, when commodities are getting hit, it's because there's like some sort of a recession or economic downturn expected. And with that said, I have been kind of more bullish these commodities because I think there's a lot of people that are out there that are still worried about a big recession into 2023, and it's certainly a possibility, and you're certainly seeing that reflected in a lot of the commodity prices. But I think the fact of the matter is that the economy will, at least in the United States, will remain stronger than a lot of people anticipate, which will be good for commodities like uranium, good for commodities like copper. So I am more bullish, I think, than not on those. I just don't. You want to hang out with AB in the Quest? I don't have one. Although, like I said, I think it's going to be the hottest Christmas gift this year. So maybe that means someone will get me one for Christmas. This is a good chat question too. If you've already done some Christmas shopping, if you've already gotten some gifts, what have you gotten? You know, because I want to know. It's like we can try to play the Santa Claus rally all we want, or try to pick the winners and losers, right? But the only way you're really going to have an edge essentially is if we all are figuring out, okay, like everyone's, son or daughter is asking for this year, and that's going to be the hottest gift of the year, then I want to know what that is, months before, or at least at this point, 20 days before Christmas. And conversely, if you have not gotten any gifts yet, but you've been asking for something, let me know what that is. And I think the Quest, will be interesting, but I actually think overall, and this is all anecdotal, I don't really have any stats to back this up right now. My just feeling is I feel like gaming will be a little bit less this holiday season. Like I have less, like a year ago, like PS5 or a PS5 was like the biggest present you could have gotten at Christmas, and it was like almost virtually impossible to get one. And now I feel like, if you can see it with the prices on the secondary market of like graphics cards and stuff. They're still super expensive, but they've fallen off a lot. To where I would be surprised if but basically I think most people that are that into gaming already have the new PS5 or the Xbox Series One, or they've built a computer recently to where they're probably not asking for a lot of stuff this year. So I wouldn't be surprised when it's all said and done in March of next year, of 2023, when we're looking at the earnings of these companies, if they said, yeah, our gaming sales, our PS5 sales were a little bit lower this year than the year before, I would not be shocked. Again, that's just anecdotal, because I had every friend of mine that's what they were asking for, last year for Christmas. Haven't heard that this year. AB, look into the Steam Deck. They sell fast. Does Microsoft own Steam? No. AT say no. Who owns Steam? Does anyone own Steam? Oh, Valve. Who owns Valve? So yeah, what is the Steam Deck? That's like a console that allows you to play Steam games.
Yeah, take it on the cover. Well, like everybody has something like that out now. Like Logitech just dropped one.
It's like an emulator. Oh, okay, so it's like a Switch, but for Steam games. Yeah. All right. Here's the thing: is like an industry like gaming, right? It's going to continue to grow as the years go on. There will be more and more gaming consoles, more and more people playing video games. I'm not saying I think like gaming as an industry isn't growing right now, but even in a growing industry, you're gonna have ebbs and flows. You're gonna have, there's gonna be a cyclical nature to it, and I think during COVID, because everyone was locked inside, not a lot to do, people had more income when they got stimulus checks or on unemployment or whatever, we're spending a lot of money on PCs or gaming, and it really pushed forward a lot of this growth in gaming that now I think we're seeing with, okay, we're going to see that come back a little bit. And again, not to say that I'm not still super bullish the industry overall. I am. It's just like, look at Take-Two. Over February 2021, we were at $215 a share. We're less than half of that now. We're at 108. And Take-Two's got some other, kind of bigger problems right now. Obviously, GTA 6 is the biggest question mark for Take-Two. Grand Theft Auto 6, the company's biggest game series, Grand Theft Auto, is set to... They haven't come out with a new Grand Theft Auto in 10 years, and there were some leaks about that showed gameplay from Grand Theft Auto 6 that were not perceived well by the public, so a lot of people are anticipating now that Rockstar and Take-Two will have to go in and kind of vamp a lot of the game just because of how bad the public perception was with the leaks, which is going to push that game back. Not good for shareholders. And if you have that against the backdrop too of people are just buying less games right now, or people are buying less gaming equipment, whatever it is, could be bad news for the stock. Although, in terms of all the pure video games company, because like Sony and Microsoft are such big companies outside of just the Xbox and PlayStation, I would never play those stocks just based off their gaming departments, because it just wouldn't make sense to. So out of like pure gaming plays, you have Take-Two, you have ATVI, Activision, which is still, I don't even know. What's the deal with this deal? Did the Rift at FTC might provide a pat? So I think this deal is still happening. It's still up in the air. I mean, you can see the market certainly got less bullish around August that this deal was like actually going through. For context, Microsoft announced it would buy out Activision Blizzard, I believe at a price target of $95 a share. $95 a share. Currently trading at 76. So the market has basically kind of, was it 85 maybe? 95 sounds too high. Basically, the market, it seems like over the past couple months it said, we don't know. We don't know if that deal is for sure happening. Sony fighting it because Activision makes and produces not Grand Theft Auto, Call of Duty. And the fear is that if Microsoft buys Activision, they'd be able to make Call of Duty an Xbox exclusive. Essentially, if you have a PC or PlayStation, you won't be able to play Call of Duty. You'll have to buy an Xbox to do so. Sony's trying to fight that. I don't really know. To me, like legally in terms of antitrust, I feel like you have to that threshold is pretty, like you have to pass that threshold, and I don't think you are here, because you can't argue that just because Microsoft owns Call of Duty, even if they did make it an exclusive, that's like a monopoly. There's a ton of different shooters out there. Call of Duty might be the most popular, but it's not like then you still couldn't play Fortnite, Battlefield, and Gears of War on your PlayStation, or whatever. So I don't know. I mean, I know why Sony's fighting it, and I don't know. Okay, I see. Options Mike is going to join us here in a few minutes. He popped in, and in the private chat corrected me. It was $94 a share, he was saying. So yeah, I mean, you have Take-Two, you have Activision, which of course the share price being influenced by that deal. You have Electronic Arts. I don't know. Again, I'm not buying these video game stocks up here. That's my hunch. That's my thesis. Is I think you're going to see a little bit less spending on video games this holiday season compared to the years past, especially when considering the boost again that it got during COVID. It's not just that it's going to be like normal. The numbers might be fine, or if you go back to the trends of like how many video game consoles were purchased every holiday season, it might be actually in line. But the fact that the past 2 years would have then been way higher, I think could have a negative impact on some of these stocks, and just say like, okay, again, companies are still growth companies, still growing, but just that if they've sold a lot less, consoles than they did this time last year, could have a negative impact on the stocks. But again, I also think part of that is baked into the share prices, and that's probably the expectation, right? One thing we mentioned is just, graphics cards on the secondary market. For a company like NVIDIA, and AMD and NVIDIA have both tried to, I think, over the past year or so, kind of not distance itself from crypto, but basically just be like, all right, even if our demand for crypto mining goes down to zero, essentially, we're still going to be fine. Here's why. And so I don't think that's necessarily the biggest deal in the world for NVIDIA, that people might be buying NVIDIA graphics cards to mine ETH or Bitcoin less today than they were a year ago. What will be tough, I think, is that you have this drop in interest in cards for mining crypto, and a drop in interest for gaming at pretty much the same time. So it's had, it's good for consumers that haven't been able to get, cheap graphics cards in a very, very long time. And they're still not cheap, and no one would say they're cheap, but you can find a lot better of a deal right now than you could have, maybe a year or two ago. And some signs that we could have kind of a those supply chain issues in the semiconductor industry could be alleviating, or there's just less demand. So, the supply could still be constrained, but now there's less demand, so it's a little bit closer to that equilibrium. But Nvidia the stock has performed great off of its it came in from 106 up to 168 right now. Kind of looks like filling this gap up here until you run into any overhead resistance, and then AMD's chart looks pretty similar. But yeah, I don't know. Ugly downtrend for sure. But nice little pop here we've got. But all right, guys, it is 11:45. You know what that means. It's time to bring on my man, Options Mike. I see him hanging out in the background. So without further ado, let's go ahead and give Mike our very special Benzinga Live intro and bring him on the show. Mr. Mike, how's it going?
Hey, B, how are you?
I'm good. You have a good weekend?
I did. I was away. I ate too much, drank too much, and I'm tired today, but I'm good.
Hey, I hear you there. We were at the Lions game downtown here yesterday and celebrated after a big win against the
huge win
against who they played, Jacksonville, against the Jaguars. And then next week the Vikings, the divisional. City is coming alive down here, Mike, in Detroit.
About time.
About time, right? So what have you been watching? What do we got pulled up right here?
Got Chart of the Spy for you guys to start off with, and there's a lot of angst about this market. I think this market wants to run, guys, and I've been saying that for a bit. And what you're fighting right now is you're fighting this big downtrend. It comes in from this first trading day of the year. We've touched it a couple times, and we haven't broken above it. And then you're fighting at the same time right in here. You have a little bit of an uptrend. So you have a nice little wedge pattern here that is developing on the index, and we're going to have to see which way it goes. People are saying that I'm really soft and you're really loud. I don't know what to do.
Let's see.
So, you're going to have to be a little bit patient here is what I'm thinking it would be, right? If you're looking at this market, you have to wait for it to break one way or the other. We have a very quiet week. We had some data today. Yeah, it was a little bit hot, but we're going to have that. But overall, Powell came out last week and he said, we're going to start slowing the rate of hikes, and the market believes him, and you're going to have some bumps in the road, but I think the market's looking to go, and we have pretty much a quiet period now until the Fed speaks on 10 days, and that's really nice. No Fed speak, very little in the way of data, so the market is poised to try to break out. It just needs to find a reason to do it.
Got it. I'm sure. Gotta ask, because I can hear you fine, Mike. I just want to make sure the chat can. Jade Aroma saying
I'm very low sound.
It's just weird because I can hear you fine. Let me see if I can. I'm gonna try to manually bump up your mic levels and see.
I've been talking in my mic all day with no problem, so I'm not sure what this is.
Yeah. Interesting. So, all right. Well, while we get this mic situation figured out. So, here, let's test again, Mike.
Hello. Can you guys hear me? Okay. Testing.
Yeah. Our producer, our other producer, Aaron, saying he can hear you fine too. I can hear you fine. There might be an issue from our Caleb saying you sound good to me. All right. So, sounds fine. Okay. All right. We'll continue. I'm sorry for people that are having an issue, but I don't think it's on our end. Maybe YouTube's end. So let's go back to I'll pull the SPY chart back up. So Mike, yeah. You're saying you think the market can run here?
I do. I think, the market's looking for a reason to run and has nothing to worry about from a data until Friday. We have a couple pieces of data on Friday, consumer sentiments in there. But you have no Fed speak this week. The Fed has basically come out now and said, we're going to start slowing the rate of hikes. We're listening. We don't want, Powell specifically said they don't want to drive the economy into a recession. So they're aware of what they're doing. And I think the market's going to take this in, and I think it's looking for a reason to rally into the end of the year. Whether we hold this next year or not remains to be seen. Do we go into a deeper recession? It remains to be seen. But I think right now the market's looking to rally, and you can either hold stuff here or be patient. When we take out this downtrend here, that's when the market's going to come alive, and that's when you're going to get a lot of chasing. And I think we could hit this 430 level by the end of the year on the SPY.
Yeah, and I think for a lot of people right now, Mike, kind of in that camp where it's like, all right, a lot of the, say, like, bearish sentiment has kind of gone out the window for at least the end of this year through the end of 2022. But I think a lot of people are worried about kind of Q1, Q2, 2023. Have you started thinking that far down the road, or are you just like, no, it's just my job to kind of look at, what's going on in the market now and then reassessing once we get there?
I'm just starting my 2023 names that I think can outperform the market. So I'm just starting to take a look at that now and put it together. And yeah, I'm looking at it. I mean, there are some fears, right? The overall fears haven't disappeared, right? You still have the war in Ukraine is still there. You still have some supply chain issues. You have China with the riots now and the zero COVID policy, and suddenly a slacking up of that. So there's always lots of different types of, there's problems out there. Inflation's not just going to roll over and die anytime soon. And we may get a dip in the market, but I'm bullish into the end of the year timeframe, into the Christmas timeframe. And then I think we have to reassess and see where we are and see how the market's dealing and coping with all this other data out there and where it's at.
Yeah, and what I'm interested in right now, Mike, or one thing I've been doing is trying to find, like you said, you were looking at stocks in 2023 you think could outperform the market. I'm trying to find stocks that, on the downside too, might be, just stocks that are kind of performing not, that are going against what the market's doing. And like a stock like Tesla today is down 5%. The market's down, but it's down a lot more than the market. I'm wondering, like, do you see that as a sign of relative weakness that's going to continue, or do you think this is a buying opportunity that Tesla's getting beaten up too much?
I like Tesla down at the 155 area. I've been saying that for a couple of weeks. And the reason there, if you go on a weekly chart and you take a look at it, you're going to see it has strong support in that area. There's a lot of angst. No matter what you think of Elon Musk right now, you can see right here, this 155 area, we pick up these previous highs over his buying Twitter and how much time he's spending with that and what's going to, and how that's going to distract him from Tesla. So at the end of the day, I think Tesla's going to be just fine. And, and I think this will be okay. But, maybe they want to bring it back down to this 155 area, test that area, see if that holds. Today, you had news early this morning, and you guys were reporting it, that they're cutting Model Y production in China by 20%. Then unofficially came out and denied that. So there's a lot of just back and forth on here. It's just not been a leader. And I think we're used to Tesla being a leader. And what I would keep saying is, you had 2 days over the 21-day and it failed and came back down. So it needs to hold that to get going. And here it is under the 8-day. Right now, I think Tesla is a sell into strength until something changes.
Yeah, and I think right now it's like a pivotal time for Tesla where, like you said, we're used to Tesla being a leader. Yeah. And kind of the first time in Tesla's, like, at least recent history over the last 5 years, where now it does look like Tesla is being impacted. Because that was the craziest thing, was like during COVID, you had all these other car companies say, we've had all these supply chain issues, yada yada, and Tesla seemed to be just fine and never really dealt with a lot of the problems that the other car companies with. And now you're finally seeing, I think for the first time, not only Tesla, dealing with some of these problems, like that report that they might cut demand, but also just increased competition, right? 3 years ago, Tesla was, for like basically all intents and purposes, the only player on the road for like a luxury electric car. Now it's not the case.
I mean, forget the Lucids and the Ribbons of the world, right? And all these other ones. It's the GMs and the Fords who are really coming after them hard.
Right. And the Mercedes and the Lexuses, like basically any person now, 5 years ago, if you wanted to spend $60,000 to get a nice electric car, Tesla was one of your only choices. Now you can go get an Audi or a Lexus or a Mercedes. And it's like, it's impossible for me to, just essentially assume that Tesla's going to be able to hold on to its current market share with all this increased competition coming in.
And again, they're the first, right? They're always going to be strong, but as more comes in, maybe other cars will be better quality, have different features. We're going to have to see how that plays out. That's TBD, right? How that all plays out. And then maybe he revamps some of his car lines. We'll see. But he's been an innovator in this space. So again, I think eventually the stocks will be fine. I like it down at 155 if it wants to remain weak. I think that's where it's going to find buyers. Again, when we went back to the weekly chart. So I think you just have to be patient with this one. If you hopefully don't own it up higher. If you're buying it down here, don't buy a lot. Buy a little bit, and maybe just keep slowly buying on the way down if you want it. But don't buy all of it here. If you can only own 100 shares of Tesla, don't buy 100 at once here. I would be patient.
Yeah, we talked about this, not you and I, but I talked about this on the show last week as well. But another, that that's one of the fundamental things is increased competition. The other thing going on right now that I don't know how much of this specifically is impacting the stock right now or has impacted it. You mentioned the Twitter deal, but I think there are a lot of investors that are probably not happy with Elon essentially like seemingly willing to become more and more partisan, like take a stand against it. It's like if he, essentially like pisses off a lot of people on one side of the political spectrum, it's like that's 50% of the country, right? It's the old Michael Jordan. He's like, Michael Jordan said he wouldn't speak out on social issues because Republicans buy shoes too. And I think right now, like Elon, a lot of investors are trying to remind Tesla, like, hey, Democrats buy cars too, like especially a lot of people in California and New York that are buying your Teslas.
I think, I try to stay out of the politics thing when it comes to trading, AB, because I just don't find it helps. And there's some validity to what you're saying, but I think it's more they want him focused on Tesla. Right now he's very, very focused over on Twitter. He has Tesla, he has SpaceX, he has the Boring Company, now he has Twitter, and he's the CEO and head of all of them. And I think investors are worried he's getting stretched, and I think that's where a lot of the angst is coming from. I agree, and I didn't want to. I just think there's more that they want him. Hey, hire somebody and let them take care of Twitter, and come back over here and let's run our bread and butter.
Yeah, I mean, I wasn't trying to like bring politics into it. I was basically just saying I think a lot of investors want that same thing of Elon saying like, hey, you're a CEO of a public company. Why like all of a sudden get really political, especially when there are all these other things happening, like with the economy, with the company, it just seems timing wise probably not the best time. If I were still a big Tesla shareholder, I wouldn't be happy about that right now.
Yep, I mean, so we've talked about it. Sometimes you want your CEO to be less out there, right? They want him to talk when you need him, but not want to be out there on social media every day.
Yeah, and there's
publicly anyway.
There's benefits and drawbacks, right, to having a more out there CEO, right? Tesla wouldn't be where it is today if Elon was like a reserved, conservative, person. The fact that he is who he is how Tesla has gotten to where it is. But it's probably one of those things where it's like, too much of one thing can be bad. You probably want it in moderation.
Right. But, while that's weak, there's things that are working in this market. Boeing's having a nice breakout here. Right. Look at this nice move today, breaking out of this consolidation pattern, pushing up. We were all over that early this morning talking about that. 190, the target's almost there. So you have things going on. It's not like everything's weak. I don't know what's up with UAL today. I know they had an upgrade, but big move, big flow into that today. They were hitting the January 46 call, massive size. That's breaking out. The airlines are strong. Apple tried to go today. There's still strength in this market. It's just in small places. So just kind of rotating around. And I think what you're starting to see is some buying into the end of the year, right? We've seen a lot of tax law selling. Maybe you're seeing some buying. They're starting to position themselves for some things they might want to own for next year.
Yeah, I think 100% too. And you're mentioning, Boeing, some different airlines, some kind of more. And I think that too is like, we've seen a lot of positive momentum in a lot of different like tech stocks over the last month or so. It's shown NVIDIA earlier going from 100 up to 170. But I think a lot of those some of those like value type names that you're mentioning, whether it's the airlines, whether it's hotel companies or like casino, a lot of those like more value, not tech stocks seem to be ones that are also starting to pick up some positive momentum here.
Yeah, I mean, I think there's still some angst over techs, especially over growth names. If they're going to need more money costs more. But to your point, like NVIDIA, there's nothing wrong with NVIDIA. They still have plenty of cash. They make a ton of money, right? They're not in any trouble. But they're also seeing, we talked about this before. Their latest graphics card is not being very well received by the gaming industry. It's extremely expensive. They feel it's overpriced, and it's also burning through power supply adapters, by the way, which is not a good thing. It's melting them. So there's a little angst over what's going on with NVIDIA right now over this. Long term, it's going to be fine. The question is, does this hold up here and test the 200-day at 176, or are we going to roll back over? Right now, it's holding in fine. It just put a high of the day, and just a little while ago, we just hit a low of the day here in the markets. By the way, while we're talking, everything's just selling off again. But there's no volume. The one thing I always look at, AB, is what's the volume today? We're at 27 million shares, 2.5 hours in. There's no real panic here in this market.
Why do you think that is? I mean, we people are on vacation early. You think, no Fed, no big things happening this week, so people are more hands off. Why do you think that is?
I think they're just waiting. I think a lot of people are watching and they're waiting for that downtrend break to see which way it goes, and then they'll pile in either short or long at that point. I think people are just sitting here trying to figure out which way the market wants to go. And I think the big funds are trying to decide how they want to position it to the end of the year. They're probably doing it slowly. Remember, big money doesn't like to chase, so they might be just sitting here purposely selling a little bit to get prices down where they could buy it back, buy lower.
Right, and I think that's what is hard, or what you have to kind of keep in mind as a trader if you're actively trading these markets, is like there could be a lot of reasons to be bullish right now, and things are looking good and the market's performing well. But even if all that's true, if the market goes up, I don't even know, what are we up right? So SPY's up 6% in the last month, 6.6% in the last month. If it did that every month, it'd be up 70% on the year, right? Like, that can't happen. So even if everything is going well, like, you expect like a little pullback, a little sell off at some point, people taking some profits.
Well, remember, the Dow is no longer in a bear. It's in a new bull market, right? We're back up over 20% off the lows. We got within 6% of the all-time highs, which were from January 4th this year. So if the Dow is up there, it makes sense that eventually the SPY will start to follow this, right, and start to make up some time.
Oh man, sorry, Mike. I'm just checking up on some of my trade. Tesla's making new lows of the day.
Yeah, there's a lot. There's a lot of weakness out here. You can see all the charts I have up on the side over here. I'm just covering them up at the moment. But you can see Boeing's still holding in well. Nvidia is still holding well. There's Meta still holding in. It's not the same world. It's not every stock is being treated the same right now. Meta filling this gap, right? Look at the strength on this the last couple of days, still holding up here. Even today, it pushed above that. There's strength out there in certain names. You just have to find them every day. And that's what we do every day. We come in, we look for it and say, okay, what names look good? This morning, we were talking about Microsoft, Boeing, Apple, and...
Yeah, so with a name like Meta...
Can't remember.
With a name like Meta, Mike, so the SPY right now on the day is down about 1.5%. Qs are down about the same, 1.3%. But Meta's only slightly down, about 0.5%, so it's outperforming the market. Is that a sign to you still that like Meta's showing strength against the market? Like, if maybe tomorrow, if the market's up, that means that like Meta would be up as well, or how do you interpret that?
I look to see how things are trading versus the market. So, for example, Meta here is showing some strength. It's been showing strength for the last couple of weeks, right? It's been coming off the lows and consolidating and holding up nicely. And I think they're trying to fill this gap. They want to fill this back up to the 130 area and see what it can do. What I always tell everybody, I'm going to open this up for you guys on a 5-minute chart on Apple for today. We trade this, made nice money on the way up here to the 151 area today. And then it came in with the markets, and then everybody's like, we should get back in. But what you need to do is what we were doing. I was paying attention is right here where the market was pushing up and testing VWAP, the SPY, and the NASDAQ in this area. Apple was no longer participating in it. That was a sign that this trade for today was over, right? Apple was a leader early, and now with the market trying to rally after it sold off, it could no longer push. That's a sure sign that this trade is over. And look at Apple here, now leading us down. So you always have to pay attention to this stuff and see how it's trading. Meta here also, again, you look at a 5-minute chart, and this is where you have to go down sometimes. Still basically above the open on the day, showing relative strength. Yeah, it's down with the market cap down, but still showing relative strength as it's above the open on the day. And that's what you're looking for here. You're looking for names that are showing relative strength in this market to trade. And then if we do launch tomorrow, like you said, those would be names you'd like to try to get into.
Yeah, and I do like, I was talking about it before you hopped on the show, I like Meta here, especially through kind of the end of the year. I think it will be a winner of the holiday season, and kind of that, I think that like 137, 135 level, good price target for Meta on the upside right now. But yeah,
well, there's two catalysts for it, right? There's talk that they want to ban TikTok in the United States. That's a huge catalyst for that and for Snap. There's also talk and rumors, which I'm going to again stress are rumors, that Zuckerberg is going to resign. Now, I think that would be great for the stock at this point. I believe he's become a weight upon the stock and everything. So I think, either one of those two happen, this stock's going to pop. Now, whether it holds it or not, we don't know, but I think you're going to get a big pop out of it.
Yeah. And on that note, right, with Meta is like you have the TikTok thing. Here's what I don't know. Like my thing with the TikTok thing is it would have to be such a bipartisan thing because I don't think one party in the United States is going to want to be responsible for that because young people are going to be pissed about it. So you don't want to lose, right? If you're like it doesn't matter what side of politics you're on. If you're in charge and you do something like that, it's going to piss off, a million 18-year-olds or more. Probably not what you want to do, but I know there is bipartisan support to do that. And I do think, even Trump tried to get that done. I agree with you, though, Mike, 100% on the Zuckerberg point, where I think right now, because I think the way I see it is there's probably a lot of investors that are trying to pressure Meta to be more cost efficient, to not spend this much money in certain places, metaverse this or that. And I think that's like Zuck's mission right now is he's like, no, let's take all our money and put it into the metaverse. And there's probably a lot of investors that are like, I don't know. So I think a lot of people would be more willing to buy the stock if he's out.
Yeah, I think that's it. Or you say, hey, we'll spin off the metaverse as a separate company where Meta will contain. Actually, here's my point of view. You spin off Meta as a separate company where Facebook maintains some controllership. You switch the symbol here back to Facebook, which I think makes more sense. And then you let Zuckerberg go off and run that and see if he can actually make anything happen.
Yeah, I agree. I think that makes a lot of sense.
But there's still strength out there, AB. It's just a quiet market. There's an old Wall Street saying, don't short a quiet market. It's a dull market. It's a very dull market here today. There's not a lot going on. We are below the 8-day on the SPY. I'd like to see us recapture that into the close. We're under the 200-day. But, to me, this trend line we talked about, until we break below that, I remain bullish on this market. And that comes in around the 397 area right now.
Got it. Well, yeah, I appreciate it. I think those are some great insights. I'll let the chat see if we've got any tickers flying out of the chat that people want to check out.
Intel? I'm not a fan of Intel. I think this company just never seems to have their act together overall. It's holding in okay. It's not doing anything special. For me, I'm always looking for a sector, name the sector that's trading against the market, like Taiwan Semi. So if you're looking at Intel, look at Taiwan Semi, nice little flag up here holding, looking like it wants to break. So as long as it holds this gap around the 78.80 area, eventually this thing takes out 83 and change. I think this one can go. I prefer that than Intel.
You prefer Taiwan Semi to Intel?
Yeah.
Yeah, I mean, Taiwan Semi, too, is to me, that's one of those stocks that you have the geopolitical risk there, but I think outside of that, it's one of the it's just a monster in terms of a company. It will always be, I shouldn't say always, but as of now, it's like every single company making chips in the world basically goes through TSM for manufacturing.
Yeah, and let's face it, with China having riots at home and COVID problems and watching what's taking place in Ukraine, the chances of them actually trying to invade Taiwan at this point is probably significantly less than it was this time a year ago.
That's a good point. I haven't thought about that. The geopolitical risks being less today than they were maybe a year ago.
And Apple sent them a huge message over the weekend. We're looking to move our production out of China. We're moving it to Vietnam and to India and other countries. That is huge to their economy.
Yeah, massive. I like TSM here. I'd almost rather buy TSM here than Nvidia or AMD, right? I'd rather get because AMD and Nvidia has to turn around and sell those graphics cards, and I've already talked about the two main areas where demand has been lower for that, in gaming and in crypto, whereas TSM just has the contracts to produce them. Once they get their money for producing the chips, they don't need to sell them. Of course, they could get contracts canceled if demand falls that much, but I think Nvidia and AMD would be more, or TSM essentially, the way I see it, a little bit more insulated to the consumer demand problem.
Yeah, I like TSM. Taiwan Semi a lot.
All right, Mike. Well, if you've got any other stocks or anything you want to chat about, let's do it. Otherwise, if we don't have any other tickers in the chat, I'll let you go. But thanks for hopping on today.
No, thanks for having me on, man. And guys, nice and easy here. Again, watch for the market break. It's going to break one way or the other. You have a nice defined trading range here. So be patient, watch it, and we'll see where we go from here.
Yeah, so you're kind of like, we're in no man's land right now, but you think we'll break either to the upside or the downside here in the next couple weeks?
I think in this week we'll probably break one way or the other.
All right, there you have it. That's Options Mike take. We're going to break one way or the other this week, so get ready for some volatility. If you guys want more from Options Mike, go ahead and give him a follow on Twitter at Options Mike. I'll drop that link in the chat. Mike, thanks again for hopping on today. How's your pup doing?
He's doing great. In fact, that's why I keep looking back. He's like, it's my time to go for a walk. What are you waiting? What are you doing here, man?
All right, well, I'll let you go. Have a great rest of your Monday. We'll chat soon.
Bye, guys. Be good.
You too. All right, guys, that was Option Mike at Options Mike on Twitter. Quick rundown for the rest of the show. We've got about 50 minutes left. Oh, Stephanie Link is buying some Cleveland Cliffs CLF. Stephanie Link buying some Cleveland Cliffs CLF. Rest of the show in about 20 minutes at 12:30, we'll have Gareth Soloway from In the Money Stocks join us. Excited about that. Haven't had Gareth on the show in a while. See what he's watching in these markets, see if he's got kind of a similar take than Option Mike. Maybe he's got a different take. I don't know. We're always trying to get different perspectives on here. My trades, I'm going to buy some Meta calls right now that expire on Friday because I'm with Mike. I think we'll break one way or the other. I'm still pretty bullish on Meta. Also, Jay, I don't know who you're talking about here. I don't know if I said I hated Meta at 1 or at 90. I will say I was saying I liked Meta at like 110, like $10 ago, and I remember you or someone else in the chat was saying like the easy move from 88 to 110 like already happened. Meta came down a few more bucks. I still like it here. Like I'm not, of course, in hindsight, I would have rather bought it at 80 than 120, 100%. I just don't think that 120 is like this number that Meta stock is unable to get over right now. I like it from a chart perspective. I like the like 135 level right now as a price target. I'm not saying, oh my God, Meta's going back to 330 or it's going back to its all-time highs. I'm not saying that. I just think it has some room to run here too. But like Mike said, I mean, this could be the week that the market breaks to the downside, and we're getting more selling action today. Checking back in on Tesla. All right, Tesla's gotten a little bounce. Tesla's above the 184 level. So Tesla dropped below 184, hit a low of the day of 183.82. So we're watching Tesla's stock here to see if we can hold that 184 level. We'll see what Gareth thinks about Tesla stock when he hops on the show here in a few minutes as well. Another one that we've been watching that has been outperforming the market a lot over the past couple months has been Netflix. If you look at Netflix on a daily chart here, you can see here we've gone in just a few months now. Actually, not just a few months, really about half a year. So past 6 months now, from 160 up to 316. So almost an 100% move for Netflix over the past 6 months or so. I think it's really tough here because like from a chart perspective, I think you still have a little bit more ways to go up to the 340, 350 level. With that said, I said this earlier in the show, so anytime you get this big of a move that quickly, you're due for a pullback. You're due for some profit taking. And I don't know. I think it's one of those things that really depends on your time frame. Because if you were looking at like a swing trade or something, I might say, okay, Netflix is probably a little bit overextended here. You can see on the RSI closer to 80. It's closer to overbought than it is oversold. But if you were saying you wanted to hold Netflix for 5 years, I'd say, yeah, probably not a terrible place to get in. I mean, you can see here on the daily chart, we've had a big move, but we're still well off our all-time highs. And I don't think Netflix might not ever get back to that all-time high, but it certainly won't get back to that all-time high in a high interest rate environment. So I basically am still bullish Netflix from here, probably up to the 330, 340 level. I would just be very, very wary of any type of pullbacks, any type of profit taking. You can see the stock down a little bit more than 1% today, down about $3.50. Wouldn't be surprised to see Netflix continue to move lower throughout the week, maybe get a little bit closer to back to that 300 level before we get another leg up. But again, I still like the stock here. I think you saw a lot of people realize when the stock got beaten up below $200, hey, even if Netflix isn't growing as quickly as it was a couple years ago, this is still a massive company that has, millions of subscribers that pay Netflix, whatever, $15 a month. That type of subscription revenue model, having that essentially guaranteed revenue coming in every single month, that strong cash flow is something that's very attractive to investors, especially right when other companies become more of a question mark, right? You don't know what the demand is going to be for Apple MacBooks or whatever. You don't know what the demand is going to be. Netflix, is going to be bringing in a decent amount of money every month. And of course, like as inflation rises, as people try to cut cut costs and save money, sure, some people might cancel their Netflix subscriptions. But I've made this point on the show before too. I really think if there is some sort of recession, Netflix could actually be a winner of that. And we don't really have a lot of history to go off of because, Netflix in its current existence, the streaming platform wasn't really around in 08, 09. But my thesis on it is just that if you're trying to save money, you're going to cut out vacations, you're going to cut out, all these things. And Netflix paying Oh, I was about to sneeze, but it went away. Paying $15 or $20 a month on Netflix probably actually helps you save money because you can, have hours and hours of entertainment watching Netflix without going out and spending money, without going on vacations, without going to that concert, without going to that sporting game. So, I think there's a chance that Netflix becomes a winner of a recession type thing. Maybe not even in the sense that the company ends up growing, but just that it holds up better than other companies, or at least holds up better than some people expect it. Airbnb. This is one that I'm getting long right now, both via common stock and some leap type contracts where I'm basically buying like $160 calls that expire 6 months, 8 months from now. Let's see. I'll pull up the options chain. June 2023, $160 calls on Airbnb. So if you look at the chart, that would bring us back to like here. I'm basically betting that this gap fills on the upside. I love this stock long term. I don't think Airbnb is going anywhere. The company has a lot of problems, and will probably face increased competition. I don't know. One big issue with Airbnb, I think, is the impact the company has had just on the overall real estate market in terms of how many people have started trying to buy properties to Airbnb them out over the past couple of years will end up causing I don't think it's sustainable in that sense, right? That there are houses being taken off the market specifically for Airbnbs. I think you've kind of seen the pendulum swing back toward hotels because people have gotten so fed up with cleaning fees. People have gotten so fed up with a lot of different problems with Airbnb now people are like, oh yeah, this is why we like hotels because you can just get in a hotel room. The room's going to be clean. You don't have to worry about this list of chores to do. You don't have to worry about these hidden fees, all this stuff. With that said, in terms of growth companies, newer companies that have completely either reshaped, revamped, or disrupted its respective industry, Airbnb is the top of the list. There's not really a lot of other, newer growth companies that you can argue, like Uber for the transportation business, but I see Uber and Airbnb as two different companies because Uber's primary, essentially Uber makes money by charging you $15 for a ride and then giving the driver $10 or whatever. Airbnb is different in the sense that people were probably going to rent out, or there are people that were going to rent out their house anyway. Now Airbnb is just the platform that it does it on. Airbnb is just the middleman in that transaction and takes a fee. I see the business model as inherently different than Uber, but in the same realm, they're in the same category of businesses that have actually been able to disrupt its industry. And I think Airbnb has a pretty decent moat. You have VRBO, you have some other competitors, but this is a stock to me that I like long term. Not really for any financial or valuation or fundamental reasons, more so just from its growth aspect and the story. I think it will end up continuing to be a huge powerhouse in the lodging hospitality. Look, right as soon as I started talking about it, we got back above $100. Good job, Airbnb. Let's see if we're getting some action. A little bit of buying action across the board here. Tesla certainly off its lows here, going on the 5-minute chart. You can see back above that 184 level. So that's good. Good news for Tesla. You want to see you want us to stay above that 184 level right now. Would not like to see us making new lows. But going back to a daily chart on Tesla. I mean, if we are heading toward lows, I I don't know. I mean, if I was in this stock and we got back to 167 or whatever, and we got below there, I would get out of that stock if it were me. Yeah, not financial advice. Netflix is still too expensive. Yeah, maybe. I just again, I mean, it got too cheap. Or the stock got too low. Started to come back up now. Let's check in on our AAII sentiment survey. I mean, I was actually surprised by this because last week, last Thursday, we actually got more bearish, slightly more neutral, but essentially just less bullish. And I was surprised by that because we did have last week was the Powell day where the market ripped up like 3% in a day and kept moving up the next day. So like it to me was surprising seeing the sentiment kind of actually slightly shift down. But I think the bottom line is what we're seeing right now is that the percentage of bears is now holding steady around 40%. It is well off that highs of back when we were, at like 61% were bearish just a few months ago. So it's again, we talked about this last week because it's kind of like, all right, why look at the sentiment when you could just look at the price, and the sentiment's going to be based on the price. I just want to know, like, it would be noteworthy to me if this would jumped up higher on the bearish side or jumped up higher on the bullish side. Topher saying ride Xmas rally then sell. Yeah, that could be. See, the only problem with that is I feel like that's been that's kind of been like the common sentiment, right? Like, oh, we're going to be good, through the rest of this year and then, 2023. And I just feel like if everyone and their mom out there is having the same mentality about like when to buy and when to sell, it's probably not going to work out that way in reality. So we'll see. Again, I think if you're watching the SPY right now, like you're watching, can we hold the 400 level? If you're watching Qs right now, ooh, it looks like, is that where we bounced off of exact? No. Okay, let's go back to SPY real quick on Benzinga Pro. Go to the 5-minute chart. We got right near that 400 level almost exactly. We were there back on December 2nd too, and you can see went back up here. I mean, this chart's interesting on the 5-minute chart because you kind of hit this level right up here, rejected, came back down here, hit the bottom again. So like Mike was saying, it looks like we're in this kind of little range right here, 400 to about 408. Sorry about that. We're in this little range right here, and I think to Mike's point, right, is he's expecting a break to either side. So if you're bearish, which I wouldn't, I mean, again, on the 5-minute chart right here, I mean, it does look like there's potential that you kind of fill this gap to the downside and drop below to 395 or so. But again, there's no, just because the chart looks like this doesn't mean that has to for sure happen. You're seeing right now we had kind of support down here, and we're getting a little bounce right here. So as long as this line acts as a support line, I would just keep in mind, you have that 400 level, and then boom, as soon as it breaks, probably bearish to the downside. The value is in low market cap stocks. Yeah, we can check out the IWM and like the Russell 2000 and some, small cap stocks. I think it's tough right now because with how, I think as long as we stay in a higher interest rate environment, and I don't even really know if where rates are at right now, 4.5% or whatever, you could even really consider a high interest rate environment, because I think historically that's actually pretty normal. That it really hurts like the growth aspect for these smaller companies. And that's why right now, as we've waited for a kind of market turnaround, as we've waited for the market to get more bullish, I think most people have been looking at the bigger names because there's probably a little bit less Fed, like baked in Fed risk with big banks or with Apple or Microsoft compared to some of the companies that are in IWM. This is a good exercise. I actually don't know this. What are the biggest weightings in IWM? What? That's a good trivia question. What's the biggest? Maybe we go to ETF DB. Search IWM. Holdings. All right, Shockwave Medical is your biggest holding. Wow. It's the first one that I know. Celsius. There you go. Texas Roadhouse. There you go. Some fun little small caps. All right, yes. Tesla's continuing to get a little bounce there. I said we needed to hold that 144 level or 184 level. We are now closer to that 185 level. So continuing to watch Tesla here to see if we can hold 184, 185. Again, as always, if you guys got stocks in the chat you want us to check out, let me know. Speak now or forever hold your peace. We have Gareth Soloway coming on the show here in about 5 minutes. So smash the like. Get stoked from a man, Gareth Soloway from InTheMoneyStocks.com. Always on point with his analysis. What happened in the World Cup game? Oh my God, it's about to go to PKs. I'm ready to stream that live on the show and watch it. What were some of the other big I feel like there were a couple big news stories over the weekend we haven't talked about yet. Let's go to Benzinga.com and see what the top stories on Benzinga are today. Will Tesla maintain this trend, or is the stock heading for 52-week lows? Struggling cryptocurrency lender Genesis owes debtors $1.8 billion. It seems like just a mess going on with everything in the crypto space. What's Coinbase's stock doing today? Still hanging out at $46. Bitcoin is Bitcoin hanging out above 17,000. Go Bitcoin. Good for Bitcoin. I mean, this thing was, kind of, wasn't it in the 1600s? 16,000, 15. So, yeah, I mean, you're seeing Bitcoin up about 5% from its lows right now. Kind of surprised, honestly, how well Bitcoin is holding up, considering everything going on. Up 8.4% from its lows. I don't know. How can we do that with getting away with that? Any thoughts on VIX? Let's see VXX price. I mean, here's the thing: is I think actually VIX is pretty low right now. And you've had a lot of people be like, "Oh, we're not going to see the bear market capitulate until VIX hits 40 or whatever." And I've tried to kind of make this point on the show before. It's like every single. There's been all these people since the market kind of went to shit, and 6 months ago or whatever, basically saying things along the lines of like, we've never been able to get rid of inflation like this without causing a recession, or essentially stocks have to crash this much. VIX has to go to this point till we get the capitulation. People just essentially saying that we need to hit this rock bottom point. We need to hit that capitulation point. We need to see the VIX skyrocket before the market can bottom. And I was always in the camp of like, why are you saying that? And they were saying, okay, well, because that was the case in, when we had to get rid of inflation in, 1980 or whatever. We had to cause a recession. All these things. It's like, okay, your sample size for that is like 2 or 3. You can't say that there's not a chance that we can bring inflation down without causing this sort of recession or a capitulation point in the market. You can't say factually that's not possible. It's not feasible. And I think we're seeing right now evidence that it is feasible. I'm not saying it's likely or the most likely outcome, but I think we've seen a lot of evidence now that inflation has come down or slowed without a big downturn in the economy or unemployment shooting up X amount. And you heard, Powell basically say like there will be pain in the labor market to bring inflation down. And I think what we're seeing now is like we're closer to like maybe a softish, maybe a softer landing is possible. With that said, with the VIX, the VIX is low right now. I mean, the VIX is low even, basically at any point compared to, and this is not the actual VIX. I think, can we get the actual just VIX on Google? I think so. Yeah, I mean, the VIX is like, it's not like at historically low levels, right? If you look at the VIX in 2019, before COVID, when basically it seemed like we were making new all-time highs every day, VIX was very low, like below 15. Now it's at 20. But for the last year or so, I mean, this thing is way lower than its year average. I think now is actually a time where if you have stocks you like, or if you have trades, like when the VIX is low, I've always been taught is a better time to buy options than when VIX is high. And when VIX is high, it's a better time to be selling options. With that said, I have been kind of sprinkling and going in and buying some different contracts kind of because of that, being like, okay, well, VIX is pretty low. If you buy, say these puts and the market goes down, not only are your puts going to go up because the market's going down, but also then the VIX would increase as well. So that's just what I've always been taught, was when the VIX is low, it's a better time to be looking at buying some of those options contracts. And when the VIX is high, might be a good time to be looking at selling some of them. So again, I don't really, to be honest with you, like look at the VIX every day in my trading. I think, I don't know. I mean, like why it goes up when the market goes down typically. Like it's not a measure of how bad the market is. It's just a measure of fear and uncertainty. So if the SPY goes down 4% from now until Friday, right, the VIX is going to go up a little bit. But I just don't know outside of that. Like, I don't know really. Maybe Gareth. I see Gareth Soloway joining us from In the Money Stocks. I don't know. There's some people I'm sure that use the VIX every day, that use it in all types of their trading. I'm sure if you're more strictly trading all types of just options and derivatives, you're probably watching the VIX a little bit more closely. But to me, not something I'm watching on a day in, day out basis. All right, folks. Without further ado, let's go ahead and get to our next guest of the day. It's 12:31 p.m. Eastern time right now. We've got about 29 minutes left of the show. I see my man Gareth Soloway hanging out backstage. It's been a while, a couple months, I think, since we've had Gareth on the show. So excited to see his updated view on the markets, what stocks he's been watching. So without further ado, let's go ahead and give Gareth our very special Benzinga Live welcome. Bring him on the show. Gareth, how's it going?
Good. How's it going there?
Good to have you back on the show. How was your weekend? Have a good weekend?
Yeah, it was nice. A little family time, a little bit of work spliced in there, but that's perfect for me.
Nice. So let's hop right into it. It's been a couple weeks since we've had you on the show. Markets have obviously moved a lot since then. We were kind of in this point now where I think there's a lot of people that are starting to get more bullish. Mm-hmm. There are people that are still worried about the outlook in 2023. People, skeptical that this rally or this move is legit. What do you think? Where do you stand?
Yeah, I'm still in the camp that this is kind of a bear market rally, and the thought process behind that is number one, yes, the trigger has been the Fed saying, hey, maybe we won't hike 75, but they're still going to do 50 and then probably 25 after that. And then remember, it takes 6 to 9 months for those interest rates to actually get into the economy. So arguably, you could say we haven't really even felt the last 275 hikes in the economy yet. And I think the big shock for the stock market is going to be when the stock market actually realizes we're going into a recession. And then they look to the Fed and they say, all right, Fed, you guys, tried to get inflation under control. Can you guys print us out of this recession? And the Fed's going to say, hey, listen, we have inflation still at 4% or wherever it is at that point. We can't do anything. So remember, every past big dip in the markets, the Fed was lowering rates and just printing money. Well, with inflation, again, probably not coming back to 2% anytime soon, they can't do that. And I think that's going to be a shock to investors probably in mid to late 2023.
Yeah, and I think that's a very interesting, outlook on it. It's just the fact that a lot of the market's action has been driven by Fed policy, mm-hmm. or specifically just Fed interest rate hikes. And now you're saying that people, even if the Fed starts talking about slowing down the rate of hikes or even maybe eventually cutting at some point in 2023, that might not matter as much in terms of a market rally if the backdrop to that is an overall recession.
Yeah, so I think it's not so much that they're going to stop hiking. They're definitely going to stop hiking, but the question then becomes, can they cut rates in 2023 if we go into a recession? And I think we have to look towards that inflation number, right? So what is that inflation back to 5%? Is it back to 4%? I think if we're back to 3 to 2, they might be able to do it. I'm just very skeptical that the inflation numbers are going to get that low. And without it being that low, how do they cut rates and stimulate when it could then cause inflation to spike back to 10%? So I think it's really going to be a tricky year. In fact, for me as a swing trader, I know you do a little swing trading. For me, it's like, I mean, this is our bread and butter. You get volatility in this market. I heard you talking about the VIX earlier. I mean, that's where swing traders do great. Long-term investors have been in control for years. Now swing traders starting to emerge as a kind of an awesome, trading ability.
Yeah. And I think I guess like the only like flip side I think argument to the interest rate or to the recession, a recession being the next driver of the economy low, not the Fed raising interest rates, is that if you look historically, like every time the Fed has cut interest rates, at least over the past like 20, 30 years, it's had to do so essentially because of a recession, because they have to cut rates while the economy is slowing down to try to encourage more growth. Whereas now I think there is, I don't think this is maybe a likely or the most likely scenario, but I do think there's a probably possible outcome where at like 2023 we're looking where inflation has come down significantly. Like you said, maybe it's not to 2%, but maybe it's at 3.5% or something. And the economy might not be firing at all cylinders, but not necessarily in like 08 recession territory. Yeah. But then the Fed's able to start cutting slightly because inflation has come down. And I think that would have a very positive impact on the market, because we haven't seen a time really, I guess maybe outside of COVID, you could argue, where the Fed's cut rates with a strong underlying economy, right? Because usually when the Fed's cutting rates, it's during a recession. I think right now, where we stand now, you could still argue we have a strong underlying economy. I mean, that's been why the Fed's been able to raise rates so much. I mean, like every past 6 months, every time we've gotten a good jobs number, the market's been down because people are like, oh my God, the Fed can keep raising now. And it's like our economy is just so strong that it just keeps chugging regardless of what the Fed's doing.
Yeah, and I think the big question there is when you look at the credit card debt, when you look at consumer spending, right? So it seems like during COVID, consumers paid down their debt. They paid down their credit card. They kind of were stuck at home. They couldn't go spend and go travel. And so now you have this kind of longer term reopening where everyone's getting giddy about planning a vacation, everything like that. My big question is, as we see credit card debt is now starting to spike again. At some point, does the consumer reach a maximum? And the other thing I would point out too is that while the jobs numbers haven't reflected a lot of job losses, in fact, we've seen continued job gains, you can't deny that every day, and you know this, you guys follow the market all the time. I mean, it's Facebook's announcing like laying off 10%. It's like every day some of these Fortune 500 companies are saying, okay, we're laying off this chunk of people. And at some point that has to be a reason for them doing that, right? They're cutting costs. And at some point that's going to filter into the jobs numbers. So again, I think you're talking about that perfect landing, that Goldilocks landing. I'm just very skeptical. I mean, the Fed has just not had a good track record of nailing it. Case in point, transitory inflation was probably one of their recent most biggest flubs. So maybe they can pull a rabbit out of a hat. I'm a doubter.
Yeah, no, and again, I kind of, that was like the one, I think, like I said, like I don't see that as really a likely scenario or the most likely. I think it's just not, like there's a non-zero chance, I think, that something like that happens. I mean, even if you think about, Gareth, like the past, what was it, Q2 and Q3 of this year when we had negative GDP quarters back to back and we had this whole argument is the economy in a recession or not? Call it what you want it, but you can't argue that like those 2 quarters were as bad of a type of recession, if that's what you want to call it, as 08, 09, just slightly negative GDP while we were still adding jobs. So if it's something similar to that in 2023, where it's like, yeah, things aren't firing at all cylinders, but it's not like we're at, rock bottom, and then the Fed is still able to cut maybe from, 4.5% or 5% to 4 or to 3.5, like, not cut back to 0. I could see something like that. That's what I'm hoping for, like me as an optimist, because that would be the best case scenario in terms of like not that many people you wouldn't see unemployment jump up, you wouldn't see the stock market crash. So I'm just being a hopeful optimist here that's a possibility. I know that you're saying is that that you're not as hopeful that can
and
happen.
I think what you're talking about is what the market, part of the reason why the markets are rallying here. They're seeing the Fed that's starting to back off from these 75 hikes. There's a path now where if you look at how the hike started, it was 25, then it was 50, then it was 475s. So they could now go back to 50, then 25. And it's kind of this perfect symmetrical kind of rise and fall in how many hikes they were doing. So I think that's why you're seeing the market rally. And I think in the first half of 2023, I think that could continue to drive stocks up a little bit as everyone's hoping for that Goldilocks outcome. So I definitely, let's hope it happens. It just to me, it's a little nerve wracking when you see all these big companies starting to lay off 10% of their workforce. But again, maybe we pull it out of the hat. And I think, in fact, can I show my chart real quick?
Of course, always.
Awesome, buddy. I want to just show you where we are on the S&P because it's just such a cool thing in terms of looking at the charts. So here's the S&P 500, the SPX. And what's interesting here is that if we look at a trend line from the all-time high on the S&P going back to earlier in 2022, right, January, and you drag that trend line down, look at how perfectly that trend line goes to right at the highs of where we currently just are pulling back from. So again, not to say we can't go above that, but short term, that's resistance. You've hit it. This is the fourth time that line's been hit. And again, this is a big test for the market because everyone's expecting this Santa Claus rally. If we're going to get a Santa Claus rally, you got to blow through that line. Otherwise, no Santa Claus rally, obviously. So just something to keep in mind. And we know the CPI data is coming out in a couple of weeks, or I think it's next week. We have the Fed next week as well. So this is setting up to be a fun December for investing and trading, I think.
Yeah, and I mean, that's why, like you said, like swing traders now are getting a market where oh, sorry, I got distracted because I saw Jada Roma's comment. But yeah, like you said, like this is a good environment for swing traders.
Yeah. No, it definitely is. It's kind of like, and again, I can sympathize with this because, I'm a swing trader for the last 15, 20 years. And definitely during the Fed printing, remember that period in the S&P where you didn't have more than a 3% pullback for like well over a year? That was just like horrible for us as swing traders, right? But now we're starting to get our flow back in here, and we'll see how long it lasts until the Fed comes in and starts printing again.
Yeah. Yeah, Jada Romo was saying 08. Ooh, about to sneeze. 08 was a bit of an anomaly as far as recessions go. Really avoid a repeat of the 70s, early 80s. So that's actually like what's interesting is like, I mean, it's like the Fed is like anything else, like any person that makes mistakes and learns from them or hypothetically learns from them or tries to learn from them. And in the 70s and 80s, again, I wasn't around, so I don't. But from what I understand, from what I've read, like what happened essentially was the economy, they were dealing with high inflation. The Fed was doing this kind of stop and go policy where it would raise interest rates one month, bring them down the next month, because the whole time trying to balance unemployment and inflation, and basically having this kind of wish-washy policy, not being hawkish or dovish, really was bad policy, and over time didn't give the economy ever time to fix, all right, either fix inflation or fix the growth problems, and they were kind of just stuck in the middle. And since then, I think the Fed has tried to then make a more clear, policy stance. Are we going to be hawkish? Are we going to be dovish? We've, of course, seen them be hawkish now for the past, year or so? When did the Fed start raising rates, Gareth?
Yeah, I think it's been about a year now since they, at least, I don't know if they started raising in last November or December, but it was certainly, that's when they were talking, saying, hey, we're going to be doing this. Yeah.
Yeah, and so I think, my point in bringing that up is I think when the time comes, and now that we're already seeing the Fed talk about cutting rates, I don't really see them repeating that kind of 70s, 80s type stop and go policy where they're, raising rates one month, cutting the next month. I see them taking a definitive stance. They've been hawkish for a year. I'm not saying they're getting dovish now, but they're starting to get closer to that. And like you said, Gareth, you're seeing things like the bond markets pricing out the most severe, rate hike scenario.
Yeah.
You're seeing a lot of these things that I think are signs, like you said, of why people are getting interested in the market right now, why people are willing to buy.
Yeah, and there's no doubt. I mean, the 10-year yield has come down from close to 4.4% all the way back to 3.58. So, I mean, that's telling you, for those of you out there watching, watch the 10-year. It basically is telling you what markets expect from the Fed. And what this is telling us is that the Fed definitely is not looking to hike as much, or at least the market's not expecting them to hike as much because rates are now starting to pull back a little bit.
Yeah. I don't know. If you want, Gareth, we can take a couple minutes and go through some like individual names. I see people talking about Mullen in the chat. Mullen Automotive. Like I don't even know what the deal with that
What's
stock
the symbol on that?
MULN. It was one of those like crazy SPAC EV companies that went crazy. It's ugly. I don't even think it's a legit company. I don't.
Holy cow. Yeah, I mean, this is anything at 19 or 20 cents, it's a gamble for me. It's like one of those where it's like, if you're going to invest, you got to be open to losing your entire investment if it goes to zero kind of thing. But it also can double or triple, right? And that's the fun thing about gambling. For me, yeah, it's not, right now I'm not seeing anything in the charts that's giving me a heads up. That's for sure.
Yeah. I see the person posting about their name is Who Dat, so maybe they're a Saints fan. You might be better off just throwing a bet on the Saints to win the Super Bowl this year. Would probably be about the same likelihood of the Mullen bet working out.
Nice, man.
So, all right. So how about what stocks are you watching right now? Any individual names?
So I've been nibbling on the short side, today on the little of the China stocks. And what's so funny is I know I've been on with you before, and we've been talking about going long the China stocks, and they've gone so insane at this point that for me, I mean, you had Pinduoduo here at $39. It just made a high today at $90, and that's in less than basically 1 month's time.
Holy
so it
cow.
went up 100%.
I knew Baba was up like 30% in that time frame.
my
I didn't
God.
know you had like other names like that were up that much.
Yeah, incredible. And Futu's another one. I mean, this thing's gone from $28 to a high today of 70 and change. I mean, that's incredible. They have pulled back off their highs, but I just think, again, I still think China longer term makes sense to me. It looks like, the COVID zero policy is kind of coming to an end, but you just never pay up here, right? If there were one thing I've learned in my trading history, you never chase, instead wait for pullbacks. A pullback for me would be interesting right around here, this former pivot, right around 56, gets down, there's a gap fill around 53. Then it starts to look a little bit more interesting. So those are the ones I've definitely been honing in on some of those on the short side. A couple of the other ones that I'm keeping an eye on, let me see here. There's, some of the large caps. I was looking to actually do an intraday short on Apple today. There was a gap fill right here at $151 in Pierce, and it literally came within pennies of hitting it. I didn't get in the trade, but look at that pullback.
Yeah,
you guys can see the gap fill right there. I mean, it went so close to filling me. But that's the nature of a trader, right? I mean, sometimes you get filled, sometimes you don't, but you got to be disciplined at your levels. So that's kind of interesting. I'm trying to think of what else I've been kind of analyzing today. PNC was another one here. That one's down pretty nicely today. We traded this a little bit. It bounced just a little bit off of this, but you can see nice dip on PNC. Next level on PNC would be 153.35 today as support for a little technical intraday trade. I wouldn't swing it. Doesn't look like a good swing trade long chart, just more of a day trade down there at that point of interest. And I think, again, you look at like a chart like Bitcoin. Bitcoin had this beautiful bull flag today, and it started to break out and then kind of stalled out. We'll see if it can kind of start to move up again. But I think the equity markets being down today, the S&P is getting hit a little bit. That's taking, that risk asset off the table, and you're seeing some selling pressure. But it was a beautiful little bull flag, and it's still technically there. You just don't like to see kind of an attempt and a failure there on the chart.
Yeah. One thing I've been watching, or one stock is Tesla today, underperforming the market, down about 5.6%. I'm honestly like, it looks terrible. The chart looks terrible, but I just feel like eventually, I don't know, like eventually Tesla's got to have a little rally in it somewhere, right?
Yeah, for sure. One of the things to note here is see this pivot going back to 2020, and that's actually where that recent low was, which gave it this little bit of a bounce right here. The question is, do we see a sell-off? And the only thing that's concerning with Tesla is that if the markets start to fall, then obviously Tesla falls. The fact that it's underperforming today also shows relative weakness. There's a gap fill here that I'm actually eyeing, and it goes all the way back to November of 2020. There was a gap where this bigger breakout started. And so for me, that's kind of the level I'm eyeing. It's around $136, $137. I know it seems like a far way away, but the way this stock moves, that could be in like 3 or 4 days. But that gap fill with all this sideways chop here in the charts of support, definitely I would expect at least a bounce, a swing trade, nice bounce off of that one.
Yeah. So sorry, what was that level on? You're saying on the bottom line that you have drawn right there?
Yeah, it's there's a gap fill right there at around 136, 137. And again, that was kind of the sideways chop before it broke out into this bigger move up. So I always like retraces to kind of key breakout points, and that would be one. And it's still a ways lower though. So, again, it may not get down there, but if it does, I'd be probably nibbling for at least a swing trade there.
Yeah. And I think, so what would be your holdup essentially if that's like your price target now? Looking at the chart, you think it's heading back down there. What would be your holdup in wanting to play it to the downside to get there?
That's a great question. So my general policy is that when stocks are extremely extended, like if you look at the Chinese stocks, they're up in a month 100, 150%. Like I like ones that are just so ridiculous and they're so extended. When I look at Tesla here, it's already fallen so much that the risk reward is not like if I'm wrong on Tesla and I shorted here at 184, I mean, if it pops just up here, I'm out of the money $50. That's already basically the reward that I'm getting, and it's only up to here, right? So for me, it's a matter of I want the extremes when I pull the trigger, not kind of waiting for a lot of the downside to already be in before I pull the trigger. And so for me, it's like a little bit of downside versus risk. I mean, heck, who's to say it can't go right up here again, right? If all of a sudden Elon Musk says, I'm going to focus back on Tesla and give, hire this CEO to run Twitter, boom, this thing could be up $50 in a day very easily. I don't think that's likely because he's a control guy, but it's more of just looking at the risk reward of the trade. I'd much rather be a buyer now at key levels versus someone who's shorting.
Yeah, and I think that makes sense. So basically, you wouldn't want to go short here for the $20 move from 183 to 165 or the $18 move from there when it's already down this much. You'd rather start looking for a point to go on the long side. Because this move to the downside has now already happened. We've already missed essentially this big move to the downside.
We've already missed if you look at from this high of 312, we've already missed 80% of the move. So it's kind of like I feel like I'm chasing at that point. So I'd much rather just be patient and see if it can hit that support and then go for the long.
Yeah. All right, let's see, Gareth. I'll see if we've got any other tickers flying out of the chat. Well, actually, this will be interesting. What are your thoughts on just Bitcoin right now or crypto in general? Any
Yeah. So I think Bitcoin, again, short term, it still has this bull flag in it. But again, I shouldn't say long term. So long term, I'm super bullish. If you ask me where this thing is in 5 years from now, I think it's way, way higher from here. I think the key is going to be regulation and transparency. We need regulation to get transparency. We need transparency in the Bitcoin sector to bring in big money. After FTX, big money's basically now like we're not even going close to it because again, big money's not going to risk their reputation, right? If something goes wrong, think about what Kevin O'Leary's going through or some of these other guys. They just can't put client money in there or anything like that. So you get regulation, and that probably puts a floor in. My guess is we won't get regulation for 3 to 6 months, and I still think there's more downside over that period, even if we get a short-term pop off this bull flag. So I'd be looking for, honestly, I have it priced out to probably go to about 9,000, give or take. And then I think you get a bottom, and then the next big move can start to the upside.
Yeah, it's just been tough. And then while looking at Bitcoin, I've been looking at Coinbase a little bit too, and I've honestly been surprised at how well Coinbase has been able to hold up. And there's actually been some days where Bitcoin's been down, where Coinbase has stayed steady or even been up that day. Do you think that's a sign? If it looks like no matter what's going on in the crypto industry, Coinbase is consolidating, maintaining its level. Is that a certain point to get bullish when a stock stops responding to bad news?
It definitely is the beginnings of it. The question is if Bitcoin falls to 12 and then 9, can Coinbase still hold up? But I think one of the positives for Coinbase is that because it's traded publicly, you assume that there's a little bit more SEC overview or oversight. And it makes people, I think, feel a little bit better that they might be one of the last ones standing. Like Binance has held up relatively well during this because they're hopefully more solid than an FTX is and some of these other ones. And I think Coinbase is in that group. So it's almost like eliminating your competitors and assuming that the SEC has seen their books and is okay with it, then you would trust this one a little bit more. So I think, again, it doesn't mean it can't go a little bit lower, but it certainly is interesting that you didn't see it really make new lows when Bitcoin made new lows recently.
Yeah, and again, I think that's what I'd be looking for. I'm not in Coinbase at all. I haven't gotten into it. But like if I start noticing that more and more that like say, Bitcoin goes from what's it at right now, 16? If Bitcoin or 17, if Bitcoin goes to 17 and back to 15 and Coinbase still at 45, like all right, that gets that gets me a little interested. And then if Bitcoin, keeps moving lower and Coinbase is still there, all right, that gets me even more interested. And so I'm not in Coinbase yet, not ready. And I think what you said is like spot on, Gareth, that the question is like, does this, this could be the start of that, but is it, something we can count on now, or is it something that's a little bit further down the line that this thing actually, consolidates and picks up steam and gets bullish again?
Yeah, and I've got to believe that Coinbase is fully in contact with the SEC and trying to make sure that they're dotting their I's and crossing their T's, especially after FTX. And everything about, like, if you're an exchange now, it's all about how do you make the customer feel more comfortable, right? You have to get that trust back and maintain that trust. And I think I would assume that they're doing that, even if we don't hear about it. I got to believe that that's going on.
Yeah, 100%. I mean, the big concern here, if you're a long-term investor, would just be about the overall industry and figure out like, okay, not that the FTX fallout or whatever kills the crypto industry forever, but it's just about, okay, how long will this have an impact for? What will that impact be for Coinbase? Is it good for Coinbase because now everyone has to go to Coinbase instead of FTX? Is it bad for Coinbase because now, there are a bunch of people who after the FTX and stuff said, oh no, to hell with that. I'm not buying any more crypto. So all those questions have to be answered. And that's what's fun about the stock market, Gareth, is we can kind of try to play detectives and figure those things out on our own. And then, like you said, place a bet on it.
Yep, that's exactly it, man. That's why you have buyers and sellers. There are people that disagree with us, and then they're selling and we're buying. And yeah, it's exactly why markets are made.
Right. All right. Well, Gareth, we've only got about 2 or 3 minutes left. So do you want to give us just a quick rundown of exactly what it is inthemoneystocks.com is?
Yeah, absolutely. So inthemoneystocks.com is basically, it's a website. I've run it for now 15 years. We started it in 2007. And basically I have a service on there where I basically, you get access. I do daily videos with all the technical analysis on charts like gold and silver and Bitcoin and the S&P and individual charts. And then I put out trade signals. And so, if I find a good trade setup, I put it right out to members. They get alerts on their app and everything, and they can just basically follow. So it's a cool little way to kind of get that edge on the market. And you can see the track record on the page there. It's full transparency.
Hell yeah. All right. Well, I got that link in the chat, inthemoneystocks.com. Gareth Soloway. Folks can also find you on Twitter. Is that just at Gareth Soloway?
That's it. Yep. Watch out for fakes, guys. There's fakes out there, so just be careful.
All right, I'll drop the yours in the chat. Hopefully it's I got the right one. Blue check mark and everything. All right. I'll drop that Twitter in the chat. Gareth, thanks for hopping on today, especially short notice. We'll have to get you back on again sooner than having the long break we had since last time we had you on.
Man. Always a pleasure talking to you, and thanks for having me.
Of course, man. All right, enjoy the rest of your Monday. Have a good week.
Thank you.
All right, guys, that was Gareth Money from inthemoneystocks.com. You can go ahead and give him a follow on Twitter at Gareth Soloway, and then go check out the site as well. We've got about 3 minutes left of the show, so I don't know. I don't really have a plan for the last 3 minutes, if I'm being honest with you. Okay, it looks like Croatia defeated Japan in penalty kicks. So if you had Croatia over Japan, congratulations. Maybe... What should we do for the rest of the show? Should we play Wordle? I haven't played Wordle on the show in hellos. SPY head into... I don't know. Tesla did make new lows, though, which I'm not mad about because I'm holding some Tesla puts right now that I got in today at around like 11 a.m. Tesla was at like 185 down to 183 right now. I just think like I don't know why... I don't think there's really that compelling of a bull case for Tesla right now. I think eventually the stock comes down a little bit further and it just becomes a no-brainer buy, but I don't think we're there yet. Until we're there, I don't know what like the bullish why essentially like I would be bullish this stock right now. Outside of like a Fed pivot, which like we said, we think is still months and months away. So yeah. SPY touched the 65 EMA on the 4-hour. I don't think SPY is heading at 300. Did SPY even get below 400 today? No, we're at 442. So yeah, watch that level. If we get below 400 on SPY, I think we're going back down to like 392. I think we got ways to go to the downside. If we can hold 400, I don't know. Up in the air. Let's get a little Wordle going. Haven't played Wordle on here in a minute. Wordle. We know how to play Wordle. Come on now. All right. What should we start with? What should be our opening word? Let's do stock for the show. Oof. All right. What has a K in it? Could be. All right. Pock. No. Pokey. All right. At least that gets us. Okay. Here we go. All right. Woke. No. Joker. Should I go Joker? Oh, I thought that was it for sure. Any good trades, MD? That's a good question, MD. Drop us the trades, man. Dow going to dump hard into Christmas and the New Year. So, Bill, I mean that's contrarian to what most people that have come on the show have been saying. That they think the market's going to perform well into the end of the year, and then 2023 is when things could start to get bad. So I like the fact that you're taking a different angle than kind of the consensus that's been on the show. You're taking the kind of the contrarian approach. Everyone's saying, oh, the bottoms have been in for 2022. Here comes a Santa Claus rally. You're saying you don't quite think so, or at least on the Dow. Try Woken. Is that a word? Is Woken a word? We've only got 3 guesses left. Woken. Oh, did you know that was what it was? Jonathan Lovelace. Good call, though. DG held up. You talking about David Green? What are you talking about? Are you talking about, Dollar General, the stock? Yeah, and we've talked about that before on, whoa. That is not what, not the link I was trying to bring us to. Sorry, guys. We've talked about this before on the show, right? Which stocks did the best the last time we had a true recession? A lot of those stocks were the, Dollar Trees, the Dollar Generals, and it makes sense, right? People that were shopping at different places, essentially have to come to those. And we've noticed that in the past, 6 months or so, in the sense that, Walmart and Walmart's been outperforming Target throughout the past, 6 months or so by a lot. Let's go to the daily chart. And I think that's what we're seeing, kind of the same phenomenon where you saw Dollar Tree and Dollar General outperforming when we were in a real recession, is that now, even though I've been, I haven't been one to really say okay, we've been in a real recession. I don't think that's even necessarily true. Yeah, see, Walmart's been... So, wait. If you go far enough back, Target's outperforming, but let me just see this. Am I wrong on this? Is it the opposite? No. Target stock over the last 6 months is down 1.82%, so pretty flat. Walmart stock over the past 6 months is up 20%. So yeah, over the past 6 months, Walmart is absolutely crushing Target. Walmart stock is up more than 20% over the last 6 months, whereas Target's is down, albeit slightly, so pretty flat. But it's just showing you that maybe as people were, even though it wasn't real recession type where unemployment spiked up, people were dealing with the impacts of inflation. People might have had less money to spend at the grocery store, so they might go to Walmart instead of Target. And I think, you are seeing some consumer trends like that, so it'll be interesting to watch going forward. CRM, Salesforce lost another top guy, CEO of Slack leaving. Interesting. Maybe I can finally get some new Slack sound notifications. I get bugged by the ones that I have right now. All right, guys, it is 1:04 p.m. I see Money Mitch hopped in backstage. So without further ado, we'll go ahead and get that promo bumper we have for our Benzinga crypto event coming up this week. Crypto and fintech in New York City. If you haven't already got your ticket, I don't know what you're doing. Get them now before it is too late.
What happened? What happened? Did AB flush this market, man? I left and this was looking good. I come back and oh man, we're down here, down to 400. It looks like we're getting a little bit of a pullback today. We'll talk all about it right here on Stock Market Movers. We got a lot to talk about. I got my guest today. We got Fred Hubler and Lance Roberts coming at you guys soon. Hit the thumbs up. Let's get right towards the action. This is Stock Market Movers. And I'm your host, Money Mitch. There are 3 ways to make a living in this business. Be first, be smarter, or cheat. I can't help you cheat, but I can give you the informational edge to help you succeed in the markets. Welcome to Stock Market Movers. All the market moving headlines and expert opinions every day. They say money is the oxygen of capitalism, and I want to breathe more than any man alive. All right, traders, welcome back. It's Monday. We're going to get into the action. And a lot of Monday, I feel, is like always, looking at the intermarket analysis, looking at the rotations, right? That's what this show is really about. A lot of the focus we focus on is looking at industries and sectors that are moving up. We'll get into all that, into what was hot and what was not today. That's going to be our segment coming up in just a few minutes, but let's get towards the action. And of course, today, a lot of focus was on China again, mentioning, of course, that the COVID lockdowns are kind of going away. Optimism was moving up these China stocks. Then in the morning, we started getting hit hard. A lot of that, we got to keep watch to see what happens in a name like Tesla, right? We got some bad news in Tesla today. We'll talk about it coming up in the headlines, but going to keep my eye out also on what's going on in oil today, as you guys are seeing XOM come down here. OPEC, of course, announcing that it would maintain its current policy of reducing oil production by 2 million barrels per day, around 2% of the world's demand from November until the end of the year. And one thing, of course, markets were holding up a little bit on oil, on that optimism of China reopening. And then, of course, today we start getting ExxonMobil to finally start letting go. The question is this truly going to crack here? We've seen multiple wick come down to this area, 107.48s, 107.57s. Now it looks like we're finally getting that turnaround. And where could the pullback come to? Well, one thing that I'll be giving is definitely looking back for it to come back into kind of the 50% retracement of that recent move. That's going to be a move slightly below 100. We'll see if we get that pullback, but ExxonMobil, definitely not a bad one to keep on watch. And we'll see if it's an overall industry move on what was hot and what was not. You can see like Chevron giving us a clear example. It's not just one of these. They're getting hit hard today. We'll take a look at that. Of course, China stocks are up also. We can talk a little bit about that. And we did get hit hard on the numbers today. So we got to go ahead and talk about that. That's going to be, of course, what happened this morning when we got our ISM numbers underneath the expectations. And we got hit. We did get a little bit of a bounce. So it didn't seem like it was too bad there. But now we're getting this continued pullback. And I think as long as we can stay within a range, we're not looking too bad. One of the things that I've been looking on the SPY overall is kind of following kind of the trend line action, right? And one of the things that we've been seeing is it kind of being able to hold pullbacks into this area. We're going to look for this to kind of hold again. And that's going to be somewhere between this 400 spot and towards 399. Don't want to see it really get to like, let's say 396. That would get me to the point where I think that this trend kind of breaks. But for right now, If we can come back in the next couple of days and reclaim the 200-day moving average above 403.56, I think we won't be looking too bad for these stocks. Of course, we need to keep watch what happens. And at 1:15, we'll get into some of this with our guests coming up. Let's get into some other action. Let's go towards the first headline that I wanted to talk about. Of course, China stocks up big today. Let's take a look at how they actually traded in the intraday action. Let's go to the 15-minute. As you guys can see, big pullback there. Looks like these China stocks let go in some of these names. And this is just how the trade has been. It's really difficult to trade these, especially because one thing I've been noticing is such gaps, right? When the stocks are gapping like this, it's very hard to trade. Especially taking a name into the gap like that it's really difficult. But you can see it's not only one of them that's doing this, right? Look at PDD, a lot of gaps on that chart. JD, a lot of gaps up on that chart, and they're hard to trade. If you go to the 15-minute, you can see a lot of kind of red action on the intraday, but overall, it's still up. And I think one of the things that we need to be looking on these are hourly pullbacks towards the prior range, and then looking to see if we get a bounce off of that. Similar example is where JD is now, coming back into, of course, Friday's range. We'll see if it eventually just gets a pop towards the close, or tomorrow gaps up again. And the next thing you know, it could be back through that 62. It's been really hard trade on these. I'm not going to say it's easy by any means. I know I haven't taken any of these China names, but a lot of that is the gapping action. I don't like when stocks gap that much. It just leaves room for also the down gap, right? Like, let's say if you bought in here and towards 56, 57, the next day you're already down there towards 52. That can get you in a world of pain really quick. Of course, Michael Burry over the weekend was giving some comments on how he was seeing some valuations starting to make sense in China. He talked to the Hang Seng and also talked to 97 levels. 25 years have gone by since that 97 levels, and GDP has multiplied 18 times during that time. 97 valuations were at 20 times earning, 10 times EV sales, and 3 times tangible book. What he's trying to point at here is that he feels that there's value really starting to come play into these China names, and we are getting a nice lift. We'll just have to keep watch to see if these China names can continue to run. All right, let's continue. Let's go towards Tesla, as that was definitely one of the major news on the day, as Tesla was reported by Bloomberg that they were reducing production at its Shanghai factory by 20%. I did see some mentions out there that some people were saying that this wasn't true. I'm not going to say that it is true or not true, because that's not what I'm here for. But one thing I could clearly see is it definitely hit Tesla today. You guys can see it here on the 15-minute in kind of the pre-market hours around 5:15 a.m. We started taking that hit, and since then we're down about 5.72%. We are catching a little bit of a bounce near this 182.50 area. We'll see if this holds on the day. If this doesn't hold here, I think we're going to start coming back down closer towards where we got the bounce on November 22nd. I've talked about this 167.43 area. That is the stock split from 2020. And I'm going to see if we come back into that level. I've talked about that level before. That's right here on this high. So we'll see if we come back towards that and actually hold there for a little while, go sideways, and then I'll be looking for some opportunity maybe in Tesla. But it doesn't look good, of course, if production is going to come down. And I've been worried about what's going on in China, how it would start to affect Tesla's sales and deliveries. Of course, we've been hearing from LI on their recent mentions of their deliveries and what their expectations were. And also Xpeng gave some expectations for the Q4, and those didn't look good. So that gave me a little bit of a warning sign of what we would see from Tesla's China numbers. We'll see what happens there, as it's pulling back right now and definitely dragging the market. We'll see what happens in those Tesla names. Now we can get into, of course, our interview, and then we'll get into some upgrades and downgrades. There's a lot that came out today. There was Starbucks, MGM, United Airlines. We'll get into some of those upgrades and downgrades coming up. Hit the thumbs up. Let's go ahead. I'm going to pull up here, and we're going to go towards our interview today. Of course, like always, we want to get you to the experts. So if you guys have a question out there in the chat, go ahead and throw it up. It's good to see you guys out there. Beach Bum, Jonathan, what's going on out there, team? What are you guys seeing making moves today? Hit the thumbs up. Let's get right towards the action. All right, bringing back Fred Hubler, CEO and Chief Wealth Strategist at Creative Capital Wealth Management Group. How are we doing today?
How's it going, Money Mitch? I'm official now. I have the sign behind my head.
I see you. Look at that. I like it, man. I don't know when you got that going, but it looks good.
Had to look good for your show.
Hey, gotta look good, right? Let's keep it going, Fred. What is going on in the labor markets as of recent? A lot of investors
good news
are
on
confused.
payrolls. Yeah, it's confusing. Good news on payrolls is bad news for the markets.
Yeah.
There's a tight, the job openings have eased. You saw all the layoffs from the tech companies. At the same time, I think it was Richard Thomas Barkin, the president of the Richmond Federal Reserve Bank, said the economy may be entering a period in which labor supply is constrained for a long period of time, and that'll keep upward pressure on inflation and obviously salaries. And I think it's going to be longer to unwind this everything bubble everywhere. And that's a theme that you're seeing in the market. Saw it in crypto. We've never, as a global economy, never had an everything bubble everywhere. Usually it was tech stocks or housing. It's going to take a while to unwind all that. And that's something that the labor market is an indicator of. I have 2 job openings. I can't find the right people. I don't know where all the waiters and waitresses went. I just don't know where they went. And that's the job market report I want to see, is where are the people that used to show up for work? Where are they if there's still job openings? And most restaurants that you go to, they have the, please give us some patience because we don't have enough people.
Yeah, it seems like it's a common thing. And I'm sorry if you hear my dog barking in the background. She sees these stocks going down and she's worried about them too. But it's how it is right now. I feel it. When we go to places, it seems like it's a common thing to hear that, yeah, they're understaffed and that's why the struggles are going on. But like always, I think that this is something that is kind of a new change in the economy, because it seems to me like something has changed from that time, right? Since we were in the pandemic, we came out. I don't know if it's retirement that's causing these numbers to not catch up, but of course we see all those layoffs in tech, yet the numbers aren't showing up. What is going on here, Fred? Talk some sense into me.
I wish I could. I think the information we need will show up after the bad news has already hit the market. I think we really need to know where are the workers, and we need to understand. I think what's going to happen, and it's a normal, recessions are normal in an economic cycle. A friend of mine owns an insurance company. He sells all and he's like, basically next year, 2023, there's going to be a huge increase in premiums of property and casualty insurance. And this, insurance companies have 2 rules. Rule number 1, don't lose money. Rule number 2, look at rule number 1. So when the premium for your car, your premium for your house doesn't cover the replacement because of supply chain, like enter the excuse, we're going to see bills go up that are still not caked in. You're not baked into the economy. And I joked around. I went to a fast food place, and two combo meals and a hamburger is $28. So I think that's going to change consumer behavior, which really hasn't changed the way that we think. And so I think employment will be the least of our issues when 70-80% of our economy is consumer driven. When the consumers say, I'm not going to buy fill in the blank because it's too expensive, then you're going to see the real employment show up. Then you're going to see companies lay people off. Then you're going to start seeing some really big, moves. And I think you're going to start seeing that more next year than this year. I know that you had, there's a lot of people are thinking that next year is going to be the bad year. I'm in that boat, and I'm not promising the end of this year is going to be good either. But I think some of the employment numbers we want, then it'll make sense, because then we'll see layoffs of the companies that aren't able to sell their products because of consumer-driven changes. Yeah. That's going to make sense. It's not going to be fun. We're overdue for a recession if you ask some economists that are honest with what they're doing. And there's going to be, and there's zombie companies out there that are only alive because debt used to be cheap. And they're good and they're clean and they probably have staff, but they're barely etching by. Those companies are going away. And you probably, I know this, but Warren Buffett and private equity have never had more in cash than they do right now. So they're still waiting for things to be on sale. And I think the employment numbers are going to be a lagging indicator. Once we see it in the market, we're going to say, well, why'd that happen? Well, people aren't buying our stuff. And then now we're letting the layoffs.
Now, the interesting perspective also will be there, and I'm kind of in the same camp as you, that I do see the consumer struggle into next year. But the question will be, is by that time the market way ahead of this? Is the market maybe 6 months, 12 months down the line and not really thinking about the recession, but already getting after that recession, already getting that rip past it? It seems to me like this is what we're seeing out there. What do you think about that?
I think the market is assuming the Fed will slow sooner than the Fed has already said they were going to slow.
Yeah.
And I think if the Fed really looks at the numbers, they're not going to be able to slow as fast. And like if employment's high because I have to pay more because I can't get people, that's not transitional. Like I'm not going to pay you X today and less next year. You have a rental property, your rent goes up. It typically doesn't go back down. It might not go up as much. So there's a lot of bumps up from expenses or even income. If you're the landlord, they don't go backwards. So it's going to take a while for that to kind of go, for the Fed to see the right numbers to say, okay, everything's kind of cooling down. And like always, there's going to be an overlap. There's going to be, hey, we should have stopped this 6 months ago, but you don't know that until you're 9 months into when you should have stopped. And there's still that ongoing argument: are we in a recession now? Given the definition of what a recession is, it's a weird world. I think you said, and I think the other thing that COVID, there's two things that I don't think we can really monitor, and that's consumer, the behavioral aspect of it. So I think COVID scared a lot of people saying, hey, do I have a life that's significant? Do I have a job that's significant? If not, I'm going to go do something that I love because life's short. That was one thing. The other thing, and I think this is also hard to monitor or even see it, but you feel it, is the narrative that everything's okay. There is no inflation. There is no recession because it's on TV and it tells us that. And the reality will always win. And I think reality will be uglier than the narrative, and people will be frustrated and probably make bad decisions. They will sell they'll do some things because they're spooked. And I think all of us still have the DNA of 2008. It's almost like you're at a raver and the police come and you got arrested. Well, now you're at a party and you're making sure that you're close to the door. And if you see any red lights, you're going out the window. And we all know that the door to get out of the market isn't as, when everyone's trying to get out, you don't want to do that. The other concern we have is on the fixed income side. There's a lot of companies that are BBB and are investment grade, and they're in the pensions, which are the biggest buyers of these bonds. If an analyst says they're not BBB anymore, they're BB, the biggest sellers or the biggest buyers become the biggest sellers. Yeah. And that's not good for anybody. And the pension laws say you can't own something that's not investment grade. So that scares me because there's people that have their bond funds that are older than our parents that never lost a penny in a bond fund because, it's been a bull market for bond funds. So I think that will also impact the market, because I think when things start to unravel, it'll be multiple things at the same time. And I think crisis management now is going to be the normal portfolio management for people, because what's going to hit multiple fans at the same time. And I don't know when, and I hope none of it happens, but we're prepared for it.
Yeah, it's how it has to be. One thing I always say is that you have to know both sides of the coin and what could be coming, because if you don't, then how are you going to be ready for the situation when it presents itself, right? And so one thing I've been seeing is, of course, it seems like a little bit of weakening in the overall economy is starting to show itself. What do you think there, Fred? Do you see some overall weakening?
Yeah, so part of our have a little bit of a different view. We're in 28 states. All of our clients are accredited. They're multimillionaires. They either have businesses or they have property or they have everything else. A lot of them are taking it very, very conservative. They're not deploying new capital into anything. They're reducing their equity risk. They're going into hard assets. So whether it's a business that's cash flowing, that's recession resistant, or even if it's going into owning underlying real estate that's recession resistant. So think grocery store or dialysis centers. I don't care if you and I have to be in a hamster ball. If we need dialysis, we're going. So at the end of the day, land and landlords and those types of things, the real estate's only valuable if it's cash flowing because it's a tenant. So there's a move to very defensive. And the thing that really not scares me, but concerns me is we're in a position to help clients that are selling gigantic pieces of real estate, and they sell it and then they 1031 into programs we can put them into where they can get that partial ownership of other things. Those families have had that real estate, mobile home parks or apartment buildings in their family for 30, 40, 50 years. And this is the year they're selling. And when I ask them why, and they're brand new to us, it was we barely got by with 2020. Inflation, the prices are now high enough that we're able to do it. They're just trying to get their chips off the table. So when very wealthy families are taking chips off the table, I take notice. And for the most part, they're not deploying it. They're just like we said with private equity and the Warren Buffetts of the world. They're keeping dry capital so that they have something to pounce. And I think equities are a great long-term investment, but you have to get in them at the right time, or dollar cost average, or watch your show and get in at the right day of the time. So I do see things slowing down. I do see next year being uglier, and we have reports of economies, economic factors, and everything is either yellow or red. And the two things that are green are barely on the range, are barely green, and probably the next time we see them will either be yellow or red. And that's without a black swan event. Like that's just the numbers now. So there's a lot of dominoes that are I don't know which one's going to fall first. I hope one falls at a time and we can absorb it. But there's a lot of risk out there that I don't think is necessarily reflected in people's portfolio in their head, because they have that recency bias of something bad happens, 9/11, 2008. There's a period of time, years or months, and it comes back. And that coming back after a downside, that's atypical. That's not how the markets usually work, but it's all we remember because it's all we've lived. Yeah. But if you go to go back, the Great Depression was 12 years. That's all. I mean, none of us were here, but coming. Yeah. So you just have to have some reset to how things typically work, because how they've worked lately, it isn't typical, but we feel it is because it's been what we've experienced.
I agree, and I think that a lot of investors see it like this, right? We compare it to the last major event. That's what a lot of investors do, and it's a normal for the behavior and the mentality to be stuck in that thinking. And I think that one of the things that we need to always kind of keep in mind is that it also is kind of a different situation. I don't think there's been very often times where we've had a Fed that's increasing the interest rates, inflation staying as sticky as it is. But yet it seems like when we look around, it seems like the economy is not that bad overall. It's definitely changing times. And I think that one of the things that is going to come out of this is potentially maybe a new norm. What do you think could potentially happen for inflation? Do you think that we could be looking at maybe a 4% for a long time down the line? Or do you think that there is going to be that battle and we will get it back towards the 2%? And of course, and if the Fed gets it to the 2%, that things break along the way.
Yes, I agree with you. And I think the answer is it'll be what we least expect, because as much control as the Fed has, they can't necessarily control what we do. And one of the changes, and we're seeing it now, is what we do is based on what we see, and what we're seeing is an echo chamber of where we look. So, if you're pro one or pro, whatever, so that feedback loop of looking at information that is tailored to you because social media knows what you liked and what you clicked on. As you said, you have to see both sides to make a comparison. You don't know if you fall in love with chocolate if you've never had vanilla. And we're having a hard time as a population around the world finding other flavors than what we originally said we liked, or what we're being kind of pushed to like. And that means you got to go out of your way to think for yourself, which isn't a normal. Most people don't think for themselves. I think they're probably, if you're honest with, most people are honest with themselves. They go to work, they kiss their kids goodbye, and they're not thinking for themselves. But you got to start thinking for yourself, or the systems will think for you. Your computer will think for you. And so I think we're very conservative with reducing equity. And when you look at equity, the thesis no one wants to talk about, it's buy, hold, and hope. Just because I bought Tesla today or you bought Tesla tomorrow doesn't mean we did anything to make the stock go up. We're just hoping that other people see what we saw if we're long, if we're bullish on it. But places like private equity or any kind of investment where there's a value add component, that has more of an upside potential, because you're only buying the company, for private equity as an example. And I'm not private equity, so I'm not selling, I don't do it. But they don't buy the company unless they know how to turn it around. And there's a value add component there that is missing in the market when you're just buy, hold, and hope. However, as you know, you can buy the right companies when they're having a bad, rough patch and just go along for the ride once the companies are as good as you think they are. I think the amount of companies that people should own is much smaller than the index, because the index works when everything's going up, but it doesn't work when it's flat. And maybe 10 or 15 of the S&P 500 are the ones you should have. And that takes conviction, whether you do it or you find a fund that does it. We're starting to see, almost like real estate, location, location, location. From an equity standpoint, it's company. It's the company you need to research, because the indexes may go outside and may not go where the company was. Indexes might be down, but the company goes up.
Yeah, and I think that a lot of times in this environment, when you're having such a rough stock environment, you can have some stocks that can come down with some really attractive fundamentals. When you look deep inside underneath the hood, you realize, what is going on here? Everything seems to make sense on the fundamental side, but the technicals aren't showing me that. Well, then we got to wait till we see that turn around, right? And I think that those are the type of companies that we need to be doing our deep dive research into, to understand where the cash flow is going, what the business truly has underneath itself. And that's when we're going to really get towards a point where we can find some of these investments for the long run. Seems like value is really truly taking the forefront now after growth was such a focus for so long. And that's something that we're going to have to keep watch for a while. Do you feel, right, are you more in the value camp, Fred, for next year?
Yeah, because growth makes assumptions that we don't control. Value makes assumptions that the company tends to be able to control. They have a new product, they have a new marketplace, they're cutting their costs. There's more of a tangible element that's more controllable, not that we can control all of it. Buying a company just because you think they're going to grow their way to the higher price, that was pre-COVID, that was pre-future potential recession. I think the value is where things are. And I think typically it always goes from growth to value as the economic cycle changes. And, recessions are necessary in any economy. They're not fun. And I hope it isn't, bad and isn't long. But we have to plan on it being bad and long so that you can survive.
Well, I can say definitely from our audience, they definitely appreciate you coming in here and giving the transparent view. That's what we all ask for, right? That's all we can ever ask for. Appreciate you coming in and giving the perspective. Fred Hubler, CEO, Chief Wealth Strategist at Creative Capital Wealth Management Group. Check him out. Appreciate you, Fred, coming on.
Thank you. Take care. Have a good one.
Have a good one. All right, there you guys have it. I thought that was a great conversation there, and I think that's something that we need to keep on watch to see what happens in the next couple of months. I think January is going to be such an important month to watch. As December goes up, what will happen at the beginning of the year? Will we start running into that trouble for the consumer? I think that's also something to keep an eye out for. Of course, we've heard the mentions of the buy now, pay later spikes that happened in the Cyber Week, right? And Black Friday. We'll see what happens now. Of course, do we start seeing the troubles in the consumer starting to hit? Like he mentioned, do you start hearing people talk about how they're cutting this type of cost and cutting here and there? Well, keep your eyes out. We'll have more coming up with Lance Roberts at 1:45. We still got a little bit there. We'll go into what was hot and what was not, and then we'll get towards Lance Roberts. But definitely, thank you, Fred, for coming on today. Let's go towards what was hot and what was not today. SPY still battling, trying to find some balance there. Still hasn't found the bottom. It's close to the 400. We'll see if we cut down there, maybe towards 399, and then I'd be looking for the bounce. Going to have to just keep watch to see what happens. All right, let's go towards the sectors and the industries and see what is in the red and what's in the green. As you can clearly tell, a lot in the red today. Let's start going through it. Catching up with the chat. What's going on out there, guys? Zoltan, Warren Buffett calling SPY to 500, says Dan. That's something I'll keep watch. SPY bounced 403, says Preston. Something that we all need to keep watch on that 400 level. We'll see what happens there. Jonathan Lovelace, I wouldn't be shorting China stocks here personally. It's not a golden cross I'm seeing on PDDs. Is that not a golden cross I'm seeing on PDDs daily? It could be. Let's check. All right. That is. It is on the daily. I mean, you can clearly see it. It crossed right over here where the 50 went back above the 200 day. And another thing to look at is when was the last def cross, right? Because if you're getting a golden cross, you got to compare that to the def cross. That's what I like to do. Why do I compare that? Because I want to see the last time that the def cross came in. Did we actually come down from those levels? That was right here. That was when the 50 came back below the 200-day, and then you could see the downside action. Now we're starting to get the flip. That's right here. And now we're starting to get that bullish action from that. Does it mean that PDD can pull back? Yeah, I do still think that PDD can pull back. These lines can get tighter again before another crossover to the downside. So I do see that it could get a little bit of a pullback. I see what you're seeing, Jonathan, and I also see what certain people in the chat are seeing for potential shorts off of these. But I don't think they're also thinking that this is just going to completely crack down. It's something to keep in mind. And of course, golden cross and a death cross, I'll tell you right now, those aren't going to be the best statistical things to kind of stick onto. You can do your research in those types of indicators to see how they move. But one thing that I'd keep in mind is that the golden cross or the death cross are some things that I don't necessarily trade off, but more along use it as descriptions on the chart. But always up to you how you use the indicator, and especially moving average crossovers. I don't normally trade off of crossovers. I use them to help me understand what's going on in the price action and if we are really starting to see that lift. All right, let's go into what was hot and what was not. We can take a look. Utilities leading the upside action, but it's actually down from the open overall. And you can see here, we've been kind of hanging into this trend. And you can see that also with a name like Duke. Look at Duke. Look how it's been hanging on here on the daily trend, just been kind of stair-stepping up, and doesn't break. This is not a bad outlook, but eventually I feel like this will break down after it's been doing kind of this V bottom shape. Eventually, I think we could get that breakdown back below 98s and starting to come back towards 90. So you got to be careful on a name like this. Another one that is in the same area is Nextera Energy. This one looks a little bit better towards the upside. We'll see what happens on these utility names. Nextera looks a little bit better because it's been hanging on in the last couple of months. We'll see if this can make a move back towards 87 and 88. They have been making a move. Utilities bouncing back. Defensives also down today. Grocery stores down about 2.3%. So even kind of the value names taking a little bit of a hit on the downside today. All defensive names down. And that just shows me how much this market is dragging right now. Definitely dragging. What's the getting hit the most? Energy. Energy is getting hit the most. And you can see it in a chart like ExxonMobil as you're now down towards 107.08 and really starting to break through the support. As you start to crash, be careful there. These could pull back and eventually find some support. But for right now, they do look like they're starting to let go. Oxy also starting to cut through the 66. We'll see what happens on these names as they are starting to get hit hard here. DVN starting to pull back. And it's not just, just a little bit of these. It's pretty much all of them right now on the downside. Some getting hit more than others. NOV getting hit hard on the downside there. That's been holding on for a while. We'll see if this really turns around the whole trade, or is it just a pullback to catch? All right, let's keep going. Financial services also pulling back big. We finally started seeing some crack in a name like JPM. JPM coming down fast today towards the support. We'll look to see if it continues to crack. Goldman Sachs. I talked about it earlier today. Would we go back into the gap zone? That was a big call out there as we were just over here at the 374. We're almost down into that gap zone on the daily for Goldman Sachs. Going to keep watching to see what happens after we get into that gap. We could find it as support and then come right back up, but definitely seeing Goldman Sachs let go today. Bank of America coming down fast there also. And you could also take a look at maybe like a Wells Fargo getting down there. You also got Morgan Stanley that should get that downside action. We'll see if it continues to break the support. This one's actually not too bad. Morgan Stanley, it's still coming back down fast. We'll see if it catches the support there. These banks have been running for weeks now, though, and starting to let go. All right, we'll keep going. We'll take a look at some other area. Now, I will give you guys an area that I'm looking at that I took a shot on. I'll tell you guys, I took a shot on American Airlines. So I'm going to go ahead and bring up United Airlines with this one. So I don't have to show you American. I don't think I have to show you guys that, but I will let you guys know that I am taking a swing on American towards the upside. Morgan Stanley upgraded United Airlines to overweight from equal weight. I think this is an important thing to keep in mind as we are starting to see some lift in these airlines. Can it continue to lift? One like United Airlines has a nice little trend line here. We'll look to see if we start getting a close towards 46. That could be a good level to watch. This is the United Airlines. You can also take a look at Delta, hitting a nice little lift today. We'll see if that can continue or not. Basic materials definitely got hit hard here. Aluminum taking a hard hit down. Alcoa pull back fast there. You got to be careful with those turnarounds in the materials. When they happen fast. Chemicals pulling back a little bit. Copper pulling back. Of course, FCX, SCCO have been really strong in that area, starting to pull back. We'll look to see if we catch a bounce tomorrow. Steel pulling back today. Of course, you guys remember I traded like X on Friday, and this is pulling back today. We'll see what happens on that. X pulling back there. NUE pulling back. Steel definitely getting a little bit of a pullback. Even the coal names like BTU, big pullback now underneath the 30 mark. We'll look to see if 30 can recover on Peabody, but it's been a really strong name as of late. AMR is another one that you guys can keep watch on these coal names. We'll see if Santa's bringing that coal this year. HCC is another one I'd keep in watch, but those are coal names just to keep those on your radar. Consumer cyclical also getting hit today. Of course, resorts and casinos starting to come back down, and I'm wondering what goes on with Wynn. I feel like this has been a big run in Wynn lately. It could start coming back, but another thing that you guys stated a little bit earlier today, I'll let you guys know also, you are getting a little bit of the kind of a golden cross there on Wynn. We'll see if it can continue running. Of course, this is with that Macau exposure. Easing of China restrictions should continue to help Wynn. But of course, that could always turn around if for any reason there's some lockdown concerns from COVID in China. We'll just have to wait and see. LVS is another one you can keep watch. They kind of run hand in hand, Wynn and LVS. We'll look to see if they can continue staying strong. All right, getting into some of the ratings that were out there today. I can go through some different stocks. If you guys have one, you guys can throw it up, but we'll keep going. Let's go towards Starbucks. Deutsche Bank downgrading Starbucks to a hold, but raising price target to 106. That just goes to show you that they're just kind of calling this maybe gone too far, but they still called out a price target slightly above from here. They're saying that they're not negative, but rather simply moving to hold on what deemed to be a good balance and risk to reward scenario at present. We'll see what happens there on Starbucks. Definitely has been making a move back from kind of the lows, and these lows were made kind of in June. And so it's not been a bad stock since then. I mean, when you think about it, it's up about 52%. It is coming back. For a lot of stocks that have been not making that far of a comeback, this has definitely come back towards their 22 price points. Of course, it started the year up there at 107.57. We'll see if it can come back up towards those levels as you see in Starbucks come back on the year overall. This one's not going to be a bad comeback. And with that one being mentioned, eventually we'll see if my Dutch bros can get moving off the floor. It's definitely on the floor right now around the 35s. Of course, I don't have any exposure towards it anymore, but who knows? Maybe we catch a run eventually. But with Starbucks getting hit on the downgrade, I'd be a little bit careful. Truist Securities did upgrade MGM to a buy and raising price target to 50, saying that the casino's operators could jump for 30% on a strong 2023 Las Vegas Strip calendar. Now, with that being said, I do think that you are going to get some lift, but if we are going to get into a recession next year, will that come hitting into kind of this outlook, right? Las Vegas, recession, that could definitely bring some people back down. But of course, MGM is kind of more, I would say, what I call the sexy hotel. So who knows? Maybe it gets a little running. What I like about MGM is, of course, is MGM bets. That's just overall because I'm hoping that one day they spin off that MGM bets because I definitely want access to it. We'll see what happens. Lately, it did get above the 200-day moving average. It is moving well. I think that these are kind of moving well because what? Value plays, right? They make sense right now. Just keep these on watch. We'll see how these kind of perform, but definitely value has been coming into play, and we'll see how these resorts can keep pushing. Of course, there's some other ones that you guys can watch here, but for resorts and casinos, of course, you have your leaders like LVS, MGM, Caesar. Maybe this is another one to keep in watch, right? If MGM is going to make the move, I think Caesar will also make the move. 200-day moving average right above Caesar at 52.46. Let's see if we can get it back up there. All right, getting out of this conversation, we could take a look, of course, at value and growth. But like always, one thing that we want to call out is some of these upgrades do get some stocks moving. So we'll see if that airlines really takes off. I'm taking my shot. But like always, you guys choose your own investment decisions. All right, going to pull this down and get towards our next interview. Excited to go ahead and talk to Lance Roberts here. Let's get right to it. All right, welcome back. Lance Roberts, Chief Strategist at RIA Advisors and editor of The Real Investment Advice. Welcome back. How we doing, Lance?
Well, it's wrapping up the year, so glad to be here.
Yeah, wrapping up the year. And one thing that I could at least say is that I don't think I'll miss 2022 too much, but I don't know how you think about it. I know that at least I got married, so that wasn't the worst thing. But overall, this market has not been fun to me. And I don't think it's been fun to a lot of investors out there. It's been tough. Now, What do you make of this recent rally, though, Lance? It seems like we got ourselves something.
Yeah, no, we do. And look, I was talking about this, 5-6 weeks ago.
Yeah.
When markets were, back at those lows in September, investor sentiment was extremely bearish. Markets were oversold. Nobody wanted to own any stocks. That's the perfect time to get this rally. And it's been a very nice rally since then. We're getting a little bit overdone here. I mean, markets have had a very nice run, 7 weeks. Next 2 weeks here, this week and next week, we have mutual fund rebalancing. So about 20% of all mutual funds have to distribute gains, dividends, income for the year. So might see a little bit of sloppiness in the market, but then we're going to see a lot of rebalancing right there for year-end reporting. Say mutual funds, hedge funds, pension funds, et cetera, have to get everything back in weight. So potentially that's that Santa Claus rally. And, we've seen bonds running here lately too. So that they've been out of balance and out of tolerance as well. So really kind of seeing buying on both fronts and should see that through the end of the year.
Yeah, that was one of my questions that I had is what do you expect to truly bottom first? Is it bonds or is it equities?
Probably bonds. I would imagine bonds are probably either have bottomed or about to bottom here pretty soon. And the reason that equities are going to lag a bit most likely is that we still have, don't forget when the Fed hikes interest rates, it takes about 9 months for that interest rate to come through. So if you think back to the beginning of this year, we had a 25 basis point hike in March. 6 weeks later, we had 50 basis points. Then we had 4 75 basis point rate hikes since then. Those 4 75 point rate hikes have not come into the economy yet. And now we're going to get 50 basis points next week with the Fed meeting, 3 25 basis points next year. So that's all got to get factored into earnings, profit margins, et cetera. So I think equities may have one more leg down here. Now, I'm not talking about 50% down, nothing like that. But, another down leg here that maybe retests these September lows. And that will probably be the bottom. Maybe. A lot will depend on whether or not we get a recession.
Definitely, it's going to depend on it. And of course, we can talk about that if you have any thoughts on a recession coming this next year. Of course, we saw the consumer numbers from Black Friday, and they didn't seem too bad. Now, of course, there was a couple of red flags, was kind of that buy now, pay later strategy. I don't know who was taking part in that. Definitely leave me out of that one. But what do you think is happening with the consumer, Lance? Do you starting to see some weakening?
Yeah, well, so first of all, you got to remember those retail sales numbers there's two things with the retail sales numbers. One, they're measured in dollars, right? Not volume, just dollars. And they're nominal. They're not inflation adjusted. So if you look at the Adobe number, so Adobe puts out retail sales numbers every year. So in 2020, they said we did about $8.9 billion in sales for Black Friday. Last year was about $8.8 billion. This year was 9.2. Okay. So really, retail sales haven't grown that much, but once you subtract out inflation, we actually lost about 5.7% in retail sales this year because of inflation. In other words, consumers were buying more, and unfortunately, they were doing it on this buy now, pay later thing. That had about a 78% jump. Credit cards had a 15% jump. So you're seeing a lot of use of credit, but actually buying less stuff, just paying more for it. So that doesn't bode well for the consumer going into next year. If I had to make bets at MGM Bets, I would bet on a recession. But the problem is that everybody is predicting a recession right now. And as Bob Farrell once said, when everybody expects something to happen, something else tends to occur. So we'll see.
Yeah, usually I like a quote that Dennis Dick has taught me, which the market likes to hurt where it can hurt the most. So if the most says recession, well, you know where it likes to hurt. Of course, let's talk about sector outlook, right? Of course, energy has been just kicking it out of the water. And you could say even for like maybe 2 years. Now, what sectors should we maybe be looking at maybe going into 2023? Do you think that we can get some turnarounds on these really beaten down sectors?
Yeah, we will. Look, a couple of things is that I don't know if you've ever seen it, but those periodic tables of returns that look like a quilt pattern. Yeah. And what you'll notice, if you ever look at those, people look at them and they kind of dismiss them. But if you ever look at them very closely, what it'll tell you is that when there's a sector that, or a major market, right? Large cap, mid cap, small cap. But whatever's at the top of that performance for 1 or 2 years typically falls to the bottom of the performance or close to it the next year. So let's think about next year. We've had 2 boomer years of energy stocks. In November of 20, we were talking about buying energy stocks because nobody wanted to buy them. Now we've actually sold all of our energy positions. We don't own any more right now. And the reason is that oil prices have been coming down, but energy stocks have not. And there's a big gap right now between energy stocks, for instance, like the XL, if you want to chart it up one day, look at XLE versus West Texas Intermediate crude. And there's a very big divergence in prices. That is unsustainable. So you're going to see a correction either in oil prices shooting back up to the moon and catching up with energy stocks or vice versa. We'll see what happens. But I think going into next year, your odds-on bet is going to be more for disinflationary trades. So that's going to be long bonds, long duration bonds, and then stocks that have potential to grow earnings. So you're going to go back to potentially tech stocks, and maybe even possibly the staples will continue to perform and hold up well. Healthcare should continue to do well because we're all getting old and dying. So, but I would bet, for technology to make a nice comeback sometime next year, probably the latter half.
Yeah, it's going to be interesting. I think that one of the things with tech is that there's still some zombies around that I think we need to get rid of. So we'll see what happens with that. Of course, as you mentioned, as interest rates really start catching up, that liquidity comes down. I'm sure we might lose some companies down the line as the cash burn continues. And then I could see some definitely opportunities opening up. This is why I think it's an important thing to be doing your shopping list, understanding what companies you really truly like, looking underneath the hood. How's those cash flows, right? Do you want to look under, or do you want to just put it right back up? If you want to put it right back, maybe we leave that one to the side for a little while. But now let's talk about a weaker dollar and what this could mean for the markets, because I think this is an important outlook here that some people might miss when they do see maybe the next turnaround for that dollar.
Yeah. So the dollar is very interesting, right? Because if you look back historically, and I just did a chart on this maybe 2 weeks ago, talking about the dollar and its correlation to the stock market. This year, we've had a very interesting correlation. Higher dollar has meant weaker stocks. Lower dollar, which is what started back in beginning of October, the dollar started weakening. We've had a very strong rally here. So we've had this very high non-correlation between the dollar and stocks. Unfortunately, though, historically, there is no correlation between dollars and stocks. They sometimes are correlated, sometimes they're not, and it's kind of just hit or miss. Going into next year, if we're going to get a recession, if we're going to get disinflationary trends, I would expect a weaker dollar. That's just because the dollar is representative of economic growth more so than the stock market. So if we're seeing money come out of the dollar, then that's going to bode well for bonds, potentially, again, disinflation. And a weaker dollar should play better where you're getting some benefit between exports. Remember, 40% of corporate revenues in the U.S. come from international sales. So a strong dollar makes international sales much more expensive, so people buy less, right? It's inflation, it's an additional inflation to them. So a weaker dollar should help corporate profits in companies that are big multinational companies like Apple, Microsoft, et cetera. That should actually help boost their bottom line a bit.
Yeah, I think we heard some of that mentioned in the recent earnings, right? There was a lot of companies that announced some kind of currency risk, right? Those are the ones that I think we should watch for if we see a turnaround in the dollar. Doesn't look like that currency risk is going to play into it. And they might have played into that outlook into, of course, their forward outlook, right? Because they were expecting to take that hit, and maybe they don't take that hit there. Right. So it's something to keep in mind. Now, the last one I want to bring up, of course, is the recent China trade. What do you feel about this? It's been, and I still have to point to it. I mean, it seems to me like this day, especially the bottoming action from, of course, that 24th, where everyone was panicking on the China trade, it looked like it was a hell of a bottom there to catch there.
Oh, it was. The only problem I have with China, so, you know, this is the problem when it comes to investing, right? And you know, domestically in the U.S., we got a lot of problems, right? I mean, we got a lot of political shenanigans and stuff going on, and people disagree about this, that, and the thing. But there's a pretty stable rule of law, right? That keeps the economy kind of operating, and you can invest around that kind of rule of law. The only problem with China is that you don't know from one day to the next. Like, it's like, oh, we're at the bottom in Chinese stocks. Next week they say, nope, we're locking everything down again. And that's the problem with a communist country that, you know, where it's state run, is that you don't have that control over the rule of law. It's really hard to predict. Right now, it certainly looks very, I don't disagree with you. I was looking at your chart of Wynn Resorts. And again, big casino Macau operator rallying because, wait, we open back up. They're going to start gambling again. Makes complete sense. Semiconductors, same way. Apple should do better if they open back up. But they got all kinds of other problems right now, too. I mean, these lockdowns are a problem, and the riots and everything else. So it's one of those things, you trade it very cautiously with tight stops, and you'll be okay.
Yeah, it's one of those things that it's the reason why I stay away, is that we've been talking about it. Those tape bombs, especially in this environment, it feels like you can't get away from them. Even when you think that you're getting away from them, maybe you're in an area that you don't think is going to get that kind of catalyst hit. Next thing you know, we get a big catalyst hit. Yeah. So we got to be careful, especially capital preservation during this time. Always appreciate you, Lance Roberts. You guys check him out. Real Investment Advice, RIA Advisors. We'll have you on next time, Lance. Appreciate it.
Appreciate it.
Take care. All right, there you guys have it. Always great to have Lance on. He does such a great job of keeping up with things on his YouTube. So if you guys want to keep up with Lance Roberts, definitely check him out. I think he's one of the best out there, and he's right there on YouTube. You don't even got to pay for him, just like we are here, giving you great advice and also looking into the markets. One of the things I love that Lance does is he does so many graphical representation for our retail traders to truly understand what he's explaining, right? We all are not going to be so perfect in understanding in everything in finance. And I think Lance does a great way of making it easy. All right, let's keep going. Let's get back towards the market action. We can take a look here how the market's performing right now. SPY is down to 399.50. Did you guys think that this was going to happen today? I know I can be one that did not think that it would pull back this far, this fast, this quickly. You guys can see we're right near that kind of trend line, daily trend line that I've been looking at for a while now. Of course, one would get me worried if we crack this 395. But if we can get into the 399 handle, kind of stay here for the day, then maybe tomorrow recover 400, I won't be feeling too bad, but we'll have to keep on watch. I think one of the interesting areas to watch today was Apple getting a bounce, and it was actually really strong, even though the market was really weak during that time. I think that's really an interesting factor to keep in mind. Apple was strong and then just gave it all up. Amazon, just weak all day. Google was trying to stay strong, couldn't stay strong, and started letting go. Microsoft, letting go. And so these are the ones that I'd be watching. Which ones are the weakest to me? Amazon and Microsoft have that real bearish kind of price action to me. Google and Apple staying up. But of course, Tesla, another drag right on the market and continuing to drag through here, making new lows. And this is something that I'll keep in mind as we talked about Tesla earlier with the Shanghai production. All right, keeping up with the chat. What's going on out there? What time is New York Live Wednesday? So that's going to be starting at 9:15. I want to be, I think, yeah, 9:15. Kenneth, you should. That's when we should be starting up there in New York. I just want to maybe take a look at my calendar to kind of make sure that's right. But I got you, Kenneth. I'll make sure I'll take a look at that. Jonathan Lovelace, I had puts for 400 expiring today, but I bought them on Friday, so took a loss on what looked like a good out. Yeah, Jonathan, that's how, right, that theta decay can really get us on those options, and why it's so important on understanding the pricing of options, right? I think that this is one thing that a lot of traders kind of, it gets difficult, right? And there's a reason why I stay away from options. It's not because I don't want to trade options and get that leverage exposure. No, it's for that reason itself. It's understanding that sometimes there's more variables that come in with trading options, like understanding theta. And even if you have a good outlook, like you did, Jonathan, you thought that we could get to the 400. It took too long to get to that 400, and it ends up costing you in the trade, even though you called the right trade. To me, that's a little too frustrating for me to be in. So I like taking more of that equity style trade, not options, but to each his own, whatever you feel works for you. All right, let's get back towards the action. I can take a look at some stocks. If you guys got any stock, throw it up, but it's 2 p.m., so I'll give it a couple seconds for anybody to throw up a ticker. If not, I'll wrap up the day. Like always, we had a great conversation today. 2 guests, Fred Hubler, Lance Roberts. Appreciate you guys coming on. If you guys didn't catch their interview, rewind and catch that. I'll see you guys a little bit later today at the close, coming to you at 3:30. Don't miss that, team. And we got a great day, a great week for you guys. Now, I will let you go that on Wednesday and Thursday and Friday, we will not be having stock market movers, as of course we have our events. And on Friday, I'll be studying for, of course, the CMT level 2, trying to keep it up, get those skills to another level to bring it all for you guys next year. Hit the thumbs up. Brazil versus Korea. We'll see what happens today. Definitely smash a thumbs up. I think for some reason Japan gave it up. They weren't able to win. Did I catch that correctly? Croatia won. It's tough out there in the World Cup. Hit the thumbs up. We'll see you guys a little bit later on At the Close.